All right. Hello, and thank you so much for joining us for today's live presentation. Today is the first day of a 3-day long marathon live event, and we're really excited about it. It's the MetaStock Traders Conference. My name is Greg Lewis. I'm the marketing director of MetaStock. I'll be here at the controls. If you see any chat going along that says MetaStock, well, that's me. Today's event is hosted by one Jeff Gibby, our very own Jeff Gibby. And to kick us off today will be Steve Bigalow. And let me just tell you real quick, after Steve, an hour later at 11 Eastern is Rick Sadler. And then at 12 is Steve Primo. Our very own Scott Brown is at 1 o'clock. Hima Reddy, who will be discussing Not Your Mama's Momentum, how to profit in any market at any time, will be at 2 Eastern. First-time speaker Marina Villatoro will be at 3 p.m. And then Price Headley will be at 4. And rounding up today will be Fausto Pugliese. So, thank you so much for joining us. This is a little, our actual event will be starting in about 6 minutes. This is a little pre-roll we do to give people an opportunity to come in and get set up and not miss the beginning of the program. Normally, I edit this out, and you don't have to worry about it as you're watching the recording. However, usually when we go past several hours, YouTube doesn't allow me to edit this out, so you will very likely see me. Just fast forward until this thing right here says 0. There says 0. Anyway, like I said, we'll be starting in about 6 minutes. A few things. One, please make sure you say hello. We will be simulcasting today on both GoToWebinar and YouTube. And if you're listening to this right now, you're watching it on YouTube. The people on GoToWebinar can't hear me right now. And I tell you that because make sure you chat in any questions, any feedback, anything. We really encourage that. Just say hello. Chat in and just let us know where you're from and how you're doing. I see already we've got Chevron and MetaStock is there. Another MetaStock, I think that's Kelly Clement, and Jeff Gibby's on. So make sure you say hello as you're coming on. We really appreciate it, and we enjoy the interactivity and the feedback. Also, if you are watching this on YouTube, you may or may not have already registered for this event. You're certainly welcome to watch it without registering, but if you do register, then you'll be able to take advantage of the being eligible for our door prizes, which Jeff Gibby will be announcing several times throughout every day. So in order to register for this event, just go to metastock.com/traders-summit. That's metastock.com/traders-summit. And if you are not already in our database, well, either way, you'll have an opportunity to say whether or not you want to receive emails. And if you do receive an email and at any point in the future you decide you don't want to receive emails, you simply click at the bottom and you'll be unsubscribed. We are, responsible email marketers here at MetaStock. All right, we have about 4 minutes. I'm going to go ahead and mute. I think I have another sneezing attack coming on, so I don't want to subject you to that. And I'll make sure Jeff and Mr. Bigalow are set up on the other side. So we'll see you in about 4 minutes. Thanks so much for joining us again. Okay, excuse me. Kelly just popped in his head and pointed out that I said Traders-Summit is where you can register. And in fact, it's Traders-Conference. Sorry, Summit's another event. There's so many events. Metastock.com/traders-conference. Not Summit. Traders-conference. Go ahead and register there. You'll be eligible to receive, as I mentioned before, or you'll be eligible to have your name drawn for our door prizes. So, I think that's it. See you in about 3 minutes. Okay, it's time to start this show and get things on the road. Thank you so much, everyone, for joining us for today's day one of our 3-day live traders conference. Thank you so much again for joining us. My name is Greg Lewis. I'm the director of marketing here at MetaStock. Hello. Yep, seems like we're doing okay. Before we get going, I just wanted to encourage you to right now go to, assuming you're listening to this on YouTube. If you're listening to this on GoToWebinar, you can't do it right this second, but go to YouTube and like and subscribe so that you can, and click that little bell so you can always be notified of these live events, which we have, not always a marathon event like this, but we have live events several times every week, and we always encourage you to join us. They're always very helpful, and we get a lot of great feedback, and that would be awesome. So today's event is hosted by Jeff Gibby, and he'll be coming on in just a second, and I believe our first speaker is Steve Bigalow. At any rate, thank you so much for joining us again, and Jeff, if you're ready, let's rock and roll.
For everybody that came today, I hope you all had a good weekend. Let's read a legal disclaimer, shall we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So hope everybody enjoyed that. I do want to say thank you real quick. We're going to get straight to the action today, but I do want to say thank you to our sponsor, Stocks and Commodities. Stocks and Commodities has been sponsoring our event for probably close to a decade now, and we've been doing stuff with Stocks and Commodities and the Stocks and Commodities magazine for ever since I started here decades ago. So they're a great partner. They do a great job. They have a great magazine, and there you go. Thank you, Stocks and Commodities, for sponsoring today's event. Also, in case you're not familiar with us, we are MetaStock. We have created a software that's only won the highest rated software in its price category for only 28 years straight. And we're going to be talking a lot about it today, but we're certainly proud of the work we've put into it and the traction we've been able to get, and we absolutely love it. So we'll be using MetaStock charts throughout the weekend. The week, and you're going to learn a lot about it, but that's who we are. We're based here in Salt Lake City, Utah. Our first presenter today is a good friend of mine. We've been doing work with Steve Bigalow for more than a decade. He is somebody that I've had the privilege and the pleasure of actually traveling around the country. A lot of the times when I'm looking for stocks, I scan using like his Doji best friend patterns, and he's a great presenter, very, very highly rated. I feel personally blessed to know Steve. He's taught me a lot, and he's a really, really nice guy. So how you doing today, Steve?
Good. I got my mic on now.
Okay, good. I was like, uh-oh. Let's go ahead and get the presentation over to you.
Okay.
We've already got a bunch of people saying that they love your T-line in the chat and how good it is to see you. So I want to thank you for coming. We can see your PowerPoint today. We can see you. We can hear you. Everything looks good on this end, so I'm going to get out of the way.
Okay. Good morning, everybody. I've got the question screen in front of me, so if you have questions as we go along, unfortunately, I'll have to do this fairly fast because I kept putting more slides on to illustrate the points of oh boy, did you just make the screen big as far as the maybe not, but so they usually like to have me on first because if you aren't familiar with candlesticks, it's kind of the bread and butter that really makes you see what's going on in everybody else's trading strategies. So, and it's based on pure logic of what occurs in investor sentiment. So, we did the dynamic doji not too long ago, but we had so many people ask questions and want to find out more going to kind of redo it, and I've added more charts, but I'm going to go fast. So if you, oops, now I lost the questions. Well, for crying out loud, how did I just do that? There they are. Yes. So if there's some that we go through fast, you can always request that we can send out the slides. But I tell people, if you are trading anybody else's trading strategy, if you overlay candlesticks on your charts, you'll see a lot more clearly what's going on in investor sentiment. So the dynamic doji is just one of the 12 major signals. If you're not familiar with what I've done in the past, I started learning candlesticks by accident, decades ago. And there's about 50 or 60 signals in the candlestick universe. But I discovered that there's only these 12, basically 6 longs and 6 shorts that you need to learn. You don't need to spend your mental time and energy trying to learn the rest of them. And if you learn these very well, you're going to have more trades than you'll ever be able to handle, which puts you in a position where you can start cultivating to see which of these trades are the best. So we're going to work on the doji, because the doji just in itself has very strong implications and very high probability trade results because of what we call the doji rule. And the doji rule expectations are that the price will usually move in the direction of how they open after a doji. Now that's extremely important for the different signals we're going to be looking at, like the best friend, left-right combo, doji sandwich, flutter kicker, and a series of dojis. So you have patterns. And the reason you have patterns is because of the same logic that's built into the candlestick signals, is that human nature works the same way time after time. That means prices move in patterns because human nature creates those patterns. And one of the most compelling aspects of staying or confirming a signal is the T-line. T-line was brought to me by Rick Sadler, who's on next, as he was one of my first private training students. He said, try to take a look at the 8 exponential moving average. Now, this is my most powerful screen in this presentation. The T-line is the 8 exponential moving average. It has Fibonacci characteristics, which means if you see a candlestick buy signal and a close above the T-line, you can stay long as you don't see a candlestick sell signal and a close back below the T-line. And conversely, it works the other way. Before I do that, the other moving averages that I have on my charts, which you can see is relatively simple, is the 200-day simple moving average, the 50-day simple moving average, and then the 34 EMA, which works reasonably well. The reason these are on the charts is because every major money manager around the world uses the 200 and the 50 to make their decisions about their portfolio. We don't use those to make our decisions. We use those to see what everybody else's decisions are. Dennis, Jeff, somebody might want to help Dennis get his screens working.
Hey, Dennis. Just a little bit of advice for you, real quick. If you're watching on a phone or a tablet, try swiping left. Otherwise, hit refresh, and that usually will fix it for you.
So, very simple. The most compelling aspect of candlestick analysis is the signals. You could take everything else off the screen, but everything else acts as a confirming indicator. Your strongest confirming indicator is the T-line. I also use stochastics, very simple logic from the Japanese race traders. If you see a candlestick buy signal in the oversold area, you've got high probabilities there's been a reversal. If you see a candlestick sell signal in the overbought area, more than likely you've got a bearish reversal. The black line is the T line, the 8 exponential moving average. I could take everything off this chart other than the candlestick signals and the T line and could make very good money. Now, when I say very good money, before candlesticks came along, I was the worst investor in the world. Daniel, you just put the 8 exponential moving average on your chart, just like you would the 50-day simple moving average on your chart. So I tell people, don't take my word for it. Put it on your chart. If you see a candlestick buy signal, you know you can stay long until you see a sell signal. Conversely, if you see a candlestick sell signal and a close below the T line, you can stay short until you see a candlestick buy signal and a close above the T line. So again, the 12 major signals tell us when there's a change of investor sentiment. There's a caveat to the T line. The further away you move from the T line, the higher the probability that you're going to come back and test the T line. So it makes, when you start moving too far away from the T line, start looking for more relevant sell signals. So the Doji illustrates indecision between the bulls and the bears. Can you label that T line? Do you say it was the 8? Yeah, it's the 8 exponential moving average. It just acts like a Fibonacci characteristic. A lot of people say, why not the 9 simple or the 10 simple? Use whatever you want. The T line has worked very effectively. Been using it now for a couple of decades. All right, so the Doji opens and closes right at the same level. It illustrates indecision between the bulls and the bears. A small trading day is called a Doji star. A big trading day is a long-legged Doji. A dragonfly Doji opens at the top, trades lower, and closes right at the top, looks like a dragonfly. And the Japanese rice traders explain the gravestone Doji as the warriors coming out of camp, going into battle. By the end of the day, they're beaten back into camp, leaving their dead all over the field. Thus, the gravestone Doji. So this was more, again, of an illustration that if you use the simple rule, this is the simple logic of the candlestick analysis of the Japanese rice traders. Where do most people buy? They buy exuberantly at the top. How can we tell when the exuberance is coming in? You can see it start showing big candle formations, and look how far away you are from the T line. The stochastics I use is 12-3-3. I'm a swing trader, so that means my trades are usually lasting anywhere from 2 to 10 trading days. And one night I just sat down and kind of tweaked to see which ones showed when you were at the top and when you were at the bottom, and 12-3-3 has worked for me ever since then. But you can see what happened up here on Tesla. You can see how far away it moved from the T line a while back, and it was up exuberantly. So how do we know to get out up here versus waiting for it to come back below the T line? As soon as we see that alert that we're too far away from the T line, we flip to our 10-minute chart. And that way you can keep moving your stop up, move your stop up. So I should say that the candlestick signals work just as well on a 1-minute chart as they do on a monthly chart or any time in between. What time frame do you use a T line as an entry strategy? That's up to you. The T line, and if you're whatever time frame you're using, this chart is called fractal. All the indicators are the exact same on the daily chart as they are the 10-minute chart, excuse me, or the 1-minute chart or the monthly chart. So when we knew we were too far away from the T line on the daily chart, that meant we kept moving our stops up, and as soon as it started trading back below the T line, we took profits. Why? Because the daily chart was telling us we're way far away from the T line. So anytime we can see where there's a resistance level and you start seeing indecision, especially with your stochastics in the overbought area, That doji tells you there's indecision at a level that everybody else is watching. It's time to take profits. So if you see a doji that far away from the T-line in the overbought area, it's telling us the probabilities are starting to go against us. Start taking profits. If they're gapping up in the overbought condition, remember what creates that exuberance? It's illustrated by a gap up in the overbought area that far away from the T-line. And if we can logically see where there's a resistance level, like the 200-day moving average, that told us there was a failure in a sell signal. We're ready to close. Remember the doji rule. It's going to move in the direction of how they open after a doji. If it opens lower the next day, you're out immediately, because that told you there was a change of investor sentiment. The moving averages, again, Neil, is the red line is the 200-day simple moving average. The blue line is the 50-day simple moving average. And the gray line is the 34 EMA, which works relatively well. So a doji in the oversold area, remember, this tells you indecision, and exactly what happens at trend reversals is indecision. No, Fresk, it's candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Again, that time frame could be 1 minute, 5 minutes, 10 minutes, daily, weekly, monthly. And it's the graphic depiction of everybody buying and selling, where anything that you're trading that has fear and greed in it, which is everything, stocks, bonds, futures, currencies, tulip bulbs, anything that has fear and greed. Candlesticks is merely the graphics of what's going on in investor sentiment. Yes, it will work on any trading entity. So if you're in the oversold area and you start seeing these dojis, get ready to start buying. You can see kind of the wedge. And what happens at the end of this wedge formation? A day of indecision. And what's our doji rule? The price will move in the direction how they open after a doji. That told us this little wedge breakout was to the downside. So this isn't rocket science. This is just merely identifying when there's indecision between the bulls and the bears in the overbought area. You get ready for a sell signal. Now this is the evening star signal, which usually has a doji included, which basically tells you that you have a big up day, a day of indecision, and the third day closes more than halfway down this candle. That's called an evening star signal. You can see it's very symmetric. That tells you there's been a change of investor sentiment. And you see that evening star signal and a close below the T line tells you the probabilities are that much greater. They're now in the selling mode. This is a morning star signal, the exact opposite. A big down day, a day of indecision, and a big candle closing more than halfway up this candle. A morning star signal tells you you're in an uptrend. So this is where we call what we call 2 plus 2. Notice where they did the doji. Right smack dab on the 50-day moving average. And what's that telling you? That's telling you everybody's buying as soon as it hit the support level. We can see that graphically and be ready to buy immediately on a positive open the next day, well above everybody else coming back into that position. So there's very strong reversal signals. The doji followed by a gap up is called your best friend. The reason we call it your best friend is not only does it tell you there's going to be an uptrend, it tells you there's going to be a strong uptrend. So anytime we see this doji gap up, we already know there's been a dramatic change of investor sentiment after a day of indecision. You can see here how it was trading indecisive, doji gap up. What did that tell you? There's your best friend telling you they've broken out of this range. And how long do you stay long? Until you see a candlestick sell signal and a close below the T line. Very simple trading strategies. Morning star signal followed by a best friend on the third side. So not only did it close well above the halfway point of this candle, it did a best friend signal and closed well above the T line. Pretty good probabilities that you're heading higher. So a doji followed by bullish confirmation, good. Doji followed by bullish confirmation, good. Doji followed by a best friend signal, much gooder. Or your bearish best friend. A doji followed by a gap down. Going to start this gap down after a doji tells you after a day of indecision what the investor sentiment was doing. They wanted out of this position with great enthusiasm. If you're going short, that's exactly where you want to be. In an overbought condition with a candlestick sell signal, a strong sell signal, that just puts you in the right place at the right time. This is a fry pan bottom, one of the 12 major, one of the major candlestick patterns. Excuse me. What do we look for coming out of a fry pan bottom? A big breakout. There's our bullish best friend telling us we want to be getting in this immediately. Now, remember, we're looking for candlestick buy signals in the oversold area. Usually a pattern breakout is going to occur when the stochastics are already in the overbought area. It also helps us identify patterns. We know this is wave one. This could be a pullback of wave two of a J-hook pattern, but look what started our next wave of a J-hook pattern. There's your doji, hammer, gap up, best friend, back up above the T-line. What can we assume now from this J-hook pattern? That this wave right here will probably be the same magnitude as this wave right here. So even if we miss this move, if we saw this setting up, we knew what the magnitude of this price move will be. Is the best friend the doji gap up? Yes. There's the doji. The next day they gap it up, telling you there's new strength coming into that position. Roxana, I think so. So the bearish best friend again is a doji followed by a gap down. Tells you after that day of indecision where the strength is going. Bullish best friend, there's your doji, gap up. Just an extremely high probability trade setup. Doji, we just did this one, Viacom. We saw the hanging man signal, one of your 12 major signals, a gap down doji below the T line. We made it very simple. If it opened lower the next day, we wanted to be shorting it. And I don't know whether we had that. We didn't. The follow-up was that it came all the way down here, made huge profits. Stupid question. When is a candlestick sell and a buy? Well, obviously, if you're in the overbought area, it becomes sell signals. If you're in the oversold area, they become buy signals. Now, can you have dojis during a trend? Yes. So what makes a signal relevant? A buy signal needs to be in an oversold area, and a sell signal needs to be in the overbought area. The left-right combo is a doji. Anytime you see a doji in a combination setup, it's going to act that much stronger. My stochastic settings are 12, 3, 3, slow stochastics. So look how indecisive, and then there's a bullish engulfing after a doji. That's called your left-right combo. Now, most of the candlestick signals require bullish confirmation the next day. The left-right combo is so predictable that if you were short and you saw a left-right combo, you would close it on the day that it occurred. If you're ready to buy, you can buy with a high degree of probabilities if it opens positive the next day. I don't trade Forex just because I don't have time to trade Forex. I trade stocks, options, futures, currencies, and not currency pairs. If I'm going to buy the dollar, I buy the dollar. So anytime I see a left-right combo, I'm getting ready to buy, because that is telling you there's been a drastic change of investor sentiment. You can see a scoop pattern, which is a flat handle followed by a little scoop. And what started this scoop trajectory? There's our little left-right combo, close above the T line right here at the handle. We're buying on positive trading because we know the scoop pattern is going to produce a high probability trade setup. Do you have any example? Oh, of what, Volo? So there's your bearish left-right combo. Opens lower the next day, and there's another bearish left-right combo. Stochastics in the overbought area. Now, this is where we use 2+2. See a bearish left-right combo right at perceived resistance level that everybody else is watching. We know the probabilities are pretty strong. There's been a reversal. My stochastics are 12-3-3 slow stochastics. Now, remember, we're not buying or selling stochastics. All we're wanting to see is where are we in the trend. Obviously, a candlestick buy signal in the overbought area doesn't mean anything. Or a candlestick sell signal in the oversold area doesn't mean anything. We're looking for the candlestick buy signal in the oversold area. We're looking for the candlestick sell signal in the overbought area. The time frame, Timothy, for the examples, I'm using the daily charts. But this could just as easily be a 10-minute chart or a 3-minute chart or a monthly chart. Can you show pattern? I can't. Larry, these are all PowerPoints. Lyle, it's whatever you want to trade. If I'm trading candlestick signals or a stock on swing trades, I'm using the daily charts. And then if the daily chart starts getting too far away from the T line, then I flip to the 10-minute chart. If I'm trading soybeans or cattle or the dollar during the day, intraday trading, I'm starting with the 10-minute chart, and then I drop down to the 5-minute chart to make my entry. But that's because I trade to that speed. If you don't want to trade that active, maybe you use a 10-minute, 30-minute combination. Or if you're trading a lot faster, in my younger days, I used to trade the E-minis, but I would trade off the 1-minute, 3-minute, 10-minute combination. Yes, they work. Oh, your best friend won't work on Forex because it's continuous trading. So the signals work. You're just not going to get gaps on a Forex trading. Or you're not going to get gaps on intraday trading most of the time because everything's just trading on a continued basis. So the bigger the signal, the more compelling there's been a change of investor sentiment. And a bigger signal and a close below the T line pretty much tells you you stay short until you see a candlestick reversal signal in the oversold area. So if I had shorted this one and I saw this doji, what's our simple doji rule? It's going to move in the direction how they open it the next day. And if they open it positive, where do you think our next likely target's going to be? Probably at least back up to test the T line. So if I was short, that told me get ready to start taking profits. Now, the doji sandwich is very simple. You're using the doji rule. The price will usually move in the direction of how they open after a doji. So I see a big candle and a doji. Look where the doji closed, right smack dab on the T line. So this is, again, 2+2. If it opens positive the next day, which direction is it likely to move? It's going to trade positive. And what's the magnitude of this candle usually? It's going to be the same as this candle with the doji sandwiched in between. So if I see a doji and it opens positive, what's it telling me? It's going to trade positive. What's it tell me about the T line? It's not going to be resistant at the T line. I'm buying immediately because even if I was a day trader, I would know that the magnitude of this day right here is going to be the same as the magnitude of this day right here. If I'm buying options, I've got a lot of confidence to buy this as soon as it starts trading positive because I know I'm going to have a positive trade. The T line is the 8 exponential moving average, the 200, the 50, the 20. They are all simple moving averages. Again, they're simple moving averages because we're not using the simple moving average of the 50 and the 200 to make our decisions. We're watching to see what everybody else's decisions are because they use those moving averages. Does the left-right combo work in Forex? You probably won't see it very often because of the little gap to start the bullish engulfing. The bullish left-right combo on bearish trend only. Oh yeah, it works on the bullish trend. Yeah, we showed bullish left-right combos. All right, so anytime I see this and a doji, if it opens positive the next day, I know the magnitude of that candle is going to be the same as that, which tells me the T-line's not acting as resistance anymore. The downtrend has been breached. We're now in an uptrend. And how long do we hold this? Until we see a sell signal and a close below the T-line. This is what takes the emotions out of your trading. I bet you dime to know that most everybody in here at times said, well, I've got a profit. I'm going to take a profit just so I can have a profit. Instead of saying, I'm going to hold on to this until I see a sell signal. And that's called, remember, every money manager tells us to cut our losses short and let our profits run. But they never tell you how to cut your losses short and let your profits run. It's very simplified with the candlestick signals. If I'm buying on that doji sandwich day, I know I can stay long until I see a sell signal or move too far away from the T-line. Henry, for some reason, I'm not getting a full question. So maybe I need to expand my.
Steve, do you want me to read it to you?
Yeah, now I lost it again. Okay.
It says, Henry asks, is bullish left-right combo on a bearish trend only, or does it work on a bullish trend too?
Oh, no, the bullish left-right combo is what starts the bullish trend. So it's a reversal signal. So you're going to see a left-right combo down here. And you're going to see the bearish at the top. I hope I answered that correctly.
Sounded good
Tom?
to me.
Huh?
I said it sounded good to me.
Okay.
Ace wanted to know, since I'm on here now, from YouTube, wanted to know if dojis are more powerful on 1 minute or 15 minutes.
They're all the same. It's just telling you there's indecision during that time frame. So a lot of people say, well, which signals are stronger than the other signals? We've already narrowed down the 50 or 60 signals to the 12 that work extremely well. The kicker signal, which we won't have time to look at today, is your strongest individual candlestick signal. But they all work extremely well because this month you might see a lot of hammer signals. Next month, you might see a lot of bullish haramis. It all depends on what's usually occurring in the market. Paul, I just use whatever is on our charts. If I'm trading trading soybeans, I go to my 10-minute soybean chart, which might be the May contract. It's whatever the front month is. So what makes the sandwich? There's a bullish candle, there's the doji, there's a bullish candle with the doji sandwiched in between. And if they do it right at a major resistance level, like at the 50, makes it very simple. If they open lower the next day, what's the doji rule? they're going to trade lower. What'd that tell us? They failed here at the 50. If it opens positive, what's that tell us? The 50 is not acting as resistance. We got a doji sandwich in progress, telling us the 50 is not going to be a deterrent. You can be buying immediately. Same scenario right here. So the doji sandwich has expectations, which is more upside. So the bearish doji sandwich has bearish expectations. So if I was thinking of going short, look where the doji was occurring, right here on the 50. But as soon as it opened lower and started trading lower, what did it tell us? That more than likely the 50 was not going to act as a support level. We could be shorting immediately. What platform are you using? Meaning what? These are all MetaStock charts. And Jeff will tell you how long we've been putting all these signals and patterns into the MetaStock charts so that they show up immediately. You can see what the signals are telling you. Do you use doji strategies to trade ETFs? Yes. Anything that has fear and greed, the indexes, the ETFs, penny stocks to Tesla, anything, doesn't matter. It's still just the graphic depiction of what everybody is doing during a specific time frame. Bearish doji sandwich. Now, if one doji means indecision, a series of dojis means greater indecision. So if I'm short and I'm starting to see this, I'm starting to take my profits. But I may not go long until I see a candlestick buy signal and a close above the T line. So if I'm buying on this day, it's because look at all this indecision. And what usually happens after a great indecision? Very strong buying. This is also makes up what we call a cradle pattern, which is a big down day, the headboard, flat doji sideways trading, and the footboard. So basically you have a cradle hung down between the two trends. Very high probability trade setup. So dojis have strong investor sentiment expectations built into the signal. So if you're seeing, and this is, I guess I was explaining this one time for the scans on MetaStock. It's very simple. If you see stochastics in the oversold area, or put your formula stochastics in the oversold area, and then the doji formula, then you can scan for the biggest percent move the next day to see which ones are moving up the biggest off that doji, especially in the oversold area. So this allows you to identify patterns that if you use that best friend rule, that if it's going to be more upside, we can see wave 1, wave 2, going into wave 3. Pullback. Notice what the pullback is. Dojis. What do the dojis represent? Indecision. So if you're seeing a pullback, it's indecisive. Get ready for the next wave to the upside. The T line is the 8 exponential moving average. You can see right here, coming out of this little fry pan bottom, supporting off the 50. They did kind of a best friend signal breakout, starting your next move. So the more information you can put into your visual analysis, the stronger the probabilities are going to be in the right trade at the right time. Where do you put a stop loss when you enter a trade? John, that's another great thing about candlestick analysis. See if I can find a chart. If I was buying, now let me explain the McMuffin and then I'll tell you where the stop loss would be. Remember, a morning star signal, a big down day, a doji, and a third candle that's more than halfway up this candle. And in this case, it also closed above the T line. That's a candlestick reversal signal. Now, we know what should happen out of a candlestick reversal signal, more upside. And then it was followed by our doji sandwich. And what do we know about a doji sandwich? More upside. So you got a morning star signal followed by a doji sandwich, or in short, your morning sandwich. So that's your McMuffin. Now, obviously, that's not a Japanese rice traders terminology. That may have been made up by somebody else. But it gives you two elements of high probabilities are going to be in an uptrend. So if this is a candlestick signal telling us it's time to buy, where would we not want to see this close? Probably back below this level, because that would put you right back below the T line. You close out the trade. Anil, these are daily charts. These also could be 10-minute charts or 1-minute charts or 60-minute charts, whatever time frame you want to trade. Yeah, so a McMuffin is a morning star signal followed by a doji sandwich. More upside. We also had to have that on the berry side, so we call that a dagwood. That's an evening star signal followed by a doji sandwich, or your evening sandwich. We named a dagwood. So just a high probability trade setup. A morning star type signal, doji sandwich. What should be entry point? If I was buying on this one, I'd be buying up here, showing that it was confirming the buy signal. Now, if I was buying this one, say trading the YMs, if it traded off, I wouldn't pay attention to it. Then when it started coming back up, I'd start buying because I knew what type of signal it was be setting up. So there's our best friend breakout. So remember, we're buying signals when they're in the oversold area. We're buying patterns when they're breaking out in the overbought condition. There's our doji gap up, kind of our best friend. Be buying on this day because what's it telling us? After a best friend signal, we're getting more upside. What's the doji up here telling us? Well, they've gapped up in the overbought area and did a doji. When do you start taking profits? When it opens lower the next day. Oh, the 1233 is your time frame, and I hate to sound ignorant. It's been so long that I've had to describe stochastics or the 1233 because it's always on my charts, and it's just very simple. Once you have it on there, you buy when you see it oversold, and you get ready to take profits in the overbought area. So this is what we call 2+2. Let's see, I'm new to trading. I'm losing my money, but I'll try to watch educational videos on YouTube. Yes, I put stuff out almost every other night.
Okay, it looks like we had a little bit of a technical issue on the GoToWebinar side, so it's going to take just a minute to bring that back. I don't know what happened. It looks like somebody accidentally closed down the GoToWebinar webinar. So give us just a minute, and we'll be back as soon as we can. And I'll let you listen to this wake you up marching music for a second.
get him sharing the screen again.
Yes.
Sorry about that, Steve. I'm not sure what happened exactly.
Oh, I feel great that it wasn't my fault this time.
Okay. We can see your GoToWebinar connected screen, just so you know.
Okay, are we on GFI? Are we back to where we were?
It's the screen that I'm saying says connected to GoToWebinar.
Oh, let's see. How do I get to...
Do you need to change this?
Hey, sorry again. We were disconnected somehow on the GoToWebinar side. I don't know really what happened. We're still getting Steve back online, so please just give us a moment and feel patient. I'll let you go ahead and watch that fun process of getting a screen back to where it needs to be. Looks like he's there.
Don't know what that was. So,
and without further ado, Steve Bigalow, gentlemen.
Okay. Yeah. Jennifer, we're almost near the end anyways. So, anyways, just simple logic. If you see a candlestick doji gap up, breaking through a resistance level, you probably can pretty much assume your wave 1, wave 2, and look where wave 3 started, right smack dab off the 50. So what this basically does for us is it allows us to see exactly what's going on in investor sentiment. Now remember, this is just the doji. Every day I do a scan, I'm going to come up with more trades than I can handle, which puts me in a position now of going back and analyzing which one of those trades have the strongest upside potential. This basically consistently allows me to have the probabilities constantly in my favor that every time I put on a trade, I'm going to be in the right direction. Now, remember, the key word there is probabilities. If every trade we put on, we'd all be sipping our mint juleps on the back of a yacht in the Fort Lauderdale Basin. So not only do we have the probabilities of being in the right place, but it also shows us exactly when to be back out of a trade very quickly. So look at our dojis, bullish confirmation, and then simply you stay long until you see a sell signal and a close back below the T-line. Gap up and overbought. Gap up and overbought says start getting ready to start taking profits. If they're gapping up in the overbought condition, that's the exuberance coming in. So this one, we just started buying a couple of days ago, or recommended a couple of days ago. In our chat room, we've got usually a couple hundred people in there with a lot of people that already know which signals to look for. So I put out 2 or 3 stock picks every day in a video format, not so that you have stock picks, but you can see what the rationale was. Look at our inverted hammer doji gap up in the oversold area. That tells us the probabilities are pretty strong. We're coming back up here or even up here. So NVIDIA just in the last couple of days. There's our doji gap up. You can see the slow curve. Notice the doji right on the 200-day moving average. The doji, and as well as all the candlestick signals, give you an immense amount of information to tell you when you want to be in a trade with a much higher degree of probability. And when they start gapping it up after a doji, that just adds to the probabilities that you're going to be in the right place at the right time. So we started buying this one a few days ago. Best friend signal. Also at about the same level bottomed out before. Stochastics coming up. Gaps up through the T-line and the 50. That tells you there's a lot of bullish strength there. So if you're an option trader, you have the optimal time to start buying calls or buying spreads. Whoops, I guess that was it. So we got cut off just... So we are doing this Saturday, we do about a 6-hour session on how to put the right candlestick signals and patterns, or which option strategies to use on the appropriate candlestick signals and patterns. So a lot of people think right away, oh, going up, I'm buying the calls. We probably buy calls maybe 25% of the time. There's other very simple strategies, like simple to use spreads or a combination of buying the calls and the spreads. But there's a lot of chart patterns, like the fry pan bottom breakout, the J-hook pattern, things that you could put a spread on where you maximize or get much greater probabilities of being in the right place at the right time and maximizing the probabilities of that, or the maximize the profitability of those trades. Jeff, did you see the link? I think I put on a link somewhere in the.
We can see it. I'm gonna go ahead and type it out for everybody. Okay. The prevent options link.
Yes.
Okay, I'll go ahead and type it in here, and Greg will get it into the YouTube room for us.
Okay. Also, here's our little tricky marketing. It's $4.97 for non-members. It's $2.97 for members. So for $97, you can join for 30 days and then pay $2.97 for the training. But at least now you get 30 days of seeing how effective the chat rooms are for identifying. We've got one chat room for stock trading, and we've got another chat room for options and futures, where the terminology is obviously a lot different. But essentially, the options trading room is so that if we see a pattern setting up, we know which strategies to use to maximize that trade. The T-line is the 8 exponential moving average. I look through the picture in the picture by the desired format and listen. I am a Mo. I ask you not. Okay, I don't know what a Mo is. So, okay. So I guess with that, is there any questions?
All right. Not a lot of questions that I wasn't able to answer with my years of experience working with you, Steve.
Okay.
But we are getting a lot of really good feedback. Libo says, "Hey, Steve, I love the way you teach. I'm watching from South Africa." So, well, I agree. I think you did a great job today. Larry asks, for those of us that missed part of your presentation, is there a link for you to review? And what I would recommend that you do is, I just put a link up for the YouTube channel, but if you go to youtube.com/MetaStock, you can we'll have all of the sessions recorded in their entirety up there. It's totally free for everybody that likes and subscribes to the channel. So in any case, other than that, I do want to spend, we had some questions about scanning that I figured I'd kind of talk a little bit about the MetaStock scanning. Steve, if that's okay.
Go right ahead. Yes.
All right. Okay. So let me go ahead and do this. Sorry, we had a bit of a technical issue there too. I'm glad everybody came back. I do want to talk a little bit about kind of how this all works and things like that. I just kind of 2 seconds ago randomly pulled up a chart of Apple and attached like all of the indicators and our expert advisor that we worked with Steve to create. And this has been one of our most popular products. We spent, I don't know, a couple of years actually working on it. We spent, we've actually been kind of marketing it and using it for a couple of decades. This is our second version. It's called the Candle Profit System 2.0. And basically, it identifies just a ton of different Steve's patterns. And here's a kind of a list of all of them. These will automatically be identified for you on your charts. And let me just kind of show you how that works. So on Apple, like I said, I've actually applied the template. Looking at Apple, like just a couple of days ago, we had a Doji best friend and a bull kicker. And here we had a bit of a bull kicker. We had a Doji at the top. Here we had a bullish engulfing. And so you see that these are automatically labeled and identified for you on a chart. In addition to that, what I'm going to do is with our commentary, I'm going to go ahead and open up what we call our commentary window. And when I do that, you're going to point this out on the screen for you. But you'll notice that there's a bit of a triangle that just appears on that very end day. And it's just going to kind of help you understand what that pattern is. So the bullish kicker presents consistent trading opportunities for long positions. The signal is even more powerful when it forms at a major support level. The larger the dark candle at the bottom is, it's just giving you some really good advice in terms of how that work. Under here with a lot of the patterns, we'll say, because a lot of times what you'll do is you'll run a scan. I run the Steve Bigalow scans all the time. These are enhancements. These are what you could look for to make the signal better. So right now we're getting a bull kicker on Apple. If you want to be able to scan for patterns, one of the things I love about MetaStock is there's, thousands and thousands of different U.S. optional stocks that are available. If I want to go in and find a list of different stocks that I have different patterns for Steve, all I had to do is click on this, what we call our power console. There's a bunch of tools in MetaStock, but right here I've got a scanner. So I can click on this. I'm going to go ahead and find the CPS, which stands for Candle Profit Systems list here. And you'll notice we've got Doji Dynamite. This one, if I run it, it'll find my Doji Best Friends, my Doji at the top, my left-right bullish, I have left-right bearish combos. The J-hooks are a different scan. The major patterns are a different scan. You can see I just select the one I want to run. We'll run a quick Doji Dynamite scan. I can come down here and I can select just about any lists that I want. If I'm here in the US and I want to look at the optionable stocks, I do have a list of all of the optionable stocks that I can pick right here. It'll go through and within a minute or two, it'll find any of the stocks that have a pattern there. I'm not going to run that because we actually don't have a minute or two. What I'm going to do instead is I'll come into the index constituents. I've got a list right now of the NASDAQ. Actually, let's do the S&P 500. I'm going to go ahead and start the exploration. It's going to run through those S&P 500 stocks. And any of them that have any of those Doji Dynamite patterns, like the Doji at the top or the Doji Best Friend or the left-right bull, left-right bearish, are going to come up. And you'll notice that it's going through all 500. It's rejecting about 99% of the stocks, 98.9% of the stocks right now. So what this is doing for me is it's allowing me to ignore all the stuff that doesn't have an opportunity. What I want to do is I want to look at maybe the 20 or 30 stocks that actually have an opportunity today. And in this case, it was only just a few of them. So right here, you see Doji at the top. All of these zero speeds, none of them were Doji at the tops today. Here's the Doji Best Friend. If I Best Buy and Nielsen Holdings both had a Doji Best Friend today. I could go in and take a closer look at Best Buy or Nielsen Holdings, see if I like them. But if I'm looking personally for a Doji Best Friend this morning in the S&P 500, I can look at those two stocks instead of the other 498 that didn't have that pattern. And that's just helps me find the stocks that I'm interested in. I love it. It works really, really well. So in a nutshell, basically with the add-on we've developed in MetaStock for Steve, you have the ability to look for all of his patterns. We'll automatically identify those patterns on a chart for you. We'll tell you what they mean. And it just works really, really well. We've had this product reviewed twice in Stocks and Commodities, once by the late Dennis Peterson, and then once by Barbara Starr when we released version 2. And they both gave very, very high marks to it. This product itself, if you can't tell, I'm proud of it, but it's been actually rated one of the best products, not for just any add-on, not just for MetaStock add-ons, but for any product out there available several times in Stocks and Commodities magazine. So we're really, really proud of it. In total, you're going to get 6 explorations. You'll get the expert advisor. You'll get the layouts. You'll get all of the patterns. And the cost for that is only a one-time cost. So normally it's $499. Here at the conference today, we're going to do it for $399. We'll back that with a 30-day money-back guarantee, so you get a chance to evaluate it. If you're new to our award-winning MetaStock program, we'll give you actually a trial copy of MetaStock to go with your purchase. All of that's $399, and it all comes with a money-back guarantee. We're fairly confident that you're. So most people do. I love it. 800-882-3070. You can also visit us online at metastock.com/saleschat to chat with one of our sales representatives, or you can order online and kind of watch some more videos at metastock.com/conference promo. Steve, I do want to say thank you for coming in today. You did a great job. You always do. I really appreciate your friendship over the years.
Thank you, everybody. Have a good trading day.
All right. Thank you very much, Steve. Appreciate it.
Uh-huh.
All right. And I'm going to go ahead and eject you just so that we don't shut down the room on accident again. Okay. Yes. Presentation. If we do have any questions that we weren't able to answer because it got a little bit busy there, just give us a call. Again, the phone number is 800-882-3040. You can also visit us online at metastock.com/conf promo. Okay. I do want to say thank you for Stocks and Commodities for sponsoring the event. We really appreciate kind of them supporting our event for as long as we've been doing it. I think we're going on 8 years now. So they're a great sponsor. We appreciate it. Also, I do want to mention, since Steve just taught, we are doing a premium class on Thursday. We're doing a conference special on it. If you want to come, Steve will be spending 90 minutes with us. Jeff Tompkins and also Vince Vora will also be doing a 90-minute presentation. This will all happen on Thursday, starting at 8 a.m. Mountain Time, 10 a.m. Eastern Time. And there's kind of the schedule for you. This $450, you can actually give us a call at 800-882-3040. You can visit online with us at metastock.com/saleschat to kind of learn more. And there you go. All right. Our next presentation is Rick Sadler. Rick Sadler also does a very, very good job with us. And how are you doing today, Rick? Rick has actually been working for a number of years. We've developed an add-on with him as well. He uses MetaStock as well.
Hello, Jeff.
How are you doing?
I'm doing well. How about you?
Good. Good. Did you have a good
You're
holiday
looking
weekend?
good. You're looking good, by the way.
Thanks. I wanted to lose some weight, so I shaved my head.
Yeah. It starts with the top. Take it off the top first.
It's already abandoning itself anyway. So I just turned the presentation over to you.
All right. Let me get see if I can get things working here. Get the presentation up. Okay. Let's see. Share my screen. Show my screen. And is there a way to turn the camera on? I put a clean shirt on today, so.
Did you shave also?
No.
No. All right.
No.
So yeah, to hit the camera, right below the green icon for the microphone is another icon that looks like a video camera. Hit that.
Okay, there we go. Hey.
Yeah. Perfect.
All right. Hi, everybody. Oh man.
Ooh,
maybe I should shave.
Well, hey, I like the shirt. In any case,
thanks. It is a clean shirt.
We can see your screen, but it looks like your email.
Oh, you're looking at the wrong screen then. So, show.
I'll get out of the way. Rick, you're on.
Thank you. Thank you, Jeff. Thank you for having me here. And I want to right now apologize to everybody. I'm supporting a very good, strong spring cold. So I'll do my best not to cough sneeze into the microphone here. So I could say I do apologize. Okay, let me move some things around here. There we go. Okay. So again, Jeff, thank you very much for inviting me here. I appreciate it. It's good to see you. You do look good. That's good to see. And thank you, everybody. One thing that I would, I welcome questions. So if there's questions in the middle of the presentation, if you want to, I don't know where I can see them, but maybe Jeff can ask him if needs be, or we can wait till the end. That is perfectly fine. Okay. Now, today is going to be a little bit different because my presentation is not going to be about a bunch of charts. I do have a couple, but the presentation is not about a bunch of charts because trading is more than charts, and I think it's important to talk about it. And you know, we can all find charts, the signals, the chart patterns, and everything, but what do we do with it after that? What kind of plan do we have? So I hope you're not disappointed, and I hope you know, take all this in consideration when you're looking at trades. All right. So, well, here my Road to Wealth. Road to Wealth is an account that I trade. I call it the Road to Wealth account, and it's my personal trading account that I'm trading. And that's just what it is. It's a road to wealth, just like that Route 66 road there. And I think it's important to know where you want to go. We all know where we're starting at. In other words, you're starting. Let's see. I think the Route 66. You know, whoops. Let's do this here. You know, started up here and ended down here. Well, we all know how much money we have in our account. We all know how much trading experience we have. We all know how successful we are. You measure that by the money you've earned. And honestly, if somebody is doing very, very well, I would encourage you not to make too many changes. A few tweaks here and there, but probably not too many changes. And for those that are struggling, you're not quite doing what you want, then there actually may be some of this that really does help you create this path to your trading, okay? My Road to Wealth account this year is so far up 285%. Started the account with $10,000 in August of last year, and we're currently sitting at 38 something up here, 285% increase in the 6.5 months by following the exact rules I'm showing you and following you and sharing with you the exact same setups on MetaStock that you'll see. I trade primarily just a couple chart patterns, and one of the chart patterns is the 3/8 trap, which is available on MetaStock. But there's more to trading than simply the chart. There's more to trading than the, hey, we have a buy signal. Now what are you going to do with it? And that's very, 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 very important. So let's go take a look at this. And by the way, I don't mean to be rude, but putting something in my throat really helps. So I've got some coffee and some water here. Again, I don't mean to be rude, but my voice just will not last if I don't do that. Okay, so, I want to remind everybody, this is important. Make sure you sign up for our Falcon giveaway. We're giving away a $3,000 Falcon trading computer. So please make sure you sign up for that. The giveaway will be the 16th of this month in the evening. So please make sure you sign up for that. Okay. One of the things that I think is very important is to be a chart so important. The previous speaker, Steve Bigalow, actually taught me candlestick signals. So thank you, Steve. And he knows an awful lot about them. So I think it's an honor to be able to follow Steve on this presentation. And I just can't say enough about candlestick formations. And what that does is it gives you a visual reference to what price action is doing. And that's important because when it's all said and done, really what we're all trading is price action. And I think if you were to really step back and look at your charts and how you've been trading, I think you would kind of agree. So let's say a chart has been moving up and you're making money. I assume everybody can see these marks here. And you can have all the targets you want up here. You can have all of them you want. But I would bet you a $100 bill that it looks like there's just under 400 people in the room. I'll bet you just under 400 people in the room. When you saw a signal like this, all of a sudden you could care less about those targets and you're going to be taking some profits. So that is, if that happens to you, then what that's telling you is you do trade price action. You don't trade targets up here. It's nice to have targets up there. It's nice to have a destination where price might go to. But like I said, if you're in something and it's moving up, and then all of a sudden we throw in a candle like that, and if you close your position out, you are trading price action. And I think the sooner we admit to that, I think the better we will become better traders will become. And again, candlesticks to me is the ultimate way of watching price action. I also think it's important to recognize fear in the market. I'm not going to talk too much about that. What I use is VXX. I trade VXX, so I use VXX to help me to recognize fear. Another thing that's important to know, and again, I truly hope that everybody here, I've been trading now 34 years and doing webinars for 30, close to 30 of those years. And I've discovered that what people want is show me the chart setups. And I get that. I love the chart setups. And that's a neat thing about MetaStock is MetaStock gives you those without working. They're just handed to you. The problem is, what are we going to do with these setups? And I honestly feel that's where people fall down in trading. So MetaStock being your edge, being able to find, say, the 3/8 trap, and that's pretty much all I trade anymore. Again, MetaStock allows you to do that, but what are you going to do with them? Well, one thing that's important is to know when the water is too deep. You have to know when the water is too deep. Look, not every day should we be trading. Not every week should we be trading. Excuse me. In some markets, there are periods of time in the market when might not be good for me. I know what my weak spot is. And there might be different times of the market when it's not good for you out there. And you have to know when that's the case, because you can make all the money you can be making here, just week after week after week after week. And the market can get into an area that's not good for you, and it can take all that back right away. We've all heard the quote, the statement, the market goes up with stairs but comes down on an elevator. Absolutely true. So it could take a lot here to make some money, and in one day or 1 week, you're giving all your money back. The trick is to know when the water's too deep. know your limitations and step out, all right? Also learning when to trade. And that really goes hand in hand when knowing when the water's too deep, knowing when to trade. Let me give you an example. Again, I apologize. Let's take the market today, the SPY, for instance. The SPY gapped up. The market is up big time. Is this the right time to be trading? I mean, we are up. I'm looking at some charts over here. We're up 1, 2, 3 days. Yeah, it looks like both days there's gaps in between those days, and we're just insanely overbought right now. Is right now the time to be trading? Now, for the purpose of the recording, today is April 5th, 2021. Okay, so know when to trade, know when to be buying positions, know when to be selling positions, know when to be shorting positions, all right? And of course, know when not to trade. And that's pretty much what we just talked about here. There we go. Trade your chart. I think the perfect chart setup is something like this right here. I think the perfect chart setup is a bullish trend, okay, right here. And we want, let us change that color. And then we want the chart to be moving up like this. Okay. And what we're going to look for is what I call a PBO, and it's just short for pullback opportunity here. So what we're going to come in here and do is we're going to look for those pullback opportunities. And by the way, I have nothing against trading the breakout, by the way. I really don't. I mean, this is part of the pullback opportunity all in through here. And then what we're going to do is we want to wait for that price action to step in, those candlestick signals. We want to see a candlestick reversal pattern. It could come in form of a bullish engulf with some follow through, maybe. We're looking for that bullish engulf, follow through, and a pullback. It could come in form of a morning star signal with follow through and a pullback. That's the kind of thing we're looking for. And then we want to take advantage of those opportunities in there. So a trend, a pullback opportunity, and price action. MetaStock gives you that. It gives you the edge that you need for that. The program that we've set up there in MetaStock is looking for charts that are trending, looking for charts that are in a bullish mode with a pullback into the 3/8 trap. That's easy. It is. MetaStock makes it easy. The problem is, what are you going to do now? And that's what I'm hoping to show today. All right. I could have lined us up here with an hour's worth of charts, but the reality is everybody has the charts. Everybody in the room has a chart. Okay, I'm assuming you have the MetaStock charts. So in the MetaStock charts, they can scan for these charts that are pulling back into these buying positions. But what are we going to do? How are we going to grow our account? And that's truly where I think we need to do some talking. Okay, and I hope that makes sense to everybody, and I hope it works out for you. Okay, so I have a trading goal that I started back in 2018, early 2018, and that was to double my account. No matter what your account size is, double it. But we're going to start with a fairly small account. So say you have $10,000, okay, in your account. So let's just put, let's make it blue. So let's just put 10,000 in there. Now, I think there's approximately 243 days in a year to trade. Now, this may differ a little bit with some people, but it's going to be awfully close. So You know, if you do the math and you figure out, well, you only trade 235 days a year, that's all you plan to trade, then just use 235. For me, there's about 243 days in a year to trade. So that's what I'm going to do. So if we take $10,000 and divide it by 243, do you know that that's only $42 a day? Now, I've been doing this since 2018, which doesn't seem like a long time ago, really doesn't. I just started this program. And but it still blows my mind to think that all I need to do is net $42 a day to double my account. That's it. $42 a day net. So you can have 15 losses, but if you have one big winner that cleans everything out and you have $42 left over, you have made your goal for the day. Well, if you take that times 5 days a week, that comes out to $270 a week. Now, I don't know about anybody here, but I can tell you there are lots of days that I don't make my goal. Now, when I say make my goal, I mean like putting it in my pocket. So it's closing a position out, protecting that money. But at the end of the week, $270. That seems pretty small to me. This is ridiculously small, but times 5 is $270. So again, what I'm trying to show you is there's more than just a chart to trading. And there is a very easy way to get to where you can double your account. I've been asked often, well, Rick, do you ever want to make more than that? No, I don't. But the funny thing is I end up tripling it and quadrupling it. And it's all by staying with this plan right here. So there's approximately 20 days in a month to trade. So 270 times 20 comes out to $840 in a month. This is what we're looking for. And if you do that times 12, you're going to get your double. You're going to turn $10,000 into $20,000. And guess what? The following year, what are you going to do? You're going to turn $20,000 into $40,000. Of course, these numbers will change. So this is the exact plan that I use for doubling the account. Excuse me again. I do apologize. I apologize. I don't know what else to say. Okay. So say you have a chart, and these, by the way, are pullbacks into the 3/8 trap, is what this is. And this would be a pullback into the 3/8 trap. This would be right here. This would be here. Let's say we're buying into that 3/8 trap if you bought right in here. So whether you buy options or whether you buy stock, it doesn't matter. You could buy 50 shares of stock. You could buy 2 contracts if you want, okay? Doesn't matter. When you buy in here and you've reached your goal by double, that's what I'm doing. So let's just say our $42. This is horrible. So $42. So we're going to double that. So we're going to look at $84. So what I do is when it moves up and I reach that $84 mark right here, then I'm going to sell half that position. I'm going to put that goal in my pocket. Then we'll let this goal continue to work, raising our stop, looking forward to make more goals. It moves up higher, it reaches your goal, you take more off the table. And you could do the same. It doesn't matter whether you're using stock or using options. The whole idea is to put money in your pocket. One thing you'll find is something I never do is I never try to pick a bottom, and I never try to pick the top, not ever. I try to take something in the middle, and I use these goals to help determine where I take it off. So for instance, a chart moves up. If you have a target up here, it doesn't matter. A target to me is a path to profits. So if you see a clear target, I think you should put a target up there. I think that's important. To me, that's a path to profits. And then what I'm going to do is take profits along the way. One thing about stock trading, I don't care how much the stock moves up, it's going to pull back. I think that's something I learned long ago. And it doesn't mean that it's dying right here. It can absolutely go higher, and it can pull back, and it can go higher until it reaches that target right up in here. Okay, some basic rules. Buy only in a trend. I'm going to stop right there. You know, and for the most part, there's no way. I might not even finish this presentation. Might not at all. But I think it's important to cover some of this stuff here, okay? So here's what happens a lot of times is traders that struggle, traders that are just starting, they're looking for a way to trade. Traders that are struggling, they're trying everything and not allowing one thing to work yet. And what I have found is they're all over the place. You're trading tops of the charts, the bottoms of the charts, below the charts, inside the charts. You're trading above the 50 period, below the 50 period, around the 50 period, around the 20, around the 34, around the 200. You're all over the place. You have no clear trading plan, no path. Okay, so what I would suggest starting out is trade the trend. Only buy on positive price action. Now, here's what I mean by that. So say we have a trend moving up and we have price that's moved up and price that's moved back. And let's paint this red, and we're going to make that smaller. So you've got price moving back here. So let's do that. And then say what I'm going to wait for is a bullish candle. One thing you'll see that I almost never do, because there are those times, so I'm going to leave myself a little opening here, but almost always what I'm looking for is a positive candle. So I'm going to make this bigger so you can see it better. So I'm waiting for that positive candle. If we have a negative candle the next day, and by the way, I love inside days. Normally I don't buy here, I buy the next day or following. I would not buy this candle. However, the following day, if it put in a bullish candle, that's the candle I tend to buy. Now, what if we put in another negative candle? That's okay. I just generally buy the green candles, the bullish candles. And I think one thing this has helped with doing this little strategy is it's helped me from not trying to pick bottoms. Bad business to pick bottoms. It just doesn't work. So I'm going to wait for a bullish candle. And then from there, I'll certainly let it move and do what it wants to do, waiting for the trend to move. And if it doesn't, and if we actually fail, well, then I have a stop set in there. I can close it out. Another thing we want to do is always buy near a visual buy point. So what is a visual buy point? A visual buy point is trend, support. It can also be flat. For instance, right here. If we look at those three candles, that's a visual buy point above that area, not right on it. Like I said, we're not going to try to pick bottoms, but I can see that that's support. So we always want to be looking. We don't want to buy a stock willy-nilly just because it's moving, just because it's shaking, just because it's rattling on CNBC, just because it's being tweeted all over the place. We don't want to be buying it. We want to be buying based on our rules near support, near a visual buy point, okay? And then we want to see a path to profits. That's what we want. We want to see a path to profits. So if you can see how price can move this direction without any troubles over here, any kind of major resistance, and there's a big difference between minor resistance and major resistance. And that's what you want to eliminate. You want to get away from the major resistance. You get away from that, and we can see that price to, or that road to profits here, then that's what we want to be looking for and buying in this area here. Selling. If this is a target, if this is the path, the end of the path I've seen, so maybe there is heavy resistance right here, and that's where we've put our target. That doesn't mean I'm going to hold out. Remember, we're going to trade with our rules in mind. So if price runs up, and if I can put, say my goal is $200 a day average. So if this moves up and we're sitting at $400 now, let's change this. What I want to do is close half this position and put my goal in my pocket. I hear all the time from people, why don't you wait till the target? 99 times out of 100, the people who say that are the people that are struggling in trading. Maybe that's only the people that say it to me. But if somebody says that to me, and then I talk to them and come to find out about their trading a little bit, what happens is they're struggling. And it could be they're not taking profits. So always profit into strength, even though it doesn't reach that target. You have a goal. Isn't doubling your money enough money? Good grief. I think it is. But I think what you'll find is you'll do more than double it because you have more than one position on. If you have a visual buy point, probably shouldn't have erased my marks up there. If you have a visual buy point, and if your trade falls below that, well, then evidently that's wrong. Remember, you like the chart because it was above that point. So if it goes below that point, do you still like it? And I would guess not. So if it falls below the point that made you happy, made you excited about buying this position, if it went below that, let's get stopped out. Another thing I've discovered by coaching people is most people don't have a problem with winners. They really don't. What they have a problem with is charts that turn into losers. And it becomes very hard to take a loss. I don't want to take a loss. I don't. You know, for the past 5 weeks, you've done nothing but make money. And all of a sudden, you don't want to take a small loss? Why? Because that loss right there, if you allow it to keep going down, it's going to take your 5 weeks, it's going to cut it in half, or even take 3/4 away, or take all of it away. And we've all seen this happen. Every one of us has seen this happen. So don't be afraid to get rid of your losers right away, okay? Stay with the trend. Whoops. Stay with the trend. Give that a shot anyway. Watch for the pullbacks. That's what we're looking for. Here's a MetaStock chart. And I love trading the 3/8 trap. So let me explain these moving averages to you. And by the way, when I trade, I don't have all these moving averages up all the time. For instance, this is the 3 EMA, and it's set up to be on the high, okay? I rarely have this on my chart unless I'm showing somebody something. I don't need to have it there because the scan tells me it's a 3/8 trap. The eight part of the 3/8 trap is this black line. This is what we call the T line, and it's nothing more than the 8 exponential moving average. And what we're looking for is price. We're looking for price to rally up and pull back into that space right in here, that trap. And then we start getting the buy alerts. Like this one right here. Here we're moving back. We're right there with a buy alert in here. You can see this, how it's rallied up, and there's a couple buy alerts right in here where you might want to look for a buy. Remember now, we have to wait for the price action to be set up. And I don't know if everybody here, probably a mixture of people, that you're going to wait for that bullish candle. Some people are going to just buy that negative candle right there. It is in the trap. This is kind of a trader's choice. I think personally, it's better to buy the bullish candle. You don't always get the best buy, but the best buy does not mean you're going to make money. What means you're going to make money is if you buy the setup, you see the good price action, and you see that road to profits up here. You see that path. That's what works, not just buying willy-nilly because it's in that area here. I am so sorry. Okay, here, I'm gonna, again, I don't mean to be rude. I was trying to keep the scratch out of there. I apologize. Okay, so one of the neat things about this, the way MetaStock has set this up, is we want to be buying when, see the candlesticks here. See how you have red candlesticks, green candlesticks, blue candlesticks. When the candlesticks are red, that means they're trading below the trend indicator. The trend indicator is this green line right here. That's the trend indicator. Okay. If this, let's take this one right here. This would be a good one. See how we're down below the trend indicator and the candles are red? We don't want to be buying long there. It makes no sense. That's like picking a bottom, and that just doesn't work. All of a sudden, we have some bullish candles, don't we? But see, they're still red, and see they're below the trend indicator. We don't want to do that either. I know that we want to reach in there and we want to grab that. We want that great buy. We really do. The thing of it is I've noticed most people that get those super duper buys, they're the exact same people that are selling right here. So it makes no sense to get the super duper buy. Makes no sense at all. Wait for the stock to pop up. Wait for it to come back into the trap. This shows strength. This shows rest. This shows test. We see the buyer step in, and this is where you get your bigger moves right in here. This would be a clear case right here. Up, here we're back, and look how you could have stayed into this trade. It never once failed all the way up, and it could have been bought in several different places. So one of the successful rules that I use is don't trade when you're below the trend indicator or when the trend indicator is red. Another neat thing that I think MetaStock does is this right here. See how red candles, see that right there? That tells you not to be long. Why would you want to be long a chart that has not started a trend unless you're trying to catch a bottom? And if you're trying to catch the bottom, the only thing I ask is it working for you? Are you truly making money? Everybody picks a bottom right every now and then. And then you have all these losers, so at the end of the month, you don't have anything to show for it. The goal is not to be a winner from picking the bottom. The goal is to have money at the end of the month to show for your efforts. The goal is to create your own road to wealth. The goal is to accomplish what it is you want to accomplish with your trading. Okay? And this is what MetaStock is giving us right now. They're giving us these opportunities. Like right here, why would we want to buy that? Why would we want to do that? We wouldn't. And there's a nice bullish candlestick right here. There clearly is. But what do we need with candlestick signals? We need, let's change the color. We need follow through. And then we want to see a rest. And what that does, now we can start a little trend in there. This candle by itself does not create a trend. So we want to wait for that run up. But what happens a lot of times is it starts moving up. We get a little, that FOMO, fear of missing out. So we buy. How many times has this happened? You buy, it looks great. It does look great. But then the chart comes back down. The thing to do is allow it to rally up, allow it to test, allow the buyers to show up again. Then we can start trading. And that's one of the coolest things MetaStock has been able to create right here. Notice all through here, this is green. That's because everything in here is above the trend indicator. And when it pulls back between the 3/8 trap, we watch for the price action to give us those buy signals. Well done, MetaStock, by the way. Thanks, Jeff. So less is more. Again, I see all the time people trading from the bottom, from the top. They're trading everything under the sun. Bounces off major moving averages, breakouts. They're doing this, they're doing that. They're using this indicator. The next trade they'll use that indicator. The next trade they'll use a completely different indicator. If you're all over the place, it's hard to make money, even for the best of traders. Focus. One chart setup is sufficient. Oh, that's it. One is sufficient. I happen to think the 3/8 trap is top notch. Take time to learn how to trade. This is another thing. And Jeff, you're going to have to cut me off. I don't even know what time I'm supposed to be finished here. But feel free to cut me off or give me a 1-minute warning or something like that. Okay.
You can take up to 15 more minutes.
15. Okay. Thank you. Okay. So I don't know about you guys. I'm not bashful about it. I tell everybody this. I started trading once upon a time, and I even made some money. And I lost it all. Now, some traders don't lose it all, which I think I had a little bit left over, but believe me, it was not anything to brag about. So I started trading again. And the truth of it is, I lost it again. And then I started trading for the last time. And this time I told myself, this is my last time. I can't do it anymore. So I traded very slowly. I did a lot of learning. I took time off trading to educate myself. And we all have the education, okay? You guys, everybody here has been to multiple webinars. Everybody here, you all know what a bullish engulf is. You all know what a Morningstar signal is. You all know what a trend is. None of that is new, okay? That is old news. But what's new is how you do it. And only you can do it your way. You can't copy somebody. You can't clone you can't clone yourself to be like somebody else. You have to learn it on your own. Like I said, the chart is the chart. Candlestick signals, you can learn all that. That's pretty easy stuff. It really is. It's what you do with it that's important. And it took me a few months to figure that out. It really did. But once I figured it out, trading became very nice, very lucrative, and very rewarding. But you have to take time. Now, in our trading room, I tell this to new traders all the time, or struggling traders: stop trading for a while. And here's what I mean by that. You cannot educate yourself while trying to put on a trade. You can't do it because you're constantly focused on the hard right edge of the trade you're trying to trade. You can't do that. Take some time off. Sit there with your computer like you normally would, but don't make any trades. Sit back and take time to bone up. If you're making less than 5% of your account, stop trading for a while. Take time to bone up. Take time to know what to do when a trade is offered up to you. When the MetaStock alert pops and you see the trade, confirm, because the MetaStock alert that pops up, the chart that pops up, it's something extremely mechanical. It cannot tell you what the target is. It cannot tell you anything like that. It can't tell you what the stop is. All it's doing is putting a chart. We've given it a couple of rules. For instance, a trend, a rally, and a pullback to an entry area. That's all the 3/8 trap is an entry area. But you're going to have price action. You're going to have, I think, a price pattern to go with it, which is all candlesticks. You're going to have to look for major resistance. You're going to have to check the market. Always make sure the market is trading with you. So I follow the SPY. So if the SPY is tanking going down, why in the hell would I want to trade something going up? That makes no sense. So make sure the market has your back, okay? And be accountable. So here's what I mean by be accountable. Share your account with the group you're with. Show them your winnings, your losses. Show your spouse. Be accountable to somebody. Get a trading buddy and share the numbers. Be accountable. I share my trading account online. I post my statement from my brokerage company online. That's my accountability right there. So do you think I'm real happy? Let's see, let's do that. Do you think, let's see here. So say the account has done this. Do you think I'm real happy when the account does this? No. Am I a little sheepish? Yes. Am I a little embarrassed? Yes. But you know what? That will make you a better trader. Hiding that does nothing good for you. Nothing. So be accountable. I can tell you right now, the new statement, let's see, this is April. The March statement coming out, the March statement is going to look like that. Am I embarrassed by that? Yes, I am. Is that going to happen again? Hell no, it's not. You know why? Because I'm going to bone up seriously. Every month since August has been a winner. And if you go back and look at the past 30 months, you'll see that it was a big winner. Well, all of a sudden, I had a bad month last month. Be accountable, because you can bet, you can take it to the bank. I'm going to turn that around. And you can bet that I'm going to be back up here with it. So be accountable. This is important. And being accountable to your dog or your parrot does not count. Use a watch list. Boy, oh 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 boy. Probably one of the most successful, one of the most doggone, I had no idea it was going to work so well, is a watch list. Create a watch list. So if you go to MetaStock and you do a scan for all the charts that's set up in the 3/8 trap that meet the qualification, you put them in a watch list, And those are the ones you trade. Don't try to trade the right now. Don't try to trade the right now. Create that watch list, because if a chart is trending, it will continue to trend until it's no longer trending. So if you've got a stock that's doing just what you're looking for, and it gets in there, it meets your criteria, but you don't buy it, that's the beautiful chart to put on your watch list. And then when it comes back, now you can start really watching for it. So rather than trying to trade thousands of charts out there, or even scanning from the thousands of charts, drilling it down to the 300 charts that might be a 3/8 trap setup that's trending, that's meeting the criteria that you have set, or that is set in the MetaStock system, put them in a watch list and then trade from that watch list. And then you're always cultivating that watch list. You're gonna add stocks to it. It takes work. It takes work. You're gonna add stocks to it. You're gonna take stocks out. You're gonna work with that watch list, okay? Don't ever get caught in the fear of missing out game or strategy. Don't ever do that. That is a game that will do nothing but take your money. I don't know if you're with a trading group. I don't know if everybody here is with a trading group or anything. But here you are. You see everybody trading stock XYZ, and everybody is screaming, man, I'm making money. I'm up 20%. I'm up 30. I'm up 40. I'm up 50. Don't go in there and buy it. Don't get caught in the fear of missing out. Those are the kind of stocks you want on your watch list. Those are the kind you want them to pull back into that 3/8 trap. And now what you're going to do is you're going to watch for that buy signal. So be patient. Don't get caught in it. Don't get caught in this trade should be moving up because of politics, maybe. Baloney. You're trading the chart, not politics. That's why you have MetaStock. It's a chart. So let it come back to you. Another thing is, don't trade junk. Of course, we have a trading room here at Hit Run Candlesticks. And I don't take kindly to people bringing junk in. So, bringing a stock that's been trading 40,000 shares over the past 90 days, and they get $1 million trade, boom, and they're up. That's junk. That's junk. Trade solid charts. Don't trade drama either. Do not trade drama. Oh my gosh. Remember, I assume you're here because you're a chart trader. You're here with the MetaStock group. This is a MetaStock webinar. You're using the MetaStock program, charts, so be a chart trader. Don't trade drama. Some things I was told I couldn't say anymore. Just don't trade drama. And don't trade junk. Trade good quality. If it's not trading 500, 600, 700,000 shares average every day for the past 90 days, go find the charts that do that. You'll trade safer trades, and I believe more money will be made. I get asked often about options. So seriously, since January of 2018, I started an account with $10,000. I closed the account about 30 months later, which I just took money out of it. That's all I did. It reached over $70,000 in 30 months. I started a new account. It's called the Road to Wealth account this past August. Opened it up with $10,000. And it's over 30 now. And I've been able to do it only because I trade options. I trade directional, very simple directional options. Doesn't mean you have to trade options. However, I think it's pretty hard to double account in a year just trading stock. Don't be bashful though. If you could increase your account by 25%, I think you'd be tickled pink if all you traded was stock. So I'm not trying to talk anybody to go into options at all. But in case anybody is interested, here's what I do. I look for open interest at least 20 times what you're buying, okay? 20 times what you're buying. I'm looking for delta around 70. I have no problem buying a 65 delta, and I have no problem buying a 78 delta. I like the bid and ask less than 5%, but if I want the trade, I'll trade it if the bid and ask is 9%. You know, make your rules, and they can't be exactly what mine are. But sometimes I absolutely will buy a stock that has 9% spread. But generally, under 5% is a good place to be. Scaling. When your goals are met, only when you meet some of your goals can you start scaling up. So, say for instance, you're starting with $10,000. Okay. You move that account up to say $15,000, then you can start scaling up. You might buy more shares or more another contract or two if you can, if you're trading options. That's how you scale it is up. As far as number of positions goes, do what's comfortable. There is no magic number, and it does not matter what I trade. It doesn't matter what Mr. Trader over there trades. What matters is what you can be comfortable with. That's what matters. So number of positions, be comfortable, okay? Oh, I didn't think I would make it to the end of this, to tell you the truth. Hey, so I'm actually at the end. So if there are any questions, I would be more than happy to answer them. And I want to remind everybody, make sure that you sign up for that free computer giveaway that we're giving away the 16th of this month, okay? So there we go. Jeff, thank you so much for having me. I appreciate it so very much.
Rick, I've had to do presentations very, very sick before too. It's a lot of fun, right?
Oh.
I would say that was a great. Sorry, I didn't mean to make you laugh. I'll back off. Let's see. Here is we didn't have a lot of questions that I didn't answer in the chat. We do have a lot of really good positive comments, and I think this one really says it the best. Thanks, Rick, for that valuable advice and rules for trading. It's not so much about the trading techniques on your lesson, but more of a piece of eye-opening advice based on extensive experience. The common pitfalls to avoid and how to adopt a successful trader's mentality. It's about having the right mentality to trade. So I think in spite of you being as sick as you are, that was one of the better presentations in particular to that you've done.
Thank you. Thank you very much, Jeff. I appreciate it. And well, yeah, thank you. I appreciate it.
Melody wants to know from YouTube if these concepts will work in the Indian market.
I don't know that I can say 100% for sure, but I've done some presentations, and in fact, I did one with Jeff here in California a few years back, and there was a speaker from India there, and based on the charts that they showed, I would say 100% yes, because a chart is still a chart, a trend is still a trend, a candlestick is still a candlestick. It doesn't matter what country you're from, a bullish engulf is a bullish engulf, and a trend is a trend. So absolutely.
And then one other question that we had was, how do we get into that giveaway for the computer contest?
Oh, just go to the website, hitandruncandlesticks.com. Right there at the home page, just look at in the bottom, and there's a sign-up sheet. Absolutely.
All right. Very good, Rick. I want to say thank you for coming in. I'm going to spend the last 1 minute showing your add-on just a little bit and get feeling better. Kevin wants you to try some lemon, apple cider vinegar, and honey for your throat.
You know, I've tried that except for the vinegar. I've tried everything, but yeah, thank you though. Thank you.
I feel like I'm getting sick just watching you, Rick.
No, don't do that. Don't do that. Don't do that.
All right. Thanks for coming. Appreciate it.
Thank you, Jeff. Thank you.
All right. Let me go ahead and kind of switch things over here a little bit. I do think you did a great job. I've had to do my share of presentations sick, and it's never fun. So in any case, I do want to thank him for coming in today. We do have kind of the 3x8 trap that he was talking about. It is part of his hit and run Candlestick product that we've created for MetaStock. So it does allow you to do all the scanning that we were showing with Steve Bigalow stuff, and does have really the expert commentary that we like to talk a lot about. Right now, I've got a chart of General Electric up, and we did have a lot of questions. I'm going to go through the indicators that are actually on the chart. We've got a 3 EMA of the high right here, a 8 exponential moving average of the close. This is the T line that Steve and Rick were both talking about, as well as the 17 exponential moving average. So those are the 3 that they're using. The 17 and the 8 are both based on the close. Here you've got kind of where the trap kind of forms, where the 3x8 trap kind of forms. You kind of get this blue indication on where to buy. You can, like I said just a second ago, scan for that using the power of our award-winning software. But here, whenever you get kind of this bullish indication, it's going to give you some advice on how to go long. It's going to go ahead and paint that on the screen for you. And this is included as one of the methodologies that is part of the Patterns for Profit suite of systems. This is actually the one that Rick recommends that you use. It's his favorite system. In fact, we put it together and added it to the system I'd say about a year ago, because he liked it so much. So there you go. Good things with that. Here's a kind of a screenshot of kind of this picture. You will get in addition to the 3x8 trap, which is included, you'll get his routed bottom breakout, the T-line squeeze, the T-line bounce, and the pinball setup. All of those are going to be scannable. They're all going to kind of give you those entry and exit signals, and they're all going to include whether or not you're in an uptrend or a downtrend. So it's a full integration into MetaStock. With this particular one, it's going to include the 2 scans, the 2 expert advisors, the 5 unique different patterns that are unique to Rick and what he does. And normally, this is a one-time cost of $799. Here at the conference, we're going to do it as a one-time cost of $699. It includes a 30-day money-back guarantee, so you can try it out. If it's helpful for you, then it's going to be helpful. It's going to pay for itself. If it's not helpful for you, you can get your money back. So, as a trader, that's probably the best risk-reward scenario you're going to see. If you don't have MetaStock, if you haven't heard about MetaStock, MetaStock has been rated #1 in its price category for 28 years in a row now. It's a great software program. We'll include a trial subscription for free as part of this purchase to that software that's been rated so highly for so long. So to take advantage of that, to get some more information, give us a call, 800-882-3040. You can chat online with us at metastock.com/saleschat or metastock.com/conf-promo. We'll also take you there. So there's a little bit of information for you. We're going to transition real quickly to our next speaker, Steve Primo. But before I do that, I want to thank Stocks and Commodities magazine for sponsoring our event today. They do such a great job. They've always been kind of supporting with us. But they're very, very impressive magazine. They've got more than 1 million subscribers. They've been publishing information on trading since the 1982. And if you register, you'll get a free copy. So to do that, go to metastock.com/conference. If you're in the GoToWebinar, you've already registered. But just for registering, you will get a free copy. And we really appreciate all the work they've done for us and with us over the years. So I definitely appreciate that. Our next speaker is also going to do a great job, I promise. Steve Primo. I love Steve. I love having him in here. We should have him in more often to talk to you guys. The things that I like about Steve is we've been working with him for a number of years as well. What I really like about Steve is he has a way of talking about things with a lot of clarity. I can always understand exactly what Steve talks about. I think he has just a really, really good way of explaining things, and he just does a great job. So, Steve, let's go ahead and bring you in here. How you doing?
Hi, Jeff. Doing great. Don't know if you can see me. Oh, here we go. Yeah, there I am. Can you see me okay?
I can see me. I can see your slide, though, too.
Okay,
but I don't see you. Your camera. Are you trying to turn that on?
Yeah, I'm just going to go to the slides. I'm just going to spare the people and just show the slides today.
Not a problem at all. Then we can see your slides. I can hear you well, and I'm going to get out of the way.
Okay, thank you. Thanks again, Jeff, for inviting me to speak. Thanks for everyone attending to the Online Traders Conference today. A big crowd here today, and I'm going to really teach you a great technique. I'd also like to thank Rick Sadler. I met Rick a number of years ago at a seminar in Las Vegas. And he's a really great trader, had a lot of great information, and want to thank him also previously for me speaking. He is really a good trader and someone to learn from. Now, I want to talk to you today about a trading technique that I really feel will give you the edge you're looking for. This is a very simple but powerful way to trade, and by the end of today's presentation, you'll know all of the rules for spotlighting and for highlighting where these high probability entry points are. And I know many of you say, well, Steve, I already have an edge. You know, I bought that $10,000 system, or I've been trading for so many years, I know what my edge is. Well, that's great, but most traders feel they have an edge, but is it really consistent? For example, let's look at this trade here, or this example here in FTNT and Fortnite. As we can see, most traders would look at this, and if you had an edge, most traders like to look at overbought and oversold situations. For example, they would have some type of tool or indicator tell them at this point that it's time to sell. It's too high, maybe it's meeting some type of resistance, and so you sell, and then lo and behold, it goes down. So you've got a really nice trade there, right? Maybe about 10, 15 points you made. And then when it gets to a certain level of being oversold, you turn around, cover your position. Maybe you went along the puts, maybe you got out of them and went long, and now you have a nice profit the next week where it's gone back up. And so it gets back up to that so-called overbought level, and so you sell again. Now at this point, you think you're going to retire in about 6 months, right? Because it's just too easy. You think you found your niche in the markets, and trading is great, and you have the edge you've been searching for. But after this last sell signal, what happens? It doesn't really go down, but it really doesn't, go that much lower for you to cover. In fact, you're still in the trade, and it's a little bit higher from where you sold. So you do what most traders do, and this is called doubling up, right? You double up your position, because after all, you don't need it to go that far down to at least to break even or to make a little profit. So you sell some more. Now this is what most traders will do, and this is where they start to feel, well, I'm really going to make a lot of money now. And then this happens, okay? Look familiar to anybody. At this point, you're most likely hiding your statements from your significant other and saying, wow, what am I doing here? I'm really losing a lot. In fact, you've lost everything that you made on those first couple of trades. So now you do what some traders do, which is called tripling up, and you decide to sell some more. Now you just want to break even. You just want to get out without any loss, and you're just hoping and praying for the market to go down. And then this happens, right? So the first portion of your trading, you had some really nice trades, but by the end of the month or two, you've given it all back, and now you're in the loss column. So this is where most traders feel they have an edge, but ask yourself, do you really? If you trade this same style over time, will you have anything to show for it? Well, in today's presentation, I'm going to share with you, once again, this trading technique, which I really feel will actually take your trading to a new level. For example, this trading technique would not have taken any of these signals. As you see, they're all crossed out there. In fact, it wouldn't even have taken the buy signal, but it would have generated buy signals here, 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 and then ultimately here. So that had you taken any one of those, ultimately and potentially, you could have captured 40 points. So this is why we really strongly feel that this is the trading technique that will give you the edge you're searching for. So welcome once again. My name is Stephen Primo. I'm the president and founder of Specialist Trading. I formed Specialist Trading a little over a decade ago with one goal in mind, and that was simply to educate traders around the world. We are first and foremost an educational company. We're not here to trade for you. That's why we don't have a chat room or a trading room, and we don't generate signals for our students, because we really feel that that's a detriment to your advancing in the trading world. We feel that, and I was happy to hear that Rick Sadler said the same thing, that you should never copy anyone else, because that won't lead you onto some road of consistency. And I believe the same thing as myself, because I tried to do that when I first started trading some 44 years ago. I struggled tremendously, and I was trying to do the same thing that my mentors or some other traders were doing, and it didn't work out well. So you have to find your own way. And the way you do that is by being provided with sound fundamental education that has stood the test of time. I've been trading for 44 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So that's where we get the name specialist trading. A specialist doesn't mean that you're any more special than anyone else. It just means that in the old days, if you wanted to buy or sell a stock, you'd call up your stockbroker. He in turn would call the floor broker on the floor, who would take the order over the phone and then walk up to the trader who specialized in making a market in that stock. So I made markets in IBM, Waste Management, US Air. I did that during the crash of 1987 and the bull market that followed. So I've seen just about every market environment you can think of, straight up, straight down. I've traded and seen just about every system or every technique or strategy you can think of. So in my 44 years of trading, I know what works in terms of consistency, and I know what doesn't. So this is what we do at Specialist Trading. We provide all of our students around the world in over 115 countries and in virtually every state in the United States, the things that I personally use in my own trading and things that have stood the test of time. So hopefully we can take your trading to the next level with our education. And you'll see that today with the attention to detail we give in trying to educate you. Now, before we begin today's class, we are required to share this with you. So first, please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, please remember that all examples are strictly for educational purposes only. Excuse me. Also, since we are an educational company, if you'd like to get some more education on a daily basis, please feel free to follow us on Twitter. There's our handle right there. I would suggest copying that down, because every day I post different things, from signals our strategies have generated recently to little bits of financial wisdom. But either way, I really go into detail on why we are, maybe generating a signal, what we feel is happening in a certain stock, future, currency pair. Our methods and our techniques apply to any market and any time frame. So lots of great free education on a daily basis. Please feel free to follow us on Twitter. Okay, so as I stated in the opening statements, we're a little bit different from other companies that may be presenting today, and that our only goal is simply to educate you. All right, that's all we're trying to do, because we feel that that's really what's lacking from most traders. It's not the amount of experience. It's not whether you graduated with a degree in business or you've been trading for 50 years. It really doesn't make any difference. I had none of those things when I first started trading. What really matters is that you're being provided with sound fundamental education that stood the test of time. Why? So that ultimately you can make your own trading decisions. In my opinion, this is the only way someone can become a consistent trader. And by consistent, I don't mean having a good month or two. I mean having a good decade or two. You have to make your own trading decisions. The traders I know who are still trading from years of trading on the floor, they don't go to any trading rooms. They don't listen to guys on TV. They're not even concerned with earnings or economic reports. They have their own methods, and they simply listen to themselves and to the market they're trading. And they're continually trading and have been for decades. And this is what I'd like to instill in all of my students. So as you can see here, my goal is not to force feed you signals, not to tell you what I think the market's going to do, not to tell you what I think the perfect time frame is, or the perfect stock to trade. My goal is simply to teach you how to trade with the specialist edge. And hopefully you'll be able to learn that and see a portion of that in today's presentation. Okay, now since this is going to be a class today, I want to take all your questions, but please, if you could wait till the very end, I'll have a lot of slides to share with you. So if you have questions, please wait till the end, and I promise I'll get to each and every one of them. All right. Okay, with that said, let's begin today's educational presentation. I want to talk to you about trading overbought and oversold markets, because think of it, when we're first learning how to trade, that's probably one of the first things we're all taught, is that to buy low and to sell high, right? You always want to buy when something is too low, when it's hitting some type of support, or it's tremendously oversold. It can't go down any lower, right? Or you want to sell something when it's too high, when it's gone up too quickly, when it's overbought. Maybe it's hitting some type of resistance. That's when you want to get out, right? So that's really the basis for all of our education, trading overbought, oversold markets. But does it really work? Well, let me share with you how I used to trade and how most people trade overbought and oversold markets. Let's look at this example once again. This is an FTNT, Fortnite. Okay, looking at this, what we normally do to trade an overbought or oversold market is to apply some type of tool, an overbought, oversold tool, either an oscillator, it could be some type of a moving average, or it could be something that you've put together yourself. But either way, it just tells you when something has gone up too far, it's too high, or something has gone down too low. Now, on the standard stochastic oscillator, which I have plotted here on the MetaStock platform, it's very simple to see. I haven't changed any of the parameters. Don't ask me to go into the inner workings of the stochastic. It could be any oscillator. It really makes no difference. We just want something that tells us if something is overbought, oversold. And the way it does this on the standard stochastic is by having two thresholds. Now, the upper threshold, that's the upper red line. Anything above that is overbought. And anything below that is oversold, okay? So these are going to be our windows into trading overbought and oversold. So the way this usually works is with whatever market you're trading, makes no difference. When you get into this overbought area, when you start to see this roll over or top out, that's when you want to sell. And look how price really follows that perfectly. It went down, and as you follow the indicator, in this case the stochastic, once it gets into the oversold area, that's where you cover your position. And if you're so inclined, you go long now if you're more aggressive. And that would have been a great buy there because you would have bought right at the bottom, covered your position, made some profit, and then look at the profit you have to the upside. And so as you're monitoring the stochastic here, we get into the so-called overbought area. That's where you sell. But then look what happens this time. The stochastic doesn't go all the way down into the oversold area, so you're kind of hoping and praying for it to go there. It's not really going up, but it's not going that much lower. Now it really starts to go up. So this is where you double up and sell again, okay? And now it's in the hyperspace. It just keeps going higher and higher. And so you decide to triple up and maybe even quadruple up if you have any money left. So this is the way most traders trade overbought and oversold, myself included. When I first started trading some 4 decades ago, I was trading this way because I was always taught to buy low and sell high, right? I mean, that's the way all traders have been taught. But is there any consistency to this style of trading? Well, there actually isn't. In fact, when I was struggling tremendously trading this way, I had some mentors on the floor. These were specialists themselves who saw how much I was struggling. And I was doing all the things I had been taught, all the seminars, all the books I read, and this is the way you're supposed to trade. And I remember what they told me. They said, Steve, there is no such thing as overbought or oversold. And that didn't make any sense to me because I had always been taught that when something's overbought, you sell. When something's oversold, you buy. And they said, okay, if you really believe that, look at any stock, look at any future, any currency pair, any market, any commodity. How many times have you seen something in the so-called overbought area and it just keeps going higher and higher and higher? And how many times have you seen something in the oversold area and it just keeps going lower and lower and lower, even to zero? Years ago, there was a stock called Enron that went literally bust. It went to zero. So it took me a while to really grasp this concept. But then once I did, I really saw that they were right. There is no such thing as overbought or oversold. It's completely subjective. And we've been taught this that has no level of consistency to it. And that's why so many traders fail. Think of your own trading when you've tried to do this. It's very similar to going to Las Vegas and playing the slot machines. They're designed to let you win every once in a while, okay? And every time the bells and whistles go off and you hear the money clattering, you feel good about yourself, that positive response. You think, hey, I'm doing pretty well. But it's a false sense of security because they know if you stay there over time, you're going to give it all back and ultimately wind up with nothing. It's the worst odds in any game in the casino, but this is where most people go to, okay? This is the same way with trading overbought, oversold markets, in my opinion. Sure, every once in a while, you will get a winner, a great winner. I used to get these great winners and think, oh my goodness, this is fantastic. I'm on my way to becoming a great trader. And then by the next month or two, it was all given back. So that's not what you want to aspire to be. That's not a trader. That's more of a gambling mentality. You want a nice consistency in your trading, and you won't get it with trading overbought or oversold markets. So what is the right way to trade overbought or oversold markets, right? What is this technique? Well, here's what my mentors taught me, and I'm going to teach you today. And this is simply going with them. We're going to go with or exploit these so-called overbought, oversold markets. And I'm going to give you this technique that my mentors taught me that you can start applying right away. But please, I would really suggest and require that you paper trade first. All right, don't just jump in, because most traders, when they jump into a technique or strategy too quickly, will ultimately lose. And then I'll get all the emails and all the nasty statements saying, "Hey, this doesn't work. And you told me that this was supposed to be consistent." And then I'll review their work, and almost 99% of the time, it's because they implemented the rules incorrectly. So please, the only way you can really understand it and understand the process is by paper trading first. So please practice this before you jump in with feet first, all right? All right, so let's go back and look at this chart now. All right, we've looked at FTNT for 3 or 4 times already, but let's look at the process and how we can go with them and exploit these overbought, oversold conditions, all right? The first thing you want to do, looking at a chart, is to apply any overbought, oversold tool. Remember, you can apply an oscillator. It can be some type of a moving average crossover. It can be something that you've created or something else has created. It makes no difference. We just want some tool or some indicator that tells you when the market is too high or when the market is too low. Why? Because we know it doesn't exist, because there's no such thing as overbought or oversold. So we're going to exploit those things. So once again, we're just going to apply the standard stochastic oscillator. It's a great tool, but when you use it this way, it really has no level of consistency. But I'm not saying the stochastic oscillator is not a great tool, but you have to learn how to use it correctly. All right, so now we've just plotted, once again, the standard stochastic oscillator you'll find on the MetaStock platform. And now let's go to the next step. What we want to do is apply the 50-period simple moving average, okay? Now, here's where students get confused, and this is one of the reasons why students lose money. They say, well, Steve, I like to look at like an intraday chart, and then I like to look at maybe an hourly chart, and then maybe a daily or a weekly chart. All you have to do is focus on one chart. If you're taking your signals from a 10-minute time frame, then apply a 50-minute, I should say a 50-period simple moving average to the 10-minute time frame. That's it. If you're taking your signals from daily bars, then apply a 50-period moving average to the daily bar chart. Don't overcomplicate things. It's the easiest thing in the world to overcomplicate your trading by looking at multiple time frames. But it's the most difficult thing in the world to simplify your trading. But once you simplify it and only focus on the chart you're trading, that's when things start to click. So if you're looking at a daily bar the way we are here, daily bars, then apply a 50-period simple moving average based on the daily bars, all right? Now, once we've applied that, we want to ask ourselves a question. And here's the question. In fact, I would almost say write this down and post it onto your computer screen, because this is really important. And that question is this: where is price in relationship to the 50-period simple moving average, okay? Where is price in relation to the 50-period simple moving average? You'll only come up with 2 answers. If price is below, that means the overall trend is down. So that means we only want to be a seller, right? You never want to buy if the overall trend is down. But as we look at this chart right here, where is price in relation to the 50-period moving average? It's above. So that means we're only going to look at this from a buyer's perspective. We will never short anything. We're only going to be a buyer if price is above. So you see how simple this is? You just eliminated half of your inconsistency by being in sync with the overall trend. It's that simple, and there's nothing that you have to, purchase $10,000 system. This is something you can get simply on the platform. Just click on the 50-period simple moving average. Okay, so we know we're going to be a buyer. So what does that mean now? Well, that means we go to the next step, which is we want to locate all the so-called overbought, oversold areas. And in this case, we're going to locate all the so-called overbought areas. Why? Because we're going to exploit them, because we know there's no such thing as overbought. So on our tool, whatever we're using, we want to just simply locate them, and they're right here. This is where we are in the so-called overbought area. Now, the next step is we want to identify pivot highs that were generated in this so-called overbought area. So what is a pivot high? It's a 3-bar pattern. looks like this. Kind of looks like a little arrowhead right there, okay? Where you have bar number 1 makes a high, bar number 2 makes a higher high, and bar number 3 makes a lower high. So we want to identify all these patterns that look like this that were created while our indicator was in the so-called overbought area. So as you see, here are the overbought areas, and here are those little short-term pivot highs right here, okay? Sure, there are other pivot highs that were created here, but we were not in the overbought area. Remember, we want to exploit that overbought area. So here they are. And now we go to the final step. We're going to buy when price trades above those pivot highs. Could be 1 tick, could be a half point. It's up to you. Remember, you're in charge, you're trading. We're not trading for you. It's up to you. Now, had you taken that very first setup, instead of having a tremendous loss, a couple of good winners, and then giving it all back and then winding up in the minus column, you could have potentially captured 40 points. You see how simple this is? Why? Because we know there is no such thing as overbought. In fact, if you really believe something was overbought, well, look at this right here. We were really overbought here, right? Now look what happened. Well, if we were overbought here, we must have really been overbought here. And then we must have really been overbought here, coming in the middle of the end of March. So see, it doesn't make any sense. These things really have no level of consistency. They'll work every once in a while, just like the slot machines in Vegas, but ultimately you'll give everything back. All right, let's look at this older example here in Visa. This is for the opposite side of the coin. All right, we have our oscillator plotted on the bottom, the stochastic oscillator. First thing we want to do is apply the 50-period simple moving average. Once we apply it, we see we kind of oscillated above and below, but since we're trading, we want to just see what the last portion was. And then we ask ourselves, where is price in relationship to the 50-period? Well, this last portion is below. So we're only going to be a seller. We're going to look at this from a seller's point of view. All right. If we're looking from a selling point of view, we know there's no such thing as oversold. So we want to exploit all the so-called oversold areas. So we want to locate all of these so-called oversold areas, which are right here. Here's the only one, right? There's nothing else. We never went below that threshold. Now we want to identify pivot lows that were generated in the so-called oversold area. So what's a pivot low? Well, it's just the opposite of a pivot high. It's a 3-bar pattern, but now we have a low followed by a lower low and then a higher low. So we create this type of a V pattern here. So if we're looking for that pattern in the so-called oversold area, we have it right here. A low, lower low, higher low. So this gives us our entry rule. We're going to sell when price trades below that pivot low, right here, below bar number 2. And as you can see, you would have entered right here a couple of days later, and a quick 17 points to the downside. You see how simple this was? You didn't have to go to any chat room or so. You didn't have to listen to the earnings. You didn't have to listen to some guy on TV that's supposed to know what he's talking about. You didn't have to look at the economic report that was coming out this week, because the market told you what it wanted to do. Once I learned to drop all those things, which I, by the way, was using some 4 decades ago, and they didn't work for me then, I don't know if you can imagine that they're supposed to miraculously start working now, okay? But the one thing that does work is when you stop and just really discard all of these things that have no levels of consistency and only focus on one thing. That's the source. That's the market you're trading, because that's where the profits come from. All right, so let's look at some current examples. Now that you have the technique under your belt, and remember, a technique is not a strategy or system. It's just a technique highlights a high probability point for entry. Now that you understand that, let me give you some more examples, some current examples, so that we can see how this worked within the last month or so, okay? All right, here's an example here in TPR, going all the way back to November, but ending at the mid to end of March. Obviously, we're above the 50-period moving average, so we're only looking at this from a buyer's perspective. That means we want to exploit all the so-called overbought areas, and right here. And then the next thing we do is identify these pivot highs, which are right here. And then we can just decide for ourselves if we want to go long. Remember, you're in charge. Now, had you taken this very first one back in November, potentially you could have captured 20 points coming into last month, okay? Simple, right? Now, do you think you would have made any money trying to sell any of those so-called overbought areas? Sure, you would have maybe had to been quick. Maybe here would have been the only place you could have done it. But if you were, were caught sleeping and said, wow, this is really going to get killed, a couple of days later, it's right back up to its highs. So there's no such thing as overbought, oversold. The way my mentors taught me, I'm trying to instill in you the same concept. How about this example here in Merck, okay? Now at this point, price crossed below the 50-period moving average. So now that means we're only looking at this from a selling point of view. So that means we want to identify all the so-called oversold areas right here, and we're going to exploit them. So we want to locate the short-term pivot lows that were created, one right here, here, here. You could have taken your pick, but the very first one usually holds the highest level for consistency. Had you taken this very first one, well, potentially a 9-point gain in just about a month, okay? Not a lot, but still, not a very expensive stock. You could have done very well. How about looking at, this is the spiders, okay? As we see here, this is a great way to get an idea of what you think the market may be doing. We all know the market has been going higher, but this can be used as a directional tool. We're above the 50. We're exploiting the so-called overbought areas. And look at all this, 45 points since the last month of 2020 coming into last month that you could have potentially captured. And I know I took this chart last week when I was putting the presentation together. Obviously, we're much, much higher than this final chart plot is. Let's look at the Discovery. As we can see here, we had a really nice run up, okay? And then all of a sudden, the bottom fell out. But while we were going up, look at all the buy signals. Had you taken this very first one, potentially you could have captured 50 points, all right? Now, look what happened when the bottom fell out. Now we are below the 50-period moving average. We want to exploit the so-called oversold, and this is where we'll enter, should you decide to do so, if we trade below that. Now, I know a lot of you are saying, well, Steve, where would I get out, or where would I place my stop, or where would my exact entry be? These are things we all teach within our courses. I can't really go into detail now. That wouldn't be fair to all the people that have purchased our courses, but we teach you all these things in our courses. Here's an example in TTWO, take two. Once again, we were originally above the 50, and at this point right here in February, we crossed below, and coming into last month, we were well below the 50. So obviously, from this point on, we didn't really need someone to tell us that the stock was going lower. Why? Because the stock itself was telling us. Look, right here, we knew that it wanted to go lower because it's below the 50. You see, when you uncomplicate your trading, that's when it's really simple to become a consistent trader. There's no need to overcomplicate things. The 50-period moving average is one of the most powerful tools we use at specialist trading. So right at this point here, in mid-February, it was telling us, I want to go lower. So our job as a trader is simply to add some structure to jump on board. And the structure I'm teaching you today is this technique where right here in the so-called oversold, you see that little 3-point pivot low. You could have entered here and potentially captured 30 points coming into the end of March. Let's look at Mohawk, all right? Obviously, this stock's been going higher. How could we have taken advantage of this going all the way back to November of last year, coming into April? Well, we exploit the so-called overbought areas. Don't you think that this overbought area was a little bit premature? Because look what happened. It continued to go higher. But had we taken this very first signal here, we could have potentially captured 60 points coming into this month, into April. Here's an example now in REGN. All right, right here at the beginning of February, we had consecutive closes below the 50-period moving average. So this stock was not only telling, it was screaming that it wanted to go lower. There was nothing else you needed to follow. There was nobody in a chat room you had to listen to. There was no earnings report you had to follow. The market told you it wants to go lower. So add some structure, exploit the so-called oversold. And if we were really oversold here, we must really be oversold here coming in the beginning of March. You could have potentially, off that first setup, captured 55 points to the downside, okay? Here's an example in the EXPE, Expedia Group. Once again, looking in hindsight, this has been going straight up. How could we have taken advantage of this somewhere back here? Well, apply this technique. It was overbought at this point, right here, when the stock was trading at about par, okay? Don't you think it was overbought here as well? This is why I would never put my faith in anything being titled and labeled as overbought or oversold. It's not consistent. So what we want to do is exploit that. We look for these short-term tops to be created, and then we simply enter. Had we taken this first one right here, potentially captured 80 points coming into April. As we look at SBA, SBAC, once again, this was telling us back in November it wanted to go lower. As I look at here over the far right, the stock was roughly selling around $300, okay? And it was telling you it's not making a double bottom base. The institutions are not buying. This is not some Fibonacci support. Don't overcomplicate your trading. What's it telling us? It's telling us it wants to go lower. So that's all we need to do. Now we just want to exploit the oversold areas right here on the bottom. And then we identify those little pivot lows. Had you taken this first one right here in November, coming into March, middle of March, that's close to 60 points you could have potentially captured. Remember, once again, we teach you upwards of 6 or 7 different exit points in our courses, upwards 6 or 7 different stop placements, and upwards of 6 or 7 different entry techniques. So I just can't share that with you right now because that's all included in our courses, but I'm sharing with you, these high probability entry points. As we look at Goldman Sachs, all right, obviously at this point here in November, we crossed above. So right here, roughly about 210, Goldman Sachs was screaming it wanted to go higher. There was no reason to look at earnings. There was no reason to look at what the market was doing. Just the stock was telling you it wants to go higher. So all you have to do is exploit the overbought areas. Look for the short-term pivot highs right here. And in the middle of November, you could have potentially made 135 points coming into April. As we look at Equinox right here, in middle to end of February, it was screaming that it wanted to go lower right here. So once we started creating this so-called oversold area, we look for the pivot lows. We could have entered right here in mid-February, coming into the end of March, close to 100 points, 95 points to the downside. All right, so let's go step by step through that process before we conclude here. I want to share with you exactly how simple this is, okay? As we're looking at a chart here of Deere, John Deere, all right? Obviously, in hindsight, this has been going straight up. Going back to the summer of last year, it was trading at about $130. It went up roughly 200, 300 points here, okay? It went up to close to 400. How could we have taken advantage of this? Now, it's easy in hindsight to say, oh, sure, I would have bought that. Why not? The market was going higher. But we have to add structure to show us that we would have been able to enter. So let's go through the step-by-step process. First thing you want to do, apply any overbought or oversold tool. It makes no difference. We don't care if it's an oscillator. We don't care if it's something based on moving averages. We don't care if it's something that you created or something you purchased from another vendor. It makes no difference. We just want some type of tool or indicator telling us that something is way too high or something is way too low. It's overbought or oversold. Why? Because we're going to exploit those things, because now we believe we've grasped the concept that there's no such thing as overbought, oversold. So pick anything you like. Remember, I picked the standard stochastics. Now, stochastics, once again, I'm not bashing them. They're a great tool if you know how to use them correctly. That's another course we teach in our classes. But in this case, overbought, oversold, in our opinion, is not being used in the best fashion. So we see here that anything above this red line is overbought. Anything below is oversold. So what we want to do in our next step is to apply the 50-period simple moving average, all right, on this daily chart. And there it is. And so we ask ourselves that question: where is price in relation to the 50-period simple moving average? If price was below, we'd be a seller and we would exploit the oversold condition. But where is price? Price has always been above. In fact, going all the way back to summer here, in May, we were already above. So this was clue enough. This was all we needed to know that this stock wanted to go higher. How high, we didn't know. But we knew that we shouldn't have been a seller. And it remained above, and it continues to remain above the 50-period moving average. So there's no reason you should ever have been selling this. And if you were thinking about what you wanted to do with this, you only should have had a buyer's bias. So obviously price is above. So what does that mean? That means we're going to exploit the so-called overbought areas. All right. So what we want to do is locate these so-called overbought areas, which are right here. Anytime we're above that threshold, that's supposed to be overbought. Now look how overbought we were right here. How well did that work? That's when the price was roughly about 160, 170. How well did that overbought work? How about this overbought right here? How well did that work? Or this overbought? Once again, I know it's difficult. It took me a while, But the sooner you grasp that concept that there's no such thing as overbought or oversold, the sooner you will become a consistent trader. So after we've located these so-called overbought areas, now we want to identify pivot highs that were generated and created in these so-called overbought areas or conditions. Remember, a pivot high is this. It's a 3-bar pattern. You make a high, bar number 2 makes a higher high, bar number 3 makes a lower high. As you can see, wherever this green horizontal bar is, there is a pivot high that's above a so-called overbought area. So these are the areas that show high probability for going long. Now, had we taken the very first ones here, potentially, in just about less than a year, when price trades above those, had you gone long, whoops, that's 230 points to the upside you potentially could have captured. You didn't have to look at any earnings reports. You didn't have to watch the so-called gurus on TV. You didn't have to go to any trading room. You didn't even have to listen to me in a webinar. Why? Because you did it yourself. Remember, I stated in the beginning of the presentation, the only reason we formulated specialist trading was to teach you these techniques and strategies that have stood the test of time so that you could ultimately make your own trading decisions. In my opinion, that's the only way to become a consistent trader, not by mimicking someone else's trades. Now, here's the other slide that I skipped over too quickly. Well, I want to show you real quickly some other time frames and markets, because I know not everyone just trades daily bars of stock. If you are, let's say, a swing trader, you like to trade weekly bars, well, the same concept applies. Here is a weekly chart of AMAT, okay? Applied materials. As you can see here, the same concept applies. We're above the 50-period moving average, so we're only going to exploit overbought areas. And once we identify them, we want to see where those little pivot highs were. And then we'll do the same process. If you would have bought here in January, mid-January, 50 points coming into April, this last week, okay? What if you like to trade currency pairs? Well, here's an hourly chart of the euro dollar. Now, looking back, this was at the end of March here, coming into April, on an hourly time frame. Look what the euro dollar was telling you. Once it went below the 50, it's saying, I want to go lower. Don't buy me. It wants to go lower on an hourly time frame. I know a lot of students, the first thing they want to do is overcomplicate their trading. They say, but Steve, on the daily bars, it's above the 50. And then on the weekly, it's even higher above the 50. So how do I know what to do? Remember, don't overcomplicate your trading. You only need to look at one time frame at a time. We don't subscribe to that technique where you look at multiple time frames. You know, I know a lot of traders do, and I'm not going to say it's wrong. I'm just saying, from my own personal experience, trading 44 years, I have found no consistency in looking at multiple time frames. In fact, the only thing that does is it keeps me out of some good trades while I'm waiting for them to line up. And by the time they line up, it's too late. So you can add multiple time frames if you want. I'm not telling you what not to do. As an educator, I'm only telling you what I have seen that works. And what works is to only trade the time frame that your signals are being generated on. Don't overcomplicate things. So if I'm looking in the hourly bar, a time frame of euro dollar, that's the only thing I'm concerned with. I'm only concerned with where price is in relation to the 50-period moving average on the hourly time frame. I don't care about what's going on in the daily or the weekly. It makes absolutely no difference to me. So had you taken that very first setup to go short here based on the same rules, well, that's 150 pips or roughly $1,500 per unit in just about a week. Now we can even go to a smaller time frame. Here's a half-hour time frame of the E-mini futures. All right, this was at the end of March coming into April 1st. Same concept applies. Price was above the 50 period right here. Once we went above the 50, we start to exploit these so-called overbought areas, and then we just simply identify the 3-bar pivot highs. Had you taken this very first one, or this one, the second one, you could have potentially captured 40 points in just a day or so. That's $2,000 per contract. Remember, in the course, we teach you exit points, we teach you stop placement, we teach you, ways in which to enter and to track the trade. But we're just sharing with you this technique and how to identify it in this brief course today. Okay, so let's recap before we go into question and answer portion. Remember, what my mentors taught you is the same thing I'm trying to instill in all of you today. There is no such thing as overbought or oversold. If you're not convinced now by the examples I just shared with you, it's probably going to take some losses on your part to finally, pull the trigger and say, okay, I've lost too much money trying to sell when something is overbought or buy when something is oversold. So really, it's much better to exploit that. If you finally grasp that concept that there's no such thing as overbought, oversold, then obviously you will never, ever try to pick a top or bottom. Why? Because you'll be swimming upstream. You're going against the grain. You never want to do that. It's much easier. You're going to sleep much better at night and have a higher level of consistency if you swim with the current at your back, meaning that if you're in sync with what the market wants to do. Okay, now I want to give you a homework assignment. All right, I bet you didn't think you were going to get homework today coming to a free conference, but this is going to be simple. I want you, based on what I just taught, I want you to take a look, let's say your last 10 or 20 trades, some of your last trades, and apply this technique, which I just taught you. And then I want you to ask yourself honestly, if you would have improved your trading results. Let's say you say to yourself, well, Steve, I'm not that type of a trader. I don't really like to, buy as something is going higher and keep buying and buying or selling and selling. I, have a different way. Okay, that's fine. I'm not saying that, this is not a system that everyone has to trade. In fact, it's only one of dozens of different techniques and methods we teach our students. But what if you had just applied that simple rule of the 50-period moving average? And let's say you kept your same strategy. I don't care what it's based off of. It could be based off fundamental news, could be based off some signal service you subscribe to, could be based off the full moon. I don't care. It makes no difference. But I can almost guarantee you, if you apply the 50-period moving average rule, which I taught you, I can almost guarantee that the majority of your losses would be because you're out of sync with that. You're buying below the 50 period and selling above. So even for that simple rule alone, I think we could really increase your odds for consistency. So important points to remember though. Remember, I can't stress this enough. This is not a complete strategy. In other words, in order to have a complete strategy, you need all of the spokes in the wheel. You need to have advanced entries. You need to have advanced exits, advanced stop placement, money management, ways in which to track the trade. We really didn't talk about any of that today. We didn't talk about entry signals, real advanced entries. We didn't talk about stop placement, and we didn't talk about exit levels either. A lot of you were saying, well, Steve, yeah, I would have made 120 points if I got out at the top, but how do I get out? Well, we didn't talk about any of that. And then more importantly, we didn't talk about money management. Okay, so remember what we explained to you today is just how to spotlight a high probability place for entry and how not to trade overbought and oversold in the traditional sense. So we have a special offer for all the attendees today in the Online Traders Conference. And this is really a really discounted offer for all of you. I want to thank you for taking time to listen to me speak today and the other speakers as well. We're going to offer you a full-fledged strategy. In fact, this is one of the first strategies my mentors taught me on the floor of the Pacific Stock Exchange, and one in which I continue to use in some capacity to this day in my own trading. This is strategy number 4, okay? You're going to get instant course access, and remember, a strategy comes complete with entries, exits, and stops. It also incorporates a few of those rules that I just shared with you in the technique as well, but it's based entirely off a pattern, which is entirely different from what I just shared with you. So it's totally different. I don't want you to think this is just a reworked version of what I just shared with you. Entirely different, and this is a full-fledged strategy, okay? Let me just share with you an older example of how this works. Here's an older example in PDD. As you can see here, based on this pattern, a buy signal was generated when it looked like the stock was maybe kind of rolling over, and look at the nice gains you had after that. Strategy number 4, its entire premise is to identify building up momentum. So oftentimes when it looks like the stock is really doing nothing, if I go backwards here, once again, it appears that there's really nothing exciting about this right here. It appears as if nothing is really going to take place. It is based off this pattern, which occurs over and over again in any market, in any time frame. It's actually calculating that the market is getting ready to really move in some capacity, either to the up or downside based on this pattern. So it's really trying to capture and identify momentum before the stock takes off. As you can see, it did that very well with this example right here. So we're going to give you all the rules to the course of strategy number 4. This is something I trade today. Now, we're not going to stop there. We're also going to throw in a completely different strategy. This is strategy 3A. This, where strategy 4 is based off a pattern, this is entirely different. This is based off a unique Bollinger Band setting. And we share with you all of the particular settings in this proprietary setting and all of the rules as well. Now, we're going to share with you the entries, the exits, and the stops. And once again, this can be applied to any market, any time frame. When we first started teaching this method, it was mainly used for E-minis. That's where you see the E-mini strategy 3A. But trust me, we have students trading this around the world in currency pairs, in commodities, and in stocks as well. For example, this is a continuation course. A continuation course looks to identify a strong trend, and then based off the rules, it will know whether there's still more room to the either the upside or the downside. As we see this example here, here's how in CGC this strategy worked. A real strong downtrend, and all along the way, strategy 3A generated signals. So it's entirely different from strategy 4 in that it's just looking for a strong, powerful trend, and then it jumps on board. You're going to get all the complete rules to that: entries, exit, stop placement. So 2 great strategies, entirely different for entirely different market environments. But once again, we're not going to stop there. We're going to throw in some extra bonuses. In fact, these are 5 of our best bonuses for the Online Traders Conference. First one is we're going to give you the add-ons from MetaStock for both strategy 4 and 3A. So this means this is roughly a $1,900 value. This means you'll be able to get the up and down signal arrows on the MetaStock platform for any time a signal has been generated. This is a great way to learn and to help you identify these setups. Bonus number 2, you're going to get our full Secrets of a Stock Specialist course. This is a 3-hour video seminar. I spoke some years ago in Denver, Colorado at a conference, and I was the main speaker there, and they recorded the presentation. And so I go into detail about a lot more high probability ways and highly consistent ways in which to trade. So that's bonus number 2. You're going to get that. Bonus number 3, you get the PDF version of my book, Secrets of a Stock Specialist. I go into detail on what it was like to trade during the crash of 1987 on the floor of the stock exchange. It's almost a trade-by-trade account, and you really see what it was like to trade in those days. A comparable day in 1987 would be similar to the market being down about 6,000 or 7,000 points in one day, okay, in today's conditions. Bonus number 4, we're going to take it up a notch with our Secrets 2.0 course. This is a lot more high probability edges, a lot more advanced ways to trade, and this is a nearly $1,000 value. We're also going to throw that in. And then lastly, you're going to get scanner capability on MetaStock to identify the strategy setups. You can scan on the platform for all these setups and all these different conditions for strategy 4 and strategy 3A. These are great bonuses included with strategy 4 and 3A. And this is, I can't think of a better way to take your trading to the next level. So let's break this down. Our Traders Conference discount, normally this would cost you over $4,400 if you contacted us and purchased all these things separately. But here's what we're going to do. For a limited time only, and because of our association with the Online Traders Conference, we're going to drop it down tremendously. We're going to drop it down to less than $300, down to $297. For less than $300, you're going to save over $4,100 and get over 4 decades of experience, of training, of ways in which to really elevate your own trading. 2 full-fledged strategies, 5 extra bonuses, and one last thing I didn't comment on. As you see there at the very bottom of those bullet points, you're also going to get educational correspondence. That's my personal email address. You can contact me whenever you'd like, whether in the middle of the night or in the weekends. I'll answer your email as soon as possible. So if there's any ever doubt or any question about how to trade a strategy or whether you are doing it correctly, you can always contact me via email, and I'll be right there as your personal mentor to answer your question. This is all included for less than $300, $297, okay? You're going to get over 4 decades of experience right there at your fingertips. So really take advantage of this. A year from today, you will have wished you became a member of these courses. Remember, you don't want to sit on this and watch the video that they're going to send out, and then a month later say, you know what, my trading is going nowhere. I continue to lose. I'm going to take up that guy, Steve Primo, and Specialist Trading on their offer for $300. Well, guess what? A couple of weeks from now, it'll probably be all the way back up to over $4,000. So don't sit on this. I'm sure it's going to be lasting for a week or so, but no more than that. After that, it'll go up to that $4,000 price level. So you don't want to miss this great offer. Less than $300, I'm sure many of you lost more than that this past month from your own personal trading. Take your trading into your own hands. Become in charge of your own trading destiny, okay? Here's how to do this. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the pricing and discounts. They help me put together the courses. I would suggest calling them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They'd be more than happy to take your order over the phone or answer any question about pricing or the particular strategies. If you want to sign up online or go for a more informational page, that link you see at the very bottom is the link that will take you to the sign up page online and the information page. I don't believe it's a live link, though. You'll have to copy and paste that onto your browser, okay? I think I just have a few minutes for questions here. Jeff, if that's okay, should I just take them off the board here?
Sure, if you want to. I had a few ready, but if you want to.
No, go ahead. Go ahead.
FSESC in GoToWebinar says, hey, this looks really simple and reproducible time after time. We did have a couple of questions from Dorcas and from one other person. Dorcas wanted to know if it was applicable to the Forex markets. And then the other question was the E-mini market. So I'll let you talk to that. Okay,
great questions. Yes, anywhere there is a trend, it's applicable to. So it doesn't matter whatever market you're trading. I know, as I said, my background is in short-term trading. When I was on the floor, I was in and out of trades in less than a minute sometimes. And I know when I applied this, I was usually using this with intraday trading, sometimes on tick charts, 5-minute bars. But it makes no difference. Now, the only caveat I will say is that, and this is with any trading technique, any strategy, the smaller time frame you go to, and when you go into these kind of sideways markets when really nothing is happening, that's where you're going to get a lot of noise. So it really works best when you see that there's a lot of, volume and there's a lot of movement behind and a lot of trending behind the markets. When we go sometimes in the summer months or even during the middle of the day, if you're intraday trading in the afternoons and nothing happens, it's better to trade this intraday in the beginning and at the end of the day. And at the same time, if you have these strong upward trending stocks or currency pairs, it works great. We have currency pairs traders trading this around the world in Europe, and it's a really great technique. And I really think it'll help you. But as always, please paper trade this first. Don't just jump in, okay? Paper trade first.
Dr. Anil would like to know if you prefer an hourly chart.
It makes no difference. And once again, I don't want to say what I use because that goes against our entire principles. We want you to decide. We want to share with you the concept and the technique, and then have you experiment. We have some traders and students that swear by using this on a daily time frame. We have other traders who swear by using this on a 5-minute time frame. So which one is right and which one is wrong? There's no such thing. It's whatever makes you feel the most comfortable.
This is great stuff.
Yeah, really simple. Man. And like I said, it's the simple things that work.
All right. Let's see. Does this work with monthly call put options?
Yes, I'm not an option trader per se. I used to trade options some 40 years ago. I first started trading options, but I stopped a good 30 years ago. So I don't have an experience trading this with options. But if you've got a strong enough trend, I see why not. The only thing is that, remember, since it's based on buying at a sort of a breakout above the last short-term pivot high, you may have to pay higher for these option premiums. So you have to take that in consideration.
Sammy asks, is the 50 simple moving average strong enough to rely on?
Oh, yeah. I mean, once again, we want all our students to do the research and the due diligence. Don't just take my word for it. I experiment with it. And I'm sure you'll be find out like most students the way I did too, because when my mentors taught me this, I said the same thing. I said, why can't I use an exponential? Why not a 30 period moving average? Why not a 20 period or a 10? And then going through all the different weighted, non-weighted moving averages, EMAs, I came back to the 50 is the best because it just really covers the entire overall trend. But feel free to experiment with it. If you want to go to a smaller or higher time frame, it's completely up to you. But remember, the concept is if price is above, then you should only have a buyer's perspective. If price is below, you have a seller's. It doesn't generate the signal.
Silver wants to know if you mainly trade stocks then.
Personally, no. I mainly trade E-minis. I came from a mainly trading stock, but now because of my time restrictions and because I'm giving presentations like this, I kind of jump into trading when I can and when I have the time, and I like to go back to my basic format of intraday trading the E-minis. But once again, it doesn't matter. We have people that trade this on stocks. We have people that trade this on Bitcoin. Imagine when Bitcoin is screaming to the upside, how well this would work for you.
What stochastic settings are you using? Is a question Soldil has.
Well, here's the deal. I just, I went to on the MetaStock platform, just use the standard stochastic indicator. Didn't even look at the settings, just use the basic format, the default settings.
1233 is what we use.
So that's it. I didn't alter anything. And I don't want you to alter anything because remember, keep it simple. There's nothing really you have to alter.
All right. And then one last comment. Long says, your presentation is really appreciated. Actually, I'm sorry, I read that wrong. Your great presentation is appreciated.
Well, I appreciate all the questions and I appreciate that last one, but I just want the attendees to see that we really, our sole purpose is simply to educate you, and we really are sincere in wanting to educate you, because once we've educated you, I mean, you don't have to stick around. We want you to go on your own. So hopefully I've educated you a little bit today.
I lied. One last question I think we can squeeze in. Ronit wants to know, how does the overall market direction or fundamental analysis affect your signals?
Well, be honest with you, and I stopped looking at fundamental analysis 4 decades ago. And if I'm still here, then I'm living proof that you really don't need it. But having said that, it's up to you. If you want to use fundamental analysis, that's fine. I stopped looking at earnings. I stopped looking at fundamental reports, at jobless claims, because it didn't work for me 4 decades ago. So I don't think it's about to start working for me today. And if I'm living proof that you can trade without it, then it's your decision. I would never tell anyone not to use it, but I'm living proof that you really don't need it. I only look at price and the overall trend and some other tools as well.
All right. A bunch more thank yous. I don't think we'll take the time to read those out, but Soli, Silver, Dr. Anil, thank you. I'm glad you're enjoying today's event. Thank you, Steve. That was great. I appreciate it.
Thank you so much. Thanks, Jeff, and thanks to everyone. I really appreciate and have the honor of speaking for you. Have a great day.
Good to have you. See you later. All right. Yes. One comment, Suman from YouTube says, MetaStock is the best software. And I like especially the RMO and the Vince Fora trading system. Sermon, thanks for using MetaStock. We appreciate that. So let me go ahead and kind of get switched over just a second here. Make me the presenter. And I will show my screen. I do want to talk about, hey, Scott Brown.
Oh.
Give me just a second. We're almost ready for you. Oh, all right. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event today. Such a great magazine. I've been reading it since I started my employment here back in like 1997 or something like that. Good supporters of MetaStock, good supporters of both our Online Traders Summit and the conference that we're doing this week. Just for registering, you'll get a free copy. So if you're watching on YouTube, Greg Lewis is going to put in a link to register for the sessions. And that way you can get a free copy of the magazine. If you are watching on GoToWebinar, you're already registered, so don't worry about that. I do want to mention our premium classes that we're doing on Thursday. This is going to basically be 3 90-minute sessions from Steve Bigalow, who talked earlier. Great presenter, Jeff Tompkins and Vince Fora. These guys do a great job. These particular classes are going to spend an hour and a half talking about, well, the top-ranked candlestick signals, finding high probability trades, using trend lines and technical formations. These guys are awesome, and you'll really want to come to this. It's only $450. You can sign up at 800-882-3040. You can visit online at metastock.com/saleschat, or you can also go to metastock.com/traders-conference-prime. But just give us a call, 800-882-3040. We'll be happy to kind of get you in that session. Last time we did the premium sessions. They were amazing. You don't want to miss them. We'll see you there. The next guest that we have today is a good friend of mine, a gentleman by the name of Scott Brown. Scott, I've known as long as he's worked here at MetaStock. He's now the owner of MetaStock. He is a better presenter than I am, more handsome, and also just one of the nicest guys. I absolutely love Scott. It's good to have you in here, Scott. I'm going to get out of your way.
Oh, I just want to make sure. Can you hear me, Jeff?
We can hear you, and we can see you.
Okay, great. I am excited to be here. Jeff Gibby, we've got to give him a huge thanks for this. He has absolutely worked so hard. The team at MetaStock has worked so hard to ensure that we have an amazing event today. And as always, we do. He gets a lineup of amazing speakers. Besides myself, I'm at the bottom for sure. And just really thankful for him, Greg Lewis, Kelly Clement, Hunter Smith, so many great people that have put this together. So let me click on here. I'm going to show my screen and make sure you guys can see that. I assume you can see my screen.
We can see it.
So, okay, great. Let's go ahead and get this started. So a little bit about myself, as my name's Scott Brown, and I've been around for a very long time inside of MetaStock, over 20 years. MetaStock has been around for well over 40 years, longer than Microsoft, which is so crazy to say, but it's the truth. And when we've been around for so long, we've created technology that has not existed, inside of charting software. So, it's initially, we're going to talk about the MetaStock forecaster and what the forecaster can do for you. But the amazing thing is the story behind this, and I'll share it with you. And there's a programmer named Ken Hunt, and I'm sure like many of you out there, you've worked for big companies that they just are so big that they can't innovate that well. And that's where Ken was. And he was one of the first people to ever put backtesting in software. And so, I mean, he's been around MetaStock for well over 30 years. And then after a while, it became very stagnant with this big company, and he chose to leave. When I chose to buy MetaStock, we used to get together for lunch every few months. And I finally told him, I said, hey, look, Ken, I'm buying MetaStock. Let's get the band back together. And so we did. And Ken Hunt worked on this for over 3 years. And then he came back into MetaStock, and we made it even better. And so that's really what you're going to look at today, is this MetaStock forecaster. So what does it do? It analyzes price action after past events to determine the probabilities of where future price action is going to go. It answers that question: where are prices most likely to be in the future after an indicator event occurs? An event can be anything, including divergences, overbought, oversold, when an indicator has something like that. Inside the MetaStock forecaster, you're going to be able to draw your own patterns, copy patterns directly from the chart, rank recognized events, new included event recognizers, and really draw a cloud that will show you the percentage if it's supposed to go in which direction in the future. Technical analysis emphasizes the past. And so when Ken was creating this, he wanted something that emphasizes the future. There's complex statistics, mathematics, and probability analysis that are blended into simple, easy to understand probability clouds. And so there's things in there that we really want to look at. When we get inside of the forecaster, you're really going to see predefined event recognizers. We have over 70 of them now, events that you can select from, and it will automatically display those event recognizers and when that event occurs right on your chart. So for example, let's look at this. We're looking at a moving average, 50 cross down in Rio Tinto. And as you can see, these little yellow triangles. These little yellow triangles, they show you when an event occurred with that 50 cross down of a moving average. And then what you can do is actually click on that, and it will draw an actual probability map into the future. And that probability map, then it will show you based right here on the probability scale. The brighter the color, the more the probability for where that price action may go into the future. Right here, you can also show that you can do a map focus. You can do it in 3 time frames. You can do a 30-day, 90-day, and 180-day. Now, these are static images, so they won't change. So you can go back and click on any of these triangles, and that same probability cloud will be there that displayed the very first day it was open. Now, on your left, you're going to see different recognized events. And as you can see, we've selected the moving average 50 crosstown. On the right side, you're going to see a detailed statistical report with specific probabilities and margin of error. And we'll get more into that as I show you many different examples. This is so cool, this MetaStock forecaster, that we actually have a patent on this technology. Now, right here, this is where we're showing price, volume, and event markers. If you click on the past performance, you actually bring up a separate cloud. Now, a lot of people were asking for this because, you know, if the one side of the image is a static image and it always stays the same, but every single day or every, you know, during the day, you're getting a new bar, that cloud could actually update. So it's almost like an artificial intelligence as it's getting more and more data in there. That cloud is evolving and showing you whether you're trading this in an hour chart or a daily chart, where that cloud has an opportunity to go. And so on this, you can see here, if we're looking at this in a daily bar, this is after 7 daily bars into the future, 14 daily bars, 30, 60, 90, and 180 days. And it shows you, wow, well, look at this. This little purple cloud here, kind of, you know, maybe 4 or 5 months into the future is showing you that, hey, you have an opportunity that maybe it might go up Adobe systems, you know, 15%. Now, who would that really help? If you're an individual that's going to trade options, wouldn't that be great to know? If you're someone that likes to trade the CCI over bot, that you could look into the future and say, hey, in 4 months from now, I think there's an opportunity that it goes 15% up. Your call options might be really cheap that far out. And if it goes through that, obviously it's an opportunity for you to be successful. Now, here's another one. We're looking at Adobe systems, and this is using 15 of the 60 events. This is clear back in 2013, and we'll show you a lot more updated ones. But you click on the cloud here, and it goes right up here into the future. And remember, the brighter it is, the bigger the opportunity that you might have on it. You can go back and look at any of these event markers, and they'll show you historical cloud formations. And so that's really cool. As you can see, the price actually followed that cloud. Now, another thing you can do here is if you're a user of MetaStock and you have open a chart inside of MetaStock, all you have to do is just right click on the chart, select forecaster, and it will open up the forecaster for you with that specific security that you're already analyzing. We also have all those event markers as scans in the Explorer. Now, what does that do for you? It does a lot, because if you are a big fan, let's say, of that moving average 200 crosstown, well, we could scan the whole market and find out different event markers that have occurred today, and you could actually then bring those up on the forecaster, analyze those, and potentially have a trade opportunity. So it cuts a lot of time out for you. We have a bunch of new rankings in the forecaster, as you can see right there. So we'll go through those, and then you can draw your own patterns in the forecaster. I'll show you how to do that. You can copy patterns from the chart. But really what I want to do is I want to go in here and I want to show you different examples of how this works. So let's forget about being in the PowerPoint and let's jump right into MetaStock. So as you can see here, I'm looking just initially at the NASDAQ 100. I'm looking at Apple, and I'm also looking at crude oil. And you can see here that, wow, look at crude oil. It's bouncing up. We have the NASDAQ 100, a little bit of, tough choppiness here in February, March. And then also Apple. Let's say I want to come on the NASDAQ 100, the actual index. And if I come down here and I right click and I go to Forecaster and I click on that, it will automatically bring up the NASDAQ 100 index, okay? And now what we're looking at is a price chart that is the NASDAQ 100 index. And down here, one of the things I want to do is let's give you an overview of, once you get to try the Forecaster, kind of how this works. So right here in the Recognizer library, this is a tab at the very top left. And as you can see, you can come down here and you can scroll through many of these different recognizers. I'm going to try and get rid of this. There we go. Well, I don't want to do that. Oh, we're good. Okay, so right here, you can go through all of these and you can see that it'll show you the name, it'll show you a pattern, if it's a pattern, and also a description of these. So if you don't know what the CCI overbought is, this is also very much an educational tool. And you can come in here and say, oh, the overbought is actually the 14-period CCI, which is the Commodity Channel Index. It crosses below 100 out of an overbought condition on higher than average volume. Now, you can enable just specific recognizers in here, or you can select all of them. And the way that we have it right now is I've selected all of them. Now, down here in the lower left corner, you can see all of the specific recognizers that are there. Now, the problem is if you're a trader, you're sitting there going, well, you've given me a lot of data, but how do I sort through that data to make it more usable? So this is what we do. We come in here and we say, well, I could sort this by highest profit potential. I could sort it by highest profit potential long or short, most accurate current forecast, most pronounced current breakout, the most distinct forecast cloud, most recent events, most events, or recognizer name. The one I like to use a lot is the most accurate current forecast. And let's kind of take a look at these and show you kind of how these work. Let me have this over here. I'm trying to, there we go. We'll put it on this other side. Because over here, I want to select some things and we want to go, let's say 30 bars. And what we want to do is with those 30 bars is we want to come down here and we want to be specific. Let me move this over here. I'm new to GoTo, so trying to move it around. Oh, there we go. I think I figured it out. There we go. Sorry about that, everyone. And we will push this down. There we go. Sorry about that. Okay, so what we're looking at right here is all the most accurate current forecasts. And I can come down here, and the problem is if you have only 5 events or less, those 5 events, it won't draw a cloud on the chart. So for example, this one is just 5 bars or more up. So if you have 5 consecutive bars that go up, it will absolutely put an event marker on your chart. And so if we come in here and say, okay, well, back here on this date, if we wanted to draw one, we come here on March 21st, 2019, you can see that there's a cloud and we selected 30 bars. That on that day, you can see how it kind of rode it up And then it thought it would drop down a little bit. It didn't go right through it, you know, but it was quite close. You can actually then change it to, let's say, a 90 bar. Wow, look at that. So clear back here on March 21st, there was a trend it thought was going to go up. And even though it went down back here, you know, around June 3rd, it continued to climb through those 90 days. And then you can come up here and see really far into the future, 180 bars. And it was pretty solid that finding its way up. Now we can come back here and change that to a 30-day bar. And then what we can do is let's enlarge it again. And let's read a little bit about the statistics of this. So every time you have one of these specific events come up, you can read over here in the bottom right-hand corner a lot about the results for the statistical report. It says, look, the event occurs 20 times between April 6, 2016 and April 5th, 2021. The first event occurred May 31st, 2016. The last one was Tuesday, December 1st, 2020. On average, the event occurs 59.7 price bars. And then we can drop down here and it shows you really a lot of information. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be 0.58% higher, with a standard deviation of 0.0117. The statistical margin of error is approximately 22%. So the margin of error that you're going to see will go down with the more specific event markers you have. So let's try and find one with a lot more in it. So like here's one, the MACD negative divergence. It actually occurs 43 times. And it shows you down here that the price appears, you know, the margin of error is only 15%. And you can come in here and say, well, what's going on? Let's take a look right here. Let's start with the 90 bar. Wow. So that yellow shows an above 90 probability scale, and it goes directly right through it, right? And you can see that bright pink and red there comes down, and then it did it again, you know, almost about 80 days into the future, and it's bright red there, and it called it pretty accurate because there's a price bar right there. Now, if it's a light pink or blue, yeah, you only have 40 to 50% probability, but when it's bright red, you know, obviously there's a more odds of probability. Does that mean this is right all the time? Absolutely not. And I want to be very clear here. This is just very much another analytics tool for you to use in your trading. Nothing's perfect. And obviously as a trader, you know that, because if you did, you wouldn't be tuning in today trying to learn more about this. So it's super important that obviously you realize that. Now, it's really interesting is right there where my pointer is, there's the forecast cloud. And what this is showing us is that every single day when a new bar comes in, this cloud will change. And it will show you what the current active position is for the forecast cloud moving into the future. Whereas this one right here, this doesn't change, okay? So when you click on something, you know, there's another one. Wow, back on January 5th, 90 days into the future, you had a red dot right there. And the price has gone right through that. Again, that's going to be very good to know if you're an options trader. Now, let's look at something else here. So here, that's the most accurate current forecast. Let's look at the most pronounced breakouts, right? So what this is saying is a CCI, it's only occurred 6 times. I like to look at things that have occurred at least 15 times. Here's an indicator that I actually created in Singapore, and it's called Singapore, anyway, when I was there. And you can kind of click it. It's actually a pattern that I've created. And if you want to see what the pattern looks like, we can go into the recognizer library. come down here to Singapore, and you can see that's exactly what my pattern looks like there. We come back out here and we say, okay, well, let's look at the most current one in 90 bars. Wow, wow. So it was bright yellow here. It goes through there. It didn't call this top right here, but then look at that. It kind of came through right through the pinkish cloud there. So that's pretty cool. Another one that you can look at is most distinct forecast cloud. Let's take some of these and see if we can find one. So like if right here, you know, what we do is you can see one that has there we want to look at one, see if we can find one that has a few more breakouts, 12. Let's see. Well, I don't want to look at this one because it didn't occur enough. So mathematically and statistically speaking, I really don't like it. If you want to look at the most recent events, you can click on that one. Here's a candlestick rising window for the NASDAQ 100. And it says this is where they think it's going to go in the next 30 bars. Okay. And then the most events. That's a great one to look at because you're looking at one, let's say here, 184 times on a 52 weekly high. And you can come here to the end and say, well, where do we think this is going to go? It was based on a 52-week high and it continued to go up so high. But look, you know what I mean? It dropped there and it didn't really go directly into it. So as you can tell, it's not always going to be perfect, but what you're looking at is pretty neat stuff. Let's see how this works. I know there's different people out there, and this is the euro dollar. And so let's take a look at that, and let's take a look at maybe most accurate current forecast or whatever you want to look at. And we'll look at a 30 bar, and this is on the RMO. And as we click on these, you say, oh, okay, there's a 30 bar. How did it do with the 90 bar? Historically, okay. Now let's see how it's doing on the most current ones. Is it finding these specific downward trends, or is it just going up? Well, I didn't want to do that. Let me go back here, and I'm going to select this most recent event. There you go. So it did really well, probably those first 10 bars, and it felt like it was going to creep up. But remember, that is a faint pinkish purple one. And so the probability is only 50%. It kind of aligns with it, but you know, nothing too amazing with that. You can come in here and say, well, let's look at the most events. So here's one, a trend or a pattern that I created in Singapore, also called Singapore 1. Let's look at the most recent event. And it says, look, it went down, but it feels like there might be a 60% chance for it to go back up over here, over 90 bars, over 30 bars. You can see there, it's interesting. It kind of splits there and says it could remain stagnant, or there's this very faint, maybe 30% chance on the upside that's there. This one is for those that love to trade the E-mini, okay? Now, with the E-mini, you can see here, and I know there's a lot of you that like to trade it. We'll come in here to the most accurate one, and you can see here, you can choose all sorts of different recognizers that are out there. And you can come in here and say, well, I want to look at, let's say, the MACD cross down, and I'm going to look at it in a 30 bar, and then we'll go all the way to 180 bar. So the first one there is a 30 bar. Next one's a 90 bar. Wow, look at those. So it's tracking it pretty well. Then let's look at 6 months. It's saying, wow, look, 101 future days out there to 125. It feels like it may be getting it around 3,900. So, it'll be interesting how that tracks. It kind of has broken out of that bright red, and we'll see where it moves, you know, into the future. But this is a way that you can kind of track that. The next one is Amazon that we're looking at. Let me show you something really cool in here. How many of you out there will look at a specific trade, right? And you will see exactly the bars that you want, and you're like, oh man, that's the perfect trade setup. And it's like, okay, so that perfect trade setup, let's see if we can find something like it. And a lot of people like to find, let's say, maybe 4 or 5 bars in a row that are going up consistently. And let's just say that we want to try some of these. So we will actually create a specific pattern for you. This type of technology does not exist, you know, out on the open market there. So if I come up here and click on user defined pattern select, I can come in here and say, well, I want to highlight these 4 or 5 bars right there. I think those 5 bars right there are a great entry pattern to get inside of, you know, a great trade. So what I do is I highlight them, and it says, do you want to capture the selected price formation as a user-defined pattern? So I come in here and I select yes. And the MetaStock forecaster will automatically create the pattern for you, do all the creation of the language, and it's just automatically done. And we can come in here and say, let's go Traders Conference 2021. Oh, I need to learn how to spell there. There we go. Traders Conference 2021. Now, you can come in here and go invert pattern. You can reverse the pattern. Or just leave it obviously the same. And so what we're looking at is 5 bars there. Our cloud focus, let's go 30 bars. We're going to save that. And now let's just sort on that specific chart, just the Traders Conference. So we're going to disable all of those specific event markers, and we're only going to select traders, and we're going to rescan the selected analyses. And now it will only search on Amazon those specific patterns to the Traders Conference 2021 that I just selected. So as you come in here, you can see, okay, back on February 26th, there was a 78% match on my specific pattern. It will only bring up the match if it's 75% or higher. And so now I can come on here. Now look at this. This event has occurred 118 times down here on the bottom. So statistically, it says 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.5% higher with the standard deviation of 0.0449. The statistical margin of error is 9%. And I can come in here and say, oh, okay, statistically speaking, the opportunity for these to hit might be a little bit better because there's so many of those event markers. But again, look at this. It's gone sideways, and right there, it missed out on that opportunity. And so I want to be very clear, you know, it's not always going to be correct, okay? So that's really cool, but the technology is cool is what I'm getting at. You can actually create and highlight specific patterns on your chart based on a pattern that you selected on the price bars. And you're not going to find that anywhere out there on specific charting softwares besides MetaStock, the ones that obviously we use and what we have, okay? So another really cool thing, why we're talking about this you know, and what we did, how we just drew our own and specific pattern based on price bars on the chart, you can also come in here and draw your own pattern. What if I told you you could create your own specific pattern by using your mouse on your keyboard, you know, with your computer? I think you'd be very, very pleasantly surprised. I think you'd be thrilled about it because that really doesn't exist. So we're just going to name this Traders Conference 1. I can take my mouse and I can draw anything I want. So let's say that you want a double top. Oh, that is the worst looking double top ever. So I can clear the pattern, but you get the idea, right? You can do a double pattern there or a double top. We can click save. And now that specific pattern is created. And I'll just go down here to the bottom. Okay, so right there you can see the Traders Conference. And now let's scan the selected analysis on it and see if we get anything with the double top. So I don't have any matches that are 75% or higher based on my double top, my really ugly double top. You could come in here and say, well, I like a pattern that's kind of going up, you know, like this and continually moving up. So let's just name this A. Feels like we're in the yellow pages again, trying to get at the top of the list. Let's save that and let's see if anything comes up on that. There are. We actually get 27 of those, and you can come in here and be like, well, let's see how it works. You can go ahead and click on one of those patterns, and you can see how that moves into the future. Okay. Now, another thing I want to show you in my limited time is I can go inside of MetaStock, and I've been in Forecaster the whole time, but we can go into the Explorer right here. And this is what's super, super cool. We can come in here, let's look at our explorations up top. And we can scroll down and we can find the Forecaster ones right here. So we can select any one of these that we like. And so let's say we come in here and we say, let's look at the CCI overbought. Let's come in here and let's look at the, as you can tell, we have data from all over the world. So let's come in here and let's actually select a specific indice. Let's go below that. There we go. Let's do the let's do the NASDAQ 100. We're going to start that exploration. And what it's telling us is it's going to scan the whole NASDAQ 100 and look specifically for the Forecaster's CCI overbought. My internet here is slow. I'm not in the office, so we'll get that moving. And really what's great about the Forecaster, it's giving you the opportunity to scan and look at these to really save you a lot of time into the future. And as you can tell, we're about halfway done, and it's rejected 100% of them. So as you can tell, which is great as a trader, you don't want it to accept everything because then you're right back where you started, where you don't feel confident in this because it's giving back too many results. And so, you know, it may not have any. I'm just showing you really great workflows when you're using this, you know, specific technology with the Forecaster. Oh, great. Well, as you can tell, they've all been rejected, but you get the idea what you can do is use those when they come out and you can get the results. Now, one of the last things I want to do is I want to look here at Microsoft. And this is Microsoft, we all know, and come in here and we can say, well, one of the process recognizers we want to look at maybe is the most pronounced current breakout. And we'll look at the triple witching event. And let's go ahead and click on the latest one, and we'll go 30 bars first. Let's see how we think Microsoft will do here in the future. You see the 30 bars, 90 bars. So it really feels like using the triple witching into the future, there's a lot of opportunity on the upside. So if you were a fan of the triple witching, what that would do is build confidence on where it's going. Let's look at one that's happened in 2019, and that's 180 bars. It did a pretty good job of maintaining the line through it. There was a little bit of a variant up top and on the bottom, but really what it does is it shows you the separate opportunities that forecast cloud provides. Remember, the brighter the color, the bigger the probability it'll go through that. And as you can see, the yellow is the highest there is. And so it really had that opportunity to push through that, and then the bright red right there. The forecaster, really what we've seen is a lot of traders really like it, but you have to understand it. We have a lot of support on it. We have a lot of videos right on our YouTube page. If you go into, this is a great resource, and you guys need to know this anyway. So if you come up here to youtube.com/MetaStock, there is so much information about the forecaster up here. It's our MetaStock YouTube page, and you will find so much information about the forecaster, that it could continually help you and push things forward. But I'm confident with the forecaster, with the clouds, the specific recognizers, these events that you have, that you really do have a great opportunity here to use technology that nobody else has. And by using this technology and seeing it into the future, by testing it, using it with paper trading, just as Steve was saying in the last presentation, you need to work through it. The worst thing you could do is just jump on it and dump money into it. You really need to test it and look through it, be comfortable and confident in it. Because I think what a lot of people do, they're just looking for ways to just jump in, and they think it's so simple, and it's not. And I know with MetaStock, a tool that has been around for over 40 years, we are this industry standard out there for this industry. And it's very important that you're using the best tools, and MetaStock provides those tools, for you. And it's really important that as you use those tools, you get confidence in it. I mean, it's amazing that we are hosting 24 different speakers over the next 3 days that use MetaStock, that will, get their different trading strategies inside of MetaStock. There's not too many software programs out there that can say that can say, hey, look, we're going to do a conference for 3 straight days, and everyone pretty much is using MetaStock out there. And so it's really great to see. This is a great opportunity. It's free, to listen to this for the next 3 days. And so I want you to be able to try out MetaStock. And so let's discuss how you can do that. There's 2 different types of MetaStock that you can use. One of them is daily charts, MetaStock DC, or MetaStock RT, which is MetaStock real time. And what we're offering is a great deal. Are you kidding me? It's 3 months for the price of 1. So you can test this out for 3 months, seeing, I've only gone over one little tool of MetaStock, and that's the forecaster. But we have so much in there. We have the best charting out there. We have back testing in there. We have MetaStock explorations where you can scan the market against any specific indicators. We have the forecaster, which I just used. We have the option watch, the quote center. There is so much more to MetaStock than even our previous version. If you're an individual that hasn't used MetaStock in a year, 5 years, 7 years, you're going to see that MetaStock is a different program, and we've added so much more technology in it to help you. I got to tell you, when this pandemic occurred, I was really nervous about it, and even before that. And it's amazing the technology we've provided. MetaStock over the last year, our revenue has jumped a lot. And it's because that traders want to trade and they want the best tools. And so what are they using? They're using MetaStock. We've had the biggest gain in revenue in probably over 20 years. So it's important that if you're not using the latest version of MetaStock or not using MetaStock, you can absolutely get this. Call 1-800-882-3040, or you can see the different links there. Just call us up or chat in with us off of our website, and we can absolutely help you get MetaStock. Another important thing that really sets us apart from any of our competition, we have great free support. Our support, our average employee has been with us over 13 years. So when you call into MetaStock, you're dealing with someone that knows what they're talking about and can really help you on the support side. And so that's included with that 3-for-1. You're going to get the best data, the best software, and the opportunity to really, excel in your trades. And so, I just want you to take advantage of this offer. Again, thanks all the team at MetaStock for putting together such a wonderful conference. And that's what I have. I know my time's up, and I guess, Jeff, we'll just go to questions if there are any. Are you there, Jeff?
I am,
Okay.
actually. How are you doing, Scott?
I'm doing well. Do you like the picture in the background?
Yeah, I was going to ask. I think our biggest questions are about that picture.
It should be. It should be. We got that in the Dominican Republic on one of the local artists. And I love that picture because then it takes me away to the beach again.
Okay, we do have a couple. We don't have a lot of questions. Let's see. Here's one from Sammy. He says, is the logarithmic part of MetaStock technical analysis?
Say that again, Jeff.
I actually, Sammy, I'm going to actually ask you to restate your question. I don't understand it. And so please go ahead and give us. We do have, Michael said, this is fascinating. Good morning from New Zealand.
Oh, wow. Good morning to you. That's awesome.
Sammy says, I love MetaStock. Ron was hoping you could go through the cost of each again.
Absolutely. Go ahead, Jeff.
And I can cover that if you'd like me to. I could go through
you're probably a little bit better at it than I am.
Okay, all right. Well, then that's the end.
Okay.
We did have a comment from this guy at MetaStock in YouTube that said, if you have any questions for my boss, the very handsome Scott Brown, please ask him here.
I love it. All
right.
Seriously though, Jeff, you did a great job. This is a great conference. You have the biggest names out there, and people are going to learn a lot from it. So great job.
Perfect. Well, thank you, Scott. I know you're joining us from spring break.
That's
I
right.
hope you enjoy your time with the family. And thanks for coming in and spending a little bit of time with us.
Thanks, Jeff. Appreciate you.
All right. Thank you.
Okay,
Let me go ahead. I'm going to eject you too. Don't leave.
Perfect.
All right. We find that if I eject people, we shut down the conference less frequently than if I don't eject people. So in any case, that was Scott Brown, the owner of MetaStock. Really good to see him and have him kind of come in and talk to us. Let me go ahead and share my screen real quick. We do have a few extra minutes. And so what I would like to do is actually kind of spend a little bit of time just showing you some of the things that maybe I normally don't have the time to do. It's funny, today it seems like the sessions are going well, and it seems like everybody's running under time. So in any case, I can talk for days. So, for those of you that are in regard to the question about the extended trial for MetaStock, let me kind of talk a little bit about what that is, and I'm just going to kind of navigate up the page here for you. Basically, we'll go to www.metastock.com/traders-summit 3-for-1. Okay, that should kind of bring us up to the page. There's a couple of videos up here where we talk a little bit about scanning, expert advisor, the system tester, and even the forecaster, and some of the new features like the quote center, the option scope, and MetaStock. We basically, though, to kind of get to the chase, we have two different versions of MetaStock. So we have a real-time version of MetaStock and a DC version of MetaStock. Really, RT just stands for real time. It's the real time version of MetaStock. DC stands for daily charts. And that's really kind of primarily the difference when you're talking about MetaStock. You can either go real time or you can go end of day. Okay. With real time, we do power our all of our data through Refinitive's data collection. But with real time, we actually have another product that we also power that's called Zenith. And it's a product that Refinitiv spent over $1 billion on. And basically, it allows you to get all of their really fancy fundamentals and news. And if you like Refinitiv news, you're going to love the Zenith product. It's only for individual traders because they sell it to their own institutional traders. But it's very, very similar to a product you would get if you were a hedge fund or a bank and subscribing to it. The cost for the real-time version of MetaStock is $250 per month. So it's $150 for that premium data feed, as well as $100 for MetaStock real-time. Okay, and that's it. If you do the end-of-day version of the program, everything that Scott just showed you, plus all the scanning we've been talking about, the expert advisors, everything is available at $69 per month. So you pay $69, and we'll basically, the offer that we're doing here, we know we've been rated #1 in our price category for, like ever, 28 years in a row now. And so what we're going to do is we're going to let you try out the software. If you pay for a month, we're going to give you a second and a third month for free. So that basically allows you to get access to MetaStock. It allows you to get access to all of the data that you want, everything that you need kind of to power the software. And we'll even have somebody help you install it. We call it our white glove installation support. We'll offer you unlimited access to all of our support representatives that are here in Salt Lake City. Half of them are here in the office and the other half are working at home because of COVID. But we have an A/B rotation that we're doing. But so as a bottom line, really, $69 per month. You can actually do $69 for the next 3 months, which means your cost per month is going to be just over $20 per month. If it's helpful for you, if it helps you identify better trades, you're going to keep subscribing to it, and you'll be one of our a member of our customer family. If you're not happy with it, well, then you can cancel. But we'll do everything we can on our side to make sure you're happy, including helping you make sure everything's installed and helping you make sure how everything runs. So we still have a few extra minutes before we kind of transition into MetaStock. One of the biggest questions that I get is kind of how do you run scanning? And so now that we do have a bit of extra time, I'll just talk about it and kind of show you one of the more powerful tools in MetaStock and how it works. So let me go ahead and go back into MetaStock right here. Let's go ahead and just kind of open up what is our Power Console program. So right here, we've got charting. We've got a quote screen. We've got the scanner, which is, we call it the Explorer. Somebody asked me why we call it the Explorer. I actually don't know, but I hypothesize that maybe, just maybe, Steve Akalis, the founder of our company, really, really liked Indiana Jones. Just a guess. We've got the system tester, and obviously Scott just spent a whole bunch of time on the forecaster. So for me, though, one of the things I love to show is the scanner, how well it works, and how easy it is to go in and identify patterns in the market. So we'll just kind of go through this Doji Dynamite scan again. Here you go. If I actually hover over, it'll tell me the patterns that we're looking for. So in this particular case, I'm going to be looking for Doji at the top or Doji best friend, the left-right bullish combos, the left-right bearish combos, and et cetera, et cetera, et cetera. We do have all of Steve's, all of Rick's patterns actually coded in here. So if you get their add-ons, you can do it. And one of the things that's been very, very helpful for us as a company is we do get our data, like I said just a minute ago, from Refinitiv. So right now, you'll notice this number right here that I'm about to point at. I could scan over 304,000 issues. 304,000. No, actually, this list looks like it's been a little bit modified. We do cover just about 200 different global exchanges. Just about anything that you want, you'll be able to scan. Whether you're in India, we've had a lot of people mention India now. We've had a lot of people from London. We do have a lot of customers from Australia. We even had somebody join us from Melbourne. The thing is you can use MetaStock in your markets because of the partnership that we have with Refinitiv. So if I want to run a real quick scan right here, I'm just going to choose this Doji Dynamite scan. I'm going to choose the S&P 500, and we'll just go ahead and run through it. So again, you can choose whatever markets that you want, but very, very quickly, it's going to go through and identify, we ran this a little bit earlier, out of the 500 S&P 500 stocks, exactly which ones have a buy signal or a sell signal today. And, you know, I love MetaStock. I've worked here for so long now. I love the ability to go in and see the forecaster. I love the commentary and how it kind of displays everything and shows it to you in English. But for me, the ability to go through like 4,500 optionable stocks and just narrow in on the focus on the ones that I'm interested in today, ignore all the garbage that exists and just kind of focus on what works. It's definitely my favorite feature. So if I was looking here at a good Doji best friend pattern, as Steve talked about before, a Doji best friend is just a Doji followed by a gap up. It's a scan I love to run. If I was just looking for that pattern, instead of looking at 500 stocks to find it, it's a very simple pattern. I could look at all 500 stocks, but in this case, I could look at Johnson Central Intelligence and Nelson Holdings. Those two stocks would be the ones that have an opportunity to buy today. And that's it. So we could go ahead and open those up. We could look at the commentary, et cetera, et cetera, et cetera. But I think this is one of the reasons that, you know, for so many years in a row, the MetaStock program has been rated #1 in its price category. Just does such a great job of helping identify the right trades at the right time. We can open up the commentary. It can explain it to us. You know, it's just, I use MetaStock to trade every time I place a trade. I was going to say every day, but I don't know that I trade every day. I'm getting closer though. But when I'm going to look for trades, definitely wouldn't be able to find some of the opportunities that I've had over the last year or so without the scanner. So I absolutely love that tool. So in any case, that's a good segue for us to kind of talk a little bit about that. Again, the offer that we're doing here, I need to update this slide because it's a little bit out of date. We just won the award again. But, you know, MetaStock is such a great tool. There's a reason it's been rated for more than 2 decades. Going on 3 decades now. It's the best software in its program. Those are tools that help you scan the markets and find opportunities, test your trading ideas. We have a really good system tester that we'll talk a little bit more about tomorrow. The forecaster, which Scott just did a really good job showing. The commentary, the signals, the alerts, you know, all starting at, if you're here in the US, it's actually $69 a month with the new options data that they include with it. You can get that extended trial at metastock.com/traders-summit 3-for-1. You can give us a call at 800-882-3040, and we'd be happy to help you set up. And if you have questions that we kind of missed or we didn't answer, I'm sorry we missed them, but you can give us a call, 800-882-3040, and we'll be happy to answer those for them. You can also visit us online by chat at metastock.com/saleschat. So give it a try. I'm sure you'll enjoy it. It's certainly a software that I've been proud to represent myself for decades now. So in any case, hopefully that answers your question about what the price is, Ron. Sammy says, I'd love to see MetaStock in Saudi. Actually, one of my first business trips was down to Saudi Arabia, and I spent 2 weeks down there. So there you go. I hear that the link is not active. I was able to get there, Ron. So let me see. metastock.com/traders summit 3-for-1. So they are active. It's right here. If you aren't able to get there, though, just give us a call, 800-882-3040. I appreciate your trying. Michael says, if you haven't tried MetaStock, then do yourself a favor and try it. They have a money back. With this subscription, we don't offer a money back guarantee, but we'll let you try it for 3 months for $60. So, Michael, thanks for using MetaStock. I know you've been using MetaStock for a really long time now. I do appreciate that too. So let me kind of take a look at the attendee list. We do have our next presenter, which is good. How about then we do have, it's almost time to bring her on. So let's go ahead and we will talk about stocks and commodities for a minute, our sponsor for today's event. As long as I've worked here at MetaStock, which I just said is decades now, I've been reading stocks and commodities. They do a great job of actually helping us promote and get people here at the conference. They're a great group of people to work with. I really like them. As part of your free copy that you'll get for just really registering, you're going to have access to their 17,000 article trading article archive. They've been publishing data and articles on stocks and on technical analysis since 1982. You'll get a free copy. You just have to register today. If you're in GoToWebinar, you've already registered, so thank you. If you're on YouTube, Greg Lewis is actually going to put in the link to register right now. Okay. My next presenter is Hima Reddy. Hima's done a number of these now. She's starting to become a frequent guest. I love her kind of take on the stochastics and what she has to talk about with that. And we just love having her. I invite her every time we can have it. We can. So Hima, how are you doing?
I'm good, Jeff. How are you? Can you hear me?
I'm doing great. Yes, you sound great. I'm going to go ahead and get the screen over to you. Everybody's running a little bit, just a little bit. We're not behind. Are you surprised about that?
Me?
Yeah.
Oh, no, you guys do great always. I mean, I'm good. Whatever may be going on in a few minutes, I'm always interested to hear. So I'm good, but I'm ready to go and keep the momentum going. Pun intended.
All right. Yeah, no, I'm surprised that everybody's we're just not like 20 minutes behind by now. So here you go. I can see your.
Now, Jeff.
Well, and don't worry, we've already had our technical issue for the conference. So nothing else is.
So then maybe it's not my turn today. Okay, great.
Yeah, we're good.
All right.
We
awesome.
can hear you. We can see your screen, and I'm getting out of the way.
All right. Thank you so much, Jeff. Appreciate it. Hello, everyone. Welcome to Not Your Mama's Momentum: How to Profit in Any Market, Any Time Frame. I am Hima, and I always love hearing where you guys are trading from. You know, Jeff's talking to you about awesomeness of MetaStock and all the markets you can trade with it. So I'd love to hear where you're dialing in from right now, what you trade, and I will be taking Q&A towards the end of my presentation. So if you have a question and I don't address along the way, then we can revisit it at the end. All right, so I think I'll be able to see you guys typing out to me in the questions box. Bueller, anybody there? I gotta make sure I can hear you. Ah, there we go. All right, Silver. I'm not sure if that's your first name or just your web code name, but I like it. Okay, terrific. I hear you guys. Ah, there we go. We've got Jim in Atlanta. Fantastic. All right, I'll let you guys share with me and I will say hello as I see you chime in. But let's get going so we can keep ourselves on track here. So again, trading momentum with the RSI, not the stochastics, but Jeff was close. They're in the same family of momentum indicators, and I've got a Jedi twist on it you're going to love. So let's dive in. So again, here for how to trade momentum, get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally trade and make enough money that you can live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there, including MetaStock? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? How many of you want to get as much as possible out of our time together? I want that for you too. Okay, for most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with future stocks and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? Awesome. I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you all know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you. I don't know your trading plan, account size, or markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? Well, if you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at 16 years old learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going on my own to help traders directly. And over the past 20 years, between my professional analysis in Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. Now, I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders like all of you, and I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that is quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. All right, so here we go. Now I'm a successful trader and analyst and educator, but it hasn't always been like this. Years ago, life seemed great. Okay, I was in the center of the action on Wall Street as an analyst with Piper Jaffray, making them a ton of money, starting work at 5 a.m., working late, and burning that quickly. Is anyone else a corporate cog making someone else rich? I know, right? I thought there must be more to life. I mean, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. Now, I'll never forget the moment the bottom completely dropped out of my world when my beloved dad and mentor died suddenly. And at first, it felt like my whole world was crashing in, and I had to leave my job and tend to financial and legal family matters. But then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets when I was a teenager, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers, and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result, I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what, guys? Type it to me in the chat. Robin in Wisconsin, Neil in Toronto. Sammy in Dubai, awesome. Jana or Jana from the UK. Trading equals what? Freedom, right? There's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Time freedom, money freedom. Wouldn't that be amazing? But clearly, there are challenges. Many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system. Because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading with future stocks and options. And I'll show you that a little later. All right, so what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. Awesome. See Freedom chiming in for John and Jana and Julia and Janielle and Ali and Chukwama. I'm going to give it a whirl. You guys ready to make momentum easy then? Okay, trading momentum can be easy, but first you need to understand how it works. And a Formula One car racing track will have you understanding momentum in no time. So let's put ourselves in the driver's seat of this hot red car here at the starting line, all right? So you rev up your engine and you go. Now you pick up speed really quickly or accelerate on the straight runs. You see a turn coming up and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out, you hit the accelerator once more. Are you guys getting the idea of how you'd accelerate and decelerate on this track? Type a Y for me in the Q&A if you do. Awesome, because now you are seeing exactly how price momentum works. Now let's jump into the helicopter that was looking down on the racetrack. Okay, we're getting a bird's eye view of the track, right? All the curves and the straight runs. You see, the racetrack becomes price as you see it on your stock charts. And momentum is generally plotted on the bottom as a subchart. Making sense? Okay, great. So when price is trending higher, we've got upward momentum that's improving. And that upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Are you guys getting this? Awesome. Now, during falling prices, there's falling momentum that's becoming a more and more powerful force. But when a price bottom is approaching, you usually see momentum bottom out first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Heads up indicator, guys, means that most of the time it moves before price does. Okay, awesome. And now we're going to dive into the indicator itself. But first, let me share with you results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. All right, now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. And I want you to take a second. I want you to think about your markets, guys, what time frame you trade, what exact market you trade, okay? But first, do you want the Jedi secret? Do you want my Jedi twist on momentum? Okay, great, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know and you trade using my special Jedi indicator. That indicator is called RSI Power Zones, and you can use it on any market in any time frame. So everyone here, take a look, okay? On the left side here, I have a variety of active markets that many of you trade. Indices, that could be the E-mini S&P 500 futures, my baby, the NASDAQ, the Dow. Stocks might include the FANG or other tech or other sectors or industries. ETFs, I have a lot of coaching students that trade the SPY. Bonds could be anything from the 30-year to the 10-year or smaller. FX is your currencies, okay? And commodities include wheat and gold and more. So let me know here, what market and time frame combination do you trade? Type it in the chat for me. It's important for me to see that the markets you trade and the time frames you use get incorporated into our training here so that I know I'm speaking your language. So for example, for me, every day in the Skinny and the Mini, I cover the E-mini S&P 500 futures, and I analyze them on intraday charts. And my trading time frame is 3 minutes. So how about you guys? Okay, awesome. We've got Marco trading the SPY and Tesla on the 15-minute. Yeah, Tesla's gotten super popular, right? Especially since being added to the S&P 500 last summer. Okay, John's on a daily chart. John, what do you trade? What market do you trade? Danielle, E-mini 1 minute. Ooh, you got a stronger heart than I do. 1 minute E-mini is too fast for me. I like my 3 minute, but rock on. Okay, Mark is a 15-minute time frame. Fantastic. Neil trades weekly Canadian stocks. Okay, Hughes trades stocks, FX, and commodities. FX market and 15 minutes for Krishak. NQ on 2 minutes and 5 minute and 15 minute for Robin. Nice. Awesome, guys. You are trading some of the most active markets in the world. So you are primed for success with the RSI power zones, but I've got to teach you how it works. Okay. So pay attention close. Okay. We've got to look at it in a variety of markets and timeframes for you to like get to know it and get comfortable with it. This is like a first date. Okay. And then after you get that comfort with it, I'm going to go into market calls that I made to my tribe. And we're going to peel back the onion for actual setups you can use. So let's start by looking at how RSI power zones work on a futures market that you guys ask me about all the time. Oil, all right? And we're going to look at it on a monthly chart because I want you to see how the long-term market trends, which are super important to trading right now, can be analyzed with the RSI power zones. So here it is, okay? Everything is blank and white on the chart because I'm going to reveal it to you as the market is unfolding in front of us, okay, as if it's live, so that you really learn in a way that's conducive to what when you look at the markets live. So everybody see this here? I've got the ticker CL plotted a monthly continuation chart. Okay, if you're new to futures, that just means that each month it is rolling, it is moving over to the more liquid contract, but the chart will still look the same. So every single candlestick here represents 1 month of price action. So we have these 4 zones on the bottom. Okay, you see that squiggly line on the bottom? That's the RSI. But these 4 zones are what make it special here. So looking at these zones, let's look at the history of price action versus what happened in the RSI power zones. First, I want you to know the names of the zones, and you're going to see why they're called that as I move up here. So bear support power zone is the 2 lower red lines. Bull support power zone is the 2 lower green lines. Bear resistance power zone is the 2 upper red lines. And bull resistance power zone is the 2 upper green lines. All right. So now there was this run up in price that took us to these crazy new highs above $200 a barrel. Maybe you guys were trading when this happened, right? I was an analyst on Wall Street when this was going on, and everyone was going crazy. Now, that strong advance higher in price was accompanied by the RSI power zones on oil rising from the bull support zone to the bull resistance power zone. This was evident on the monthly time frame. And this is what part of what kept me and my analysis to my clients, not students at that time, managing thousands and millions of dollars, kept them with the long trend in oil. Highly valuable, right? You wouldn't have caught that without the Jedi twist. But then there was this massive fall, and it took out the previous lows in price. And when this happened, the RSI power zones fell to the bear support power zone. You see how they kind of unhooked from the green zones to now testing a red zone? Now, again, I was an analyst on Wall Street watching and analyzing oil and many other markets when this happened. And I said to my clients, look, I don't think this is a one and done fall here. I think oil is going to be in trouble for some time. And that's exactly what unfolded. Oil went into this giant sideways range for years. So if you kept trying to catch the bottom in oil, you were just wasting a lot of energy, right? Because the thing is that every single high that formed, as you can see here highlighted in yellow, it was tied to the bear resistance power zone capping momentum. Please type a Y in the chat if you see that. This is huge. Because this was a clue as to the future direction of the breakout. Okay, from a practical standpoint, real life standpoint, after falling to $100 a barrel, most people thought there's no way oil's going to go lower than that. You know, it's going to climb back up to 150, 180, go up from there. Not so much. And this was a clue that there might be more weakness ahead. And it was extremely helpful because we had another drop, still quite substantial. And you see both of those lows highlighted in yellow now? Both of those lows in price saw the RSI push down into the bear support power zone and continue to pressure into there. This made it easy to maintain a selling mentality instead of getting excited every time some random level called oversold got hit. So from there, was there a recovery? Absolutely. But even that recovery, on its first attempt higher, it capped at the bear resistance power zone. Now, here's a snapshot that I took today, Monday, April 5th, 2021, of the monthly chart of oil. The gray vertical line, that marks where the last chart left off, okay? So I want you to look at the action after the gray vertical line. Do you see how oil futures traded lower back to the bear support power zone at the start of 2020? Now, we've been recovering higher since, and oil continues to look promising, but the RSI power zones are also at a juncture here. They're back at the bear resistance power zone, those two red lines, the upper ones, that are putting pressure on oil futures and creating like a pause point right now, okay? They're also setting up for potential bearish pattern between price and momentum, and I'll talk more about identifying setups between price and momentum in a moment. So this is the RSI power zones as applied to a commodity that we all watch, whether you trade it or you know it at the gas tank, all right, on a monthly time frame because of the importance of history. Can you see how looking at the RSI power zones on oil might have helped you better navigate trades in oil or markets related to it? Type a Y in the chat if you see that. All right, awesome. Like I said, this is, like a little bit of a first date here. You getting to know the RSI power zones, and then we're going to amp it up with those setups. So let's take a look at this on another market and time frame. Get you more comfortable. Let's look at an ETF that I know a lot of you trade, and on a weekly chart. Now we're moving to the SPY, and we've got the 4 power zones again. So this is the S&P 500 ETF. And again, the same 4 zones, and now every candlestick is representing 1 week of price action. Now notice, the beginning of this chart, as I've shown it to you, there was sideways price action on the SPY for like 2 years, okay? And it was all hovering under that black horizontal line, that dashed line. Then price pulled back to where the yellow line is. And you see how that low in price coincided with the RSI power zones holding the bull support power zone? If you were just looking at the traditional approach, you would have missed this. You have totally missed this. So it's highly important to realize that the whole momentum field for you. From there, price shot up higher, made a huge advance higher. And that whole advance saw the RSI continue to improve, ultimately reaching and extending beyond the bull resistance power zone. So this movement from one green zone to the other, it helped you stay looking at the long side, looking at the buy moves in the strong advance. Do you see the importance of that? So that you wouldn't have been trying to top pick, and then every time you were selling, you'd get your you-know-what handed back to you? It's not a good feeling. Trading with the trend is a lot less stressful, okay? And then being on alert for the signals that it might be changing. So what happened after that? There was this crazy 2-week fall, right? Look at those 2 big red candles. Very sharp drop. In 2 weeks, we took out the price action of the past like 10 weeks. But all of that happened with the RSI power zones just coming back from the bull resistance to the bull support. It's called unwinding overbought conditions. It's like a pause in the race. Okay. I grew up in New York, like I said, and I know a lot of people who ran in the New York Marathon. So when you're running in the marathon and you stop for a drink to hydrate, does that mean you're not doing the rest of those, 26 miles? No, you're just taking a pause and regrouping and regaining your momentum, right? So you can go for the long haul. That's the same thing the market does. And when I was writing the skinny on the mini at this time, and everyone was kind of freaked out by this price decline, I said, hey, I think this is just a sign that we're going to go sideways for a few months before the uptrend resumes. And that is exactly what happened. We went sideways, as you can see here, but these were big tradable moves showing on the daily and intraday chart, all while that weekly chart was just unwinding overbought conditions. From there, we had a break higher, and it coincided with the RSI power zones resuming higher once again. And these relationships between price and RSI power zones are evident in a variety of markets and timeframes, which we're going to continue to see here today. Now, Here it is today, Monday, April 5th, 2021. This is what the weekly chart looked like this morning. Just captured today. So the gray vertical line marks where the last chart was that I left you off from. So a lot happened since then, right? But do you see most recently how even though price is moving higher, the RSI is just coiling up? This makes it very important to stay on top of what the underlying trend is and knowing the connection between price and momentum. It's not just about blindly following the indicator, guys, and just looking for green and red, okay? There's more nuance to that with the setups, which I'm going to talk about here in a moment. So can you see how looking at the RSI power zones on the SPY the past few years might have better helped you navigate trades in the SPY or markets related to it? Type a Y again if you see that. Okay, awesome, because now we're going to go a next level deeper than what you've been seeing here. We're going to dive into the trade setups, but first, let me share with you more results from our trading family. Susie shared my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it. So we're going to dive into my proprietary 3-step approach to using RSI power zones to finding great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here it is. Using RSI power zones to identify trade setups, okay? I want you to jot these 3 steps down, and then we're going to go over them so many times, you're going to have them down pat. All right, awesome. Step 1, review the chart and assess the price trend. What? Hold up, right? You might say, Hima, all this time you've been all excited about momentum. Why are you saying price is our first step? Because price is king. Price is the source of data from which momentum is derived, and we will benefit more from trading momentum if we are clearly aware of the price trend. So when you make this assessment of price, and I'll show you how in a moment, you have 3 choices you end up with: an uptrend, a downtrend, or sideways. And yes, sideways is a type of trend. And you can be prepared for the next directional move if you know how to monitor the momentum of sideways price action. Okay, step 2, evaluate the RSI power zones reading. This is specifically looking at where the RSI is relative to the 4 power zones. Again, each zone has a distinctive upper and lower boundary, and there are 4 zones total. So this means there's some white space, some gaps in the RSI power zones, and it's important to know if the RSI is currently in a zone or moving in and out of a particular one, or if it's just hanging out in that dead space in between that I call no man's land. And we'll see that in our examples coming up. Step 3, determine the presence of an entry signal between price and momentum. And usually the best signal comes from when momentum and price are not connecting. They're not jiving together. That's usually an opportunity that we could take advantage of for profit. Okay, so you've got your 3 steps to using RSI power zones to identify trade setups. And I'm going to repeat these steps, so you're going to have them down pat by the end of our trading, like I said. Now, the best way for you to learn is by using actual examples. And something I pride myself on is that I practice what I preach in the analysis that I share with you. So traders in the Hima Reddy tribe, they get updates from me. My members get even more detailed updates. And every single case study we're about to look at, I called out to my members as it was happening. I didn't just have it like tucked away in my back pocket to pull out on a rainy day as a beautiful textbook example. Anybody can do that. I'm showing you actual calls I made when they were tradable in the moment of the market. So I'd like you to type a Y in the chat so I know that you see the value of what you're about to implement here. All right, awesome. Now let's dive in and let's look at a couple more combinations of markets and timeframes, right? Let's look at stocks and let's look at them on a daily time frame. Anybody trade Netflix, FANG stocks? Okay, awesome. Now take a look here. Review the chart and assess the price trend. Step 1. Remember I said we have 3 choices? You guys tell me, all right? Maybe you're brand new to the markets, maybe you've been doing this a while. So I'm going to walk you through the important price highs and price lows. Capital P is a specific way I teach them. Here's a price high, here's a price low. Higher high, higher low, higher high, higher low forming. What is the trend? Uptrend, downtrend, or sideways? All right. So this is an uptrend. but it's also got a corrective pullback in motion. So it's at a pause point, right? It's like the marathon runner drinking his water. He may keep going, but he's just taking a pause. Step 2, evaluate the RSI power zones reading. Here you can see it's holding the bull support power zone. Okay. It's in between the 2 lower green lines, which make up that zone. Step 3, determine the presence of an entry signal between price and momentum. What was going on here was a disconnect between price and momentum that was even more important because of where the signal was happening in relation to the zones. That is the core of my Jedi twist, guys. Okay, you'll go out there, you'll hear about momentum, you hear about RSI in various forms. You may even hear about various setups. The combination of where the setup is happening with the RSI power zones is what makes it extremely important to your trade management. Your trading is a business. You have to manage it, right? So let's take a look here. This is the move that unfolded from that disconnect. And I have a whole training that dives into this, but let's look at what actually unfolded here. There's a low at 271.22 and it went up to 423.21. And again, I call this out to the tribe as it was happening, creating a 56% move higher. So I've got this whole training that dives into RSI power zones for true mastery. And I'll show you the setup in session number 2 because I cannot teach you everything you need to know in an hour. Okay, it would do you a disservice and it would shoot you in the retirement. Yeah, I said shoot you in the retirement. Okay, money isn't just money. It's the blood, sweat, and tears that it took you to make it. And you can't afford to lose any of it. So I'm here to help you maximize it. And of course, I can't teach you everything I've learned in 20 years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can look at how I can teach you more in depth. Making sense? Are you getting this? Please type a Y in the chat if you understand, because we're going to dive into another one of your favorites. But first, I have to know you're still with me. And this is absorbing in. The 3 steps are coming to life. All right, awesome. So let's stay in this vein. Let's go to another stock. And I know because you guys asked me about this in our monthly group coaching sessions. Twitter, still on a daily time frame. Step 1, review the chart and assess the price trend. On a daily chart, I like to look at approximately 6 months of history at the minimum to assess the trend. So coming back here, we've got this high, this low, higher high, higher low, higher high, higher low. Now, there are smaller moves on the way in between. But again, using my essential price action tutorial, which is part of my full system, you'll understand why I'm pulling those highs and lows out. But you guys take a look. Tell me here on Twitter, is this an uptrend, downtrend, or sideways? That's the first step before you can make the most of RSI power zones, right? Is knowing what trend you're in. Okay, so we've got a series of higher highs and higher lows. So yes, that is an uptrend in price. And just like that Netflix chart, here we got the corrective pullback in motion. Evaluate the RSI power zones reading. Well, this one's looking a little different, right? It's holding the bull support power zone, but it nudged a little bit lower. Okay, but it's back in the bull support power zone, uptrend in price. Where do we go from there? Well, here was the cool thing. This setup I actually saw in a review session with a bunch of students live as it was happening. Like I have a recording of this happen, okay? So I saw the setup. I brought it to their attention because they were already members learning my full system. We did the math together, okay? So it's really cool that there are setups in price and momentum where you can literally do math and come up with price targets. Did you know that? It's awesome, right? So on this day, April 10th, I calculated with my students live an upside target for Twitter of 39.13. From there, here's what price action unfolded. Okay, that was step 3, determine the signal between price and momentum. This is what unfolded. As soon as that session was over, so the few days prior stayed the low of the move at 26.60, and that target was met on June 5th. Now, this was a minimum upside target. So if you had a larger position, you could take some profit out here and trail your protective stop to keep the rest in. Taking advantage of this 47% move higher from this point. It went higher from there. Again, I have a whole training that dives into all 4 of the RSI power zones, and I'll give you that signal in the system and even show you how to do the math. Okay, I'm just showing you here what you didn't know that you didn't know, that trading can be simple when you follow the expert. Making sense? Are you getting this? Okay, great. Let's go and look at a different type of market. I know we have a couple of FX traders here. I saw that earlier. So let's look at the Swiss franc. Again, I called this out to the tribe as it was happening. It should start feeling like a rinse and repeat here, guys. Step 1, review the chart and assess the price trend. High, low, lower high, lower low, lower high, lower low, lower high, lower low. What's the trend here? Remember, uptrend, downtrend, and sideways are your options. Yes, here we have a series of declining price defined by lower highs. So this is a downtrend in price. And right now, the marathon runner has not stopped for a drink. He's just charging on to the downside, okay? So this is what's called a persistent downtrend. It is like full force heading on lower. Now, next step, evaluate the RSI power zones reading. Here, we're going to kind of get a little bit more of a broader view of the RSI. I don't want you just to look at its actual location. I want you to look at how it's been moving. Yeah, awesome. George has got it. Julia, Jana, John, Ali, fantastic. Which zones has the RSI been moving between, the red ones or the green ones? Do you see how with price turning lower from that top back early in the chart, the RSI shifted to moving between the bear resistance and the bear support? That alone would have helped you stay with this downtrend as was unfolding, okay? But where I saw this market was right at this juncture, and this is when I called it out to the tribe. And I warned them that this downtrend looked at like it might be over. So there was an entry signal between price and momentum. And this is the move that unfolded. All right. Check it out, guys, okay? If you don't trade FX, this is kind of wild. The low was at 0.9186. The high was at 1.0050. And once you do the little interesting FX math, right? On one contract, you know how much of a move that was? $8,600 on one contract. So the benefit here was not only that if you had been short prior, you could have been protecting your profits by trailing down your protective stops. There are multiple signals along the way here to get in on this new uptrend when it was established. So again, I'm super excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the market so you can take control of your financial freedom and live the life you and your family deserve. By now, you know that RSI power zones can really boost your trading because whether you're new to studying momentum or you've been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's all about, right? Making sense? Are you getting this? Type a Y if you want more consistent profits. There shouldn't be anyone not typing Y right now when I say that. All right, awesome. That's the results our trading family loves seeing too, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Here's what more of my students have to say. I was very impressed with the education Hima provided that came with my indicator. Hima's RSI Power Zones indicator has become the standard on all of my charts, said Rob. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning in the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great, so here's what I've got for you. The system that can give you all that is the 4 Zones RSI coverage system. So before I give you this opportunity, let me show you the features and benefits using this system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more. You can trade this. You pinpoint your trades faster, so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who is this not for? This is not for those who are trying to get rich quick. Okay, like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this isn't for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. All right, since you're still sitting here with me, you're taking the time to learn to boost your trading and you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. In my 4 Zones RSI coverage system, I give you my 20 years experience on a silver platter. And it's 100% focused on step-by-step systems, instantly accessible, starting with video tutorials where I take you by the hand and I move you through the 8 phases of a trade so that you have a complete system to your approach so that you minimize mistakes. I give you my top RSI Power Zones trading signals from years of study and observation with various real-world examples across multiple markets and timeframes. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. To make it even easier, you also have cheat sheets that you can download and print out and keep right by your trading desk. Pretty awesome, right? I remember back to high school and middle school, maybe math and science classes. Teachers would teach us something on Monday or Tuesday, and by Thursday have a pop quiz, right? Well, the ones who really want to advance our learning would let us bring in that cheat sheet, formulas or definitions. And that's what I want for you, okay? I want everything on the cheat sheet to help you learn faster and take this to your trading faster. So for example, these are some easy to read grids like this, along with the step-by-step trading strategies all filled out, okay? Moving you faster on your path to boosting your trading account. Now, you're gonna love this, okay? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock. So you can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever. I've had traders email in and offer me hundreds of dollars for just the indicators alone, and I'm giving them to you here as part of your complete system. So I've included everything to set you up for success. Okay, the only thing you could possibly still need is for me to take you by the hand personally and help you. So actually, would you like that? Would that help you if I hopped on the computer with you and showed you live how it's done and answered your questions right there and then on the spot? All right then, well, I'm giving you everything, including me. A monthly group coaching for life. So once a month, you'll get together with me online personally, and we'll spend an hour together. And I'll personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. The next session happens to be this Wednesday, April 7th. So now you can see I've built in everything you need to boost your trading with the RSI Power Zones, right? Here's the thing. We all know the world has changed a lot in the past year. I mean, 2020, 2021, it's almost like, what's the difference, right? And while the 4 Zones RSI coverage system is designed to teach you how to fish for RSI setups, okay, I want to empower you to be able to trade for yourself and not need me forever. When I give you the fish, though, okay, I give you the market setups. I give you the signals. I tell you what I'm capturing the market. It does aid your learning. I have seen that, especially in this past year. So you're going to love this brand new bonus that I'm revealing right now. As a bonus, I'm giving you my new quick case studies. These are hot, timely, and actionable updates on RSI Power Zones activity, highlighting trade setups as I'm seeing them instantly in multiple markets, hot off the press. These will be added to your portal, and you'll get an email notification with every update. Bonusing this in, something I started doing in this crazy year that we've been having, and I just started it this month. Pretty cool, right? So the 4 Zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI Power Zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily is valued at $197. Monthly group coaching live. This is priceless, but if I had to put a price on it, it's easily $797 for just the first couple months because I easily charge $500 an hour for my one-on-one coaching. But you get me here for life. Invited one Wednesday afternoon every month for life. The RSI Power Zones indicator, available for the most popular trading platforms with free updates for life, including for MetaStock, is valued at $497. Plus, you have the bonus of the quick case studies, giving you hot, timely, actionable updates across markets. So this brings the total value to $3,488, and it's worth every penny. Now, let me ask you, if all the system did for you is help you trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of this system is $3,488 because I want to make an investment in your future, because I want to see a return on your investment fast. For a limited time, I'm making this system available for one low, easy investment of $297. And you can get started now by heading to himareddy.com/metastock. And I'll make it even easier for you. When you visit himareddy.com/metastock and invest in this system today, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy-it-back guarantee. Okay, take action now. Use a complete package for 90 days and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. Okay, I want you to be 150% satisfied with the 4 Zones RSI coverage system. After all, my clients tend to stick around a long time and become my friends too. So follow the whole system, all right? I want you to get out there, treat it like a rental car. All right, put it through its paces, drive it all over the place, wear the tires off the thing. And if you don't feel like you've gotten far more than your investment, then I will hop on the phone with you, personally work with you. And what I really want is for you to be totally satisfied, and that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488, and I'm bonusing in the quick case studies to boost your trading faster. And for a limited time, I'm giving it to you for the simple, easy investment of $297. So go ahead and take action now. You can go ahead and visit the page to sign up. And let me show you exactly what will happen when you join us. You'll immediately get a login access email with details to enter the RSI Power Zone system at my educational portal. This guy right here. All the training you need is right here. You can get to it easily. It literally says start here. Now, what's all this other cool content? Undisclosed bonuses, and you're going to love it. We love to over-deliver. And once you become a member, like I said, we have our first monthly group coaching live this Wednesday, so you'll be on the members list, and you will get the Zoom invite ahead of the session. So take action now, because this offer is only available for limited time for you, the guests of MetaStock, in this awesome summit. So go ahead and visit himareddy.com/metastock to take advantage of this limited time offer and get my whole system for $297. Thank you for participating in this training, and I'm happy to use my extra time here to answer your questions. So I see them coming up in the questions chat, and unless Jeff pipes in with some other ones, I know sometimes you get them from YouTube and stuff, I'll start by answering the ones that are here.
You're all good, Hima. I'll look
Okay.
for some in YouTube to get as well, but go ahead.
Wonderful.
I
Okay,
do
great.
wanna say-
Yep.
Robin does say something that I want to read for you, though. I always learn something from you, Hima. And I think we had a couple of comments on how good of a job you're doing. So good job.
Oh, well, thank you. I appreciate that. Thank you, Robin. And, you know, probably because some part of this always excites me differently when I share it. But yeah, there's a lot to learn in the markets, and it's taken me a really special skill I've developed, I'll say, of taking complex things and making them simple. So, you know, if you like a teacher who can show you something that's really powerful and works, but breaks it down to like those atomic elements, I've become that person. I worked really hard to do it. So you will see that as evidenced in your tutorials and trainings and the way we do things in monthly group coaching live too. So thank you, Robin, and thanks, Jeff, for bringing that to my attention. Okay, so Roneth says, great presentation. How's it work with MetaStock? Do you need to run daily scans? Jeff, that I guess is a question for you, but I will start first. So Ronit, I didn't, I teach you how to read the RSI power zones indicator with your eyeballs, because that is how you will see signals the fastest and most efficiently. You can, I believe, in MetaStock software, run scans to be able to check the RSI power zones if it's at a certain level or exited a certain zone and things like that. So I'll let Jeff speak to that more. Jeff, do you have anything to say on that factor?
Yes, you can do that.
Oh, okay. Well, there you go.
A very wordy answer for you there, Hima.
Okay, well, there you go. Fantastic. Sanjay asks, how do you use this on S&P E-mini and what time frame? So Sanjay, you're talking to me about my baby, okay? The only baby I have is the E-mini S&P. I've been trading it since it opened, which makes me sound old, but who cares? I love it. And the micro E-mini came out a couple years ago, and that expanded everybody looking at mini futures even more, right? So everything I'm showing you here can work on intraday timeframes as well. In the system, I have a series of videos that show live application of this on intraday timeframes. And I also still write my skinny on the mini research. So that is that fish, right? So here I'm teaching you how to use the RSI power zones and giving you the setups and the whole system. And then if you want multiple times a week examples of me doing this on the ES, on the NQ, on stocks as well, then you might want to check out the Skinny on the Market service, and you'll see more information after you sign up for 4 zones about that. And let's see, is it compatible with, so some of the other software, Jana, that you're mentioning, okay, we're here guests of MetaStock, so I want to be loyal to Jeff and MetaStock. I won't talk about the others, but on your sign up page, if you go to himaray.com/MetaStock, I believe over to the right, my teammate Anna has listed all the platforms we have it for. And the ones you're asking about, I believe, are definitely there. Okay.
That's that. Even the YouTube has been very, very active, but they're not asking a lot of questions, which tells me what I already knew. This presentation was very clear.
Okay.
And very good.
Are you sure we're not all just on the hangover from Easter candy? Maybe a little too much sugar yesterday?
Maybe that's it. Do you have an outlook on oil? William wants to know.
William, great question. So actually, I started doing quarterly. So my short-term traders and my like weekly stock pick traders, I listen to the call, okay? You guys are collaborators with me. I work on providing education and services that my traders tell me they really need to get to the next level. And just this year, I started doing quarterly reports using GAN analysis, using the RSI power zones on 20 of the top markets you will trade. So actually, literally this week, sitting down to write, like my Tuesday and Wednesday are blocked off. I'm going in my hermit bubble and I'm doing my analysis. So if you want to learn more about that, then you can reach out to support@himaray.com with that question or anything else here. But I'll be also talking about it members group coaching on Wednesday. So if you sign up for 4 zones, I'll talk more about my latest outlook on oil, gold, SPY, so much more.
What type of one of the questions that we have here, Hima, is what type of a time frame do you like to look at? Are you looking at like dailies or weeklies? Typically, what size of a bar are you looking for?
So it depends on what a person's trading, and it depends on lots of things specific to them that I don't necessarily know. Their account size, their risk tolerance, So speaking to what I analyze and trade the most, E-mini S&P 500 futures on a 3-minute chart. For some reason, that's like the happy place for me between a 1-minute and a 5-minute. So that's my personal. And that's something I do with coaching students every month. Like I open up the charts on a Thursday morning, and for an hour and a half, we go into short-term charts. And I reserve that for coaching students because I know that they have their foundation laid out and they have access to early education. If I didn't do that, then people would be seeing things that they're not necessarily like ready to deploy. So I kind of stair step it, just like the way my dad taught me. He kind of like gave me the basics, then brought me to the next thing and just kept going until I started knowing more than him, which was a fun time. That's what I try to do with my students.
Anton says, I can't find Hima Reddy. What you're doing, Anton, is you're spelling the URL wrong. Hima, it's HIMAREDDY
Yes.
.com/MetaStock.
So I'll just put it in the chat. I don't know if that's going to help, but I put it in the Q&A. So
okay.
Hima, like those Himalayan mountains, Hima means snow in Sanskrit, the Indian language. I was born in a snowstorm in Cleveland. My parents barely made it to the hospital. I don't think that's the reason they named me that, but it's just a funny coincidence.
And Anton, thank you for pointing that out. That was actually my fault. I spelled it wrong the first way. And I'm batting zero here because I also, as soon as I said it was like the wrong indicator, I remembered that I actually helped you code it.
Don't worry about it. You're great. I always love being here. You guys are always like super engaged. The crowd here, you know, they're definitely listening and asking questions, and I'm always happy to be here. Like I said, I've been clear of major tech issues this time, so my sweat is off the brow.
Yeah, we did have some big ones the last time for you, didn't we? That was the election. We haven't had you
wild,
here for a while.
Yeah, that was something. The whole world was just going crazy, but you did help me out. You made up for it, had me back in December, and I appreciate that. So,
Janet wants to know if you
do you
accept PayPal?
Yes, we do. So if you go to the page, himareddy.com/metastock, and you put in your information, so it'll ask for, you know, your name, address, phone number. I think a few of those just basic contact information so that you're part of the tribe and have a profile. At the bottom, you get to choose between credit card or PayPal. And yes, you can switch to the PayPal button, and then it will, in a secure fashion, get you into your PayPal, and you can pay from there.
All right. Hima, thank you very much. I appreciate it. Great class today.
Well, thanks.
All right. We will. Thanks for coming. We will see you again shortly.
Yes.
And I'm gonna kick you out. All right. She does a good job. All right. Very good. Let's go ahead and kind of get back switched over here. Let's do this. Let's do this. And let's go ahead and show my screen. So, all right. Cruising along. What a great class as we've had today. I'm very, very happy with the way things are going. I hope you are too. I hope you're enjoying the classes. I think everybody's doing a great job. So if you have any feedback, let me know. But I think I want to thank everybody that's been here today, everybody that's been participating in YouTube and on GoToWebinar. It's been one of our largest classes we've had in a really long time, and I hope you're enjoying it. I do want to spend a second to just invite you to the premium conference that we're going to be doing here on Thursday. The premium conference is going to have Steve Bigalow, Jeff Tompkins, and Vince Four all participating. Basically, that whole session, everybody has a 90-minute block. We did this back in our first conference that we did back in November, and all of the sessions were great. The feedback that we got was absolutely amazing. And I've picked these three people to kind of come in and do some sessions with us. So we'll have Steve Bigalow talking about his candlestick signals and the top ranked. Jeff Tompkins is going to come in and talk about finding high probability trade signals, and Vince Vora is going to be talking about trend lines and technical formations. All 3 90-minute sessions are kind of bundled together as a $450 conference special. You should sign up for that. You won't regret it. You can give us a call at 800-882-3040 to kind of get set up. If you have questions, you can go to metastock.com/sales chat, and we can kind of help you with it as well. So I hope to see you there or here on Thursday. It's always a good thing, and it's really relaxed. We just sit. The sessions are a bit longer. We have time to answer a lot of questions. It flows really well. I really enjoyed the premium day. So hopefully you can make it to that. I do also want to say thank you to Stocks and Commodities. I'm checking the time real quick just to make sure we're doing good on time. Stocks and Commodities, they do a great job. If you're watching on the YouTube channel and you go to register to the link that Greg is going to put in the chat box right now, you get a free copy of Stocks and Commodities just for registering. As part of that free issue, you'll also get access for a month to their 17,000 articles that they've published. And also, if you buy anything here at MetaStock today, we're going to give you a 5-month subscription. So they are great sponsors of us. They've done sponsoring ever since we started the summits, which we've been doing for a long time now. So go ahead and take advantage of that. And we really appreciate that. Our next speaker is Marina, the trader chick, and she is going to be here doing a MetaStock conference for the very first time. So I'm excited to see what she's got to talk about, kind of how her presentation. She came on a very, very high recommendation, and so let's go ahead and kind of bring her in. How are you doing today, Marina?
Hi. Thank you so much for the great intro.
Absolutely. I didn't kind of know how, well, welcome. Let's go ahead and get you turned on. How are you doing today?
I'm doing good. Thank you. And how about you?
Doing great. Class is going very, very well. And
yeah, I've been
we can see your screen. Oh, good, good.
Can you see your screen, actually?
We can. And I'm going to
go
ahead.
Or am I looking at you?
We can see your screen, and you're probably looking at me too, but I'm going to turn my camera off so I can prepare to get out of the way.
Because I only saw you. Awesome. Well, thank you so much. And thank you, everybody, so much for being here. I really, really appreciate you guys are being here. I know that it's, I guess in my calendar, it also says that it's still Easter Monday. So a lot of people are still kind of teetering off from the Holy Week. So thank you for joining in. I'm super excited to be here. And this is my very first MetaStock appearance, I guess, or even being part of this awesome presentation. So thank you so much. One thing I want to say before I jump in is that my main presentation, obviously my goal is to help you guys and teach you as much as I can, but it's really to truly go for me to truly teach you everything you need to know and any kind of challenges that you guys might have on your own. Does that make sense? Hopefully, the goal is interaction. I guess that's probably the best way to be. I am here to answer all of your questions, even though I do have my presentation, but I really want to focus on your challenges. Obviously, you guys are here and there might be some questions. So any question is a fantastic question because it usually means that there's a million other people that have that question, right? So awesome. Okay, well, Robin, thank you for the welcome. And I'm gonna hop in. And again, please guys, remember I answer every question and that's really what I'm here for. So I am Marina, the Trader Chick. And what I'll cover today in this presentation is basics. I'm getting back to the basics technically. So my entire presentation is going to focus on something that I realize that very few people actually even discuss. And I know personally from my own experience and from my own education, and I've been trading now for almost 9 years. The first 2 years were a massive struggle. I spent over $20,000 on any kind of education thing you could imagine. Courses, I was doing one-on-ones, I was doing retreats, summits, conferences, and whenever I would ask anything, pretty much basic questions, it would always be looked at like I'm supposed to be born with this information. And I really struggled with it because the majority of the things I recognized was that people, especially who teach, they never get into the absolute basics. And we overlook that and believe that we should just know this. And it's kind of like if you're just learning how to play an instrument, and instead of learning from the beginning, you're kind of thrown into that orchestral pit. So today I want to talk about this because the number one thing that I realized that helped my entire day trading has been learning and starting from the basics. And I'm not talking about like super stupid, like, beginner basics, but you'll see just going back to these, I can guarantee you right now, promise you that your trading will completely change. I guarantee it. So today, what I really want to talk about are some of the basics, right? Day trading versus investing, myths about day trading, because a lot of stuff that we do, our actions are based on misconceptions that aren't true, but we believe that they are and motivate us to do the wrong actions. The different types of things to trade. A lot of people don't even realize that there are multiple markets to trade. Trading lingo, it's incredible the amount of people that are quote unquote in the live market trading, but don't even know the difference between a long and a short. And if you don't know how the difference between that, it's kind of like saying, I don't know where the accelerator is, and I don't know where the brake pedal is, and they're taking their car literally on the highway. Understanding brokers, commissions, and platforms. Obviously with the platform, it's MetaStock, but a lot of people don't realize the importance of having a very good platform. Market movements, patterns, and indicators, and also simplifying indicators and technical analysis. And again, during my whole presentation, please guys know that I am here to answer all of your questions. So a quick official intro. I am Marina, the Trader Chick, and I'm actually an expat. I live in Guatemala, and that's me and my family. I live in Antigua, Guatemala. I don't know if any of you guys have ever heard of Antigua or not Antigua, the island. I'm actually surrounded by volcanoes, not by beautiful Caribbean Sea. So I don't know if any of you have ever been to Guatemala. It's absolutely gorgeous. I've been here for a long time. Anyways, so this is who I am. I am trilingual. And I'm not saying that to kind of like be like, oh, look how cool I am. On the contrary, being trilingual is one of the main reasons I think I started to understand the markets in a whole different way. And I want to show this to you as well so that you guys are able to also realize that the market, it actually has a language. It speaks to us, right? And the reason I understand that is because I am trilingual. I am actually a refugee from the Soviet Union. And I arrived to the United States almost 43 years ago. And obviously, Russian is my mother tongue. I speak it fluently, but English is my main language, right? But I learned English when I was really young. I was 6 years old. So it came to me literally almost within a month or months, I was fluent. When you're a child, you don't even realize that there is an actual learning process. It just kind of starts to happen. However, I learned Spanish in my late 20s. And if any of you guys have learned a language in your later years, you'll recognize that there is a process. It's a very specific process. For instance, anything somebody would say to you, you would first have to take all of that in, digest each individual word, translate it in your head, then you come up with a response, again, first in your language, translate it in your head, and then speak it vocally, right? Address it vocally, and obviously you need a very patient person to help you with, or many patient people, as were in my case. But that's a process, and it's the same thing when you're looking at the market, right? It's slow. It's you're not fully grasping it. It's a process. It takes time, and a lot of people don't realize that. They just want to get right in. But then what happened when I committed? I was very committed. I absolutely loved Spanish. I thought it was one of the most beautiful languages. And I just practiced. I mean, practice all the time. And then one day I woke up and I simply spoke Spanish. And I'm fluent, not 100% at all, but I don't go through that process anymore. And that eliminates a lot of the time, and it comes now naturally to me. And it's the same with the market, and I want to show you guys that today. And also, before I was a day trader, I was actually a fitness instructor. I was one of the very first fitness instructors in Manhattan to teach spinning and Pilates on top of everything else. And I'm also a travel writer. And the main reason why I bring this up is a lot of people come to me who want to be day traders or really are interested, and they're like, oh my God, I don't have any financial background. I don't have any math background. I don't have any economics background. Neither do I. You don't need that. It has nothing to do with that, right? Maybe for investing and for other things, but for day trading, it's not that necessary, right? And that's the cool thing. Anyone could truly become a day trader. Anybody. So, and I also was a travel writer, and normally we travel a lot. This was my very first travel site. My travel site is still up. It's right now as well. So again, I was a travel writer, and I still am. And the reason why I chose day trading is obviously because of my love for the financial markets, but also for the lifestyle. And we all know that being day traders it's more of a lifestyle rather than just another job, right? There is total opportunity to only do it 1 to 2 hours per day. And you could be on your way, and it's that freedom of that lifestyle. And for me, it was really important that I would be able to do it from anywhere in the world and be able to know how to and all you need to do is use your laptop and a connection for the internet. And that was crucial for me to be able to have that, because we travel 3 to 4 months out of the year. Obviously this past year, not that much traveling, but normally we do, and hopefully in the next half a year or more or so, we'll be able to start doing that once again. Okay, so before I jump into this presentation, I actually made a free document for you guys to follow, completely free, and this way you can follow along. And also, it's literally what I use for when I day trade as well. So it's like simple mini hacks, right? You can just go here, makingofadaytrader.com, makingofadaytrader.com, and once you go there, you could download it immediately, completely for free. Excuse me, I have to get some water. Okay, so let's begin. What in the world is day trading, and why is it not investing? So this is a huge thing. I'm sure the majority of you understand the difference, but I get this question asked almost all the time when people hear that I'm a day trader. Oh, I want to learn how to invest. Well, I always say we day trade to invest, right? So there are specific things that people who are already investing technically, who want to change over to day trading, again, they're really different in the sense that, one, you do not want to diversify, right? Unlike in investing, where you want to have a robust portfolio, with day trading, the more diversification you have, the more complicated it becomes, and the less you actually make, because each instrument is super different than the other one, right? It's literally, I'm going to go back to the same analogy of the music student. It's literally, okay, for instance, imagine your child comes over to you and they're like, Mama or Papa, I want to learn how to play a musical instrument. And you're like, okay, awesome. Which one? And they're like, okay, I want to learn how to play the flute, the drum, the piano, and the guitar. And you're like, wow, but they're so different. Please choose just one. And once you really master that one, let's move on to the next. However, day trading, people don't realize that if you're trading Forex, going into stocks, super different. Again, for day trading purposes, you don't want to be all over. There's super different strategies, and you're not going to master any of them, right? So you really want to get that one instrument, really that one, okay? It doesn't matter which one it is. For instance, if you guys are going to be going into equities, we're talking, like 6,000 to 8,000 different stocks out there, right? So if you're going to do that, I mean, there are some people that are crazy successful just trading Tesla, Amazon, Apple. I mean, I realize Amazon is a big one to start with, but Apple, Tesla, like these, and they're doing super, day trading. Or if you want to do a little bit more varied, maybe just penny stocks or just blue chips, or maybe just different sectors, pharmaceuticals, entertainment, tech. You've got to specify, right? Because otherwise, if you're going to be trading, with Tesla, it's going to be completely different if you're looking at Moderna, right? And you have to understand that they don't work the same. So choose the one thing to really help you. And it goes also with the different markets, which I'm going to get into a little bit more. And it's really, really important. That is really going to make all the difference. Another humongous difference between day traders and investors. First of all, day trading, it's literally that. We're in and out of positions on a daily basis, right? So investors, they care about what's going to happen with the company overall, over time, right? Like for instance, I am a big investor in Apple. I've been with Apple probably for 10 years. I have seen it go sky high. I've also seen my entire investment with them go 50% loss. But I never touched it because I know it's a super company, right? It's completely different. I'm okay with the dips and, you know, the valleys and the dips or whatever, and the parabolic moves, because I'm invested in the company. I know that that company is going to bring me something, but if I'm doing an Apple as day to day, I won't care what they're going to be doing, you know, with that new, like for instance, right now they're talking about their new Apple car. I don't really care that much, right? Or that their dividends are going to come out, because I'm only focusing on the day, right? So it's totally different strategy. So investors, they're okay with the ups and downs. Traders, on the other hand, love the ups and downs because they could either short it or they could go long, right? So on the contrary, for investing, which you normally just go in for long term and going for the longs, meaning you're going for a buy for it to go up. Day trading, we don't care if you're shorting the market or you're longing it, right? And if you guys are sitting right now and saying to yourself, oh, I would never short the market. If you don't short the market, you're not a day trader. I'm sorry to give you that straight up, but day traders probably make more money shorting the market. We do not care if it's going up or down. It's 100% technicals, okay? And that is a huge understanding. If you're only going for those longs, you are missing out probably on 60% of amazing, amazing setups. Okay, now let's bust some of these day trading myths, because it's amazing the amount of myths, misconceptions, lies that we kind of surround this industry. And what happens with those, it becomes limiting beliefs, right? And when you have limiting beliefs, what does that make you do? It makes you have very limited, fearful actions. So I want to bust some of these right now, be able to completely break through that so that you guys see other things that are going on. Okay, first of all, too risky. That's what you hear all the time, right? Oh my God, day trading is gambling. Day trading is gambling. Guys, it's not gambling. So here is another example. If you're gonna get into a car and somehow miraculously get it started and hop on the Autobahn where, you know, there is no speed limit, are you gonna crash? Hell yeah. You're going to crash. Why? Because you don't know where the accelerator is. You don't know where the brake is. You don't know how to properly maneuver the car when there is an emergency, right? So are you going to get out of that car after it's totally crashed and be like, oh, driving is too risky? No, because you're going to learn it. And it's a known thing. You're going to understand everything before you get to the Autobahn. And understand when you're going live into the market, you are literally on the Autobahn. Actually, you are in a Formula One race. The adrenaline is pumping. There is all this action. Your money is on the line. So it is a high activity performance, right? It's a high performance activity, right? So why is it too risky? Because people don't go through the learning. They don't understand that there is a very strategic way to manage your day trading. And when you have that strategy, it cuts out probably 90% of the risk, right? If you have your stop in place, you already are protected. If you have your target in place, you're already protected because you're not going to get hit with the ego, and the ego will get you every time. It will get you with the greed. It will tell you you're going to put in a mental stop. That's where the risk comes. And the biggest risk and the biggest gamble is when you just go into the market. And how many people just go into the market? I would say probably 50% of people that want to trade. Okay, the next misconception that you need $25,000 to start. That is a humongous misconception. Oh my God, you can start for like $10 in crypto. You can start with Forex with like a couple of $100. You could start in futures with like $500. And now with the micro minis, you could start with $50. Yes, with the stocks, they say you need $25,000 for a day trading account. No, that also isn't true, because it's only if you want to have a margin account. And I don't know if any of you understand what margin accounts are, but in layman's terms, it's literally loan sharks. Because what is the margin account? Is when you have a margin account, the broker gives you the capability of borrowing when you are highly emotional and acting crazy. They give you a chance to borrow money. So if you lose that money, that is not a benefit, because not only have you lost it, now you also have to pay them interest. So actually, you never want to be in a margin account, even if you have millions in your account. Okay, so you do not need $25,000. You can start with a lot less, just don't have a margin account. Like I said earlier, you have to be a math whiz or a financial background. Not true. Absolutely not true. It's about technical analysis and patterns. It is not about doing algebra, trigonometry, or doing math. I barely know any math at all. Like, I don't even look at it like that, right? That is no, that is the pattern day trader rule. Jim, I'm sorry, I'm not fully understanding what you mean by that. Anyway, so you do not need that kind of education. You could easily learn day trading without that background. I have worked with people from all walks of life, and to be honest with you, the least they know with the financial stuff, the better off they are. They have a much more open mind to seeing it. Another thing is, it's too stressful and chaotic. Yeah, for sure. When we've seen Wall Street, you know, this is what we normally see, right? That you need thousands of charts and all these monitors. Oh my God, just looking at this makes me want to stress and go completely bonkers, right? I don't know if any of you guys have ever watched, there was this really funny show called King of Queens. Really cool, funny show. And the main character got this like 90-inch screen television, and him and his buddies are sitting in his TV room, which is a pretty tiny room. And he also got like DirecTV. This is an older show. So they had like 1,000 channels, and they're sitting there flipping through the channels every 5 seconds. And one of the guys is like, stop, you're going to trigger my epilepsy. You know, and this is kind of what I look at, and I'm like, this is going to trigger my epilepsy. Like, this is not the way it is normally. You do not need to have this kind of chaos. And again, if you're only trading with one instrument, it simplifies your life by a gazillion, right? And it really actually becomes more of a meditative mindfulness activity, which could become actually even fun, not stressful. Okay, another thing. Softwares, indicators, algorithms, and all this other stuff, right? Boom, 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 all over the place. Look, day trading is really different in investing in the sense that we use a platform. It's kind of like saying you want to be a Formula One driver and not have a car. We need a platform for day trading, and your platform comes with indicators. It comes with a lot of universal indicators that are already part of it. If you're going to be buying, if somebody's selling you like algorithms and softwares and stuff like that, chances are the only people making money are them. Because a lot of times what I have seen is that after you already purchased the platform, those algorithms, they stop working after a time. They need to be updated. And then the people who are doing that actually are asking for more money. You could do everything if you have a strong software, okay? And that's all you truly need. Okay, the other thing is research and news. Do not get caught up in the telenovelas. Oh my God, when I first began, all I kept on hearing was, you know, I had CNBC on, I had Kramer, Mad Money, I had all these things going on, right? And really what it boils down to is these experts, they all have their own agendas. And honestly, I'm sure you've all heard it, buy on the rumor, sell on the news. A lot of times it is just that, it's melodramas, right? And a lot of it doesn't make any sense. I remember, I think this was several years ago. I think it was with Goldman Sachs. I'm not sure though anymore. But the CEO had an affair and his wife found out. Now tell me, what does that have anything to do with the actual financial institution? Absolutely nothing. But the stock tanked 50% because it was a melodrama. Now, and then after that, it totally went up. But everybody, you know, people lost money because they followed that. But if you just ignore that, you're fine. Obviously, stick through the important news, you know, like when FOMC has their meetings, when the reports like, you know, unemployment reports, housing reports, those are actual moving market news. You know, when Jeff Bezos got a divorce, that does not matter to Amazon, but yet it really moved the stock for a few days, right? Because it's just gossip. It's not real. So I really recommend the least you listen, the better, because a lot of those times, those people just want to hear their voices. They have their own set agenda, and, you know, they're going to be talking about it and working their own agenda. Okay. So again, market research. That's the other thing that's really important. Choose your market. If you have too many markets, too many stocks going on, you are going to be caught in the death spiral of too much market research. And it could really, really wear you out. It is not sustainable. So it's better to have that one thing to focus on. It eliminates so much extra stuff in front. Okay. This is when I talk about the misconceptions and the limiting beliefs. One of the biggest misconceptions is that day traders need to be in and out of trades all day long. I mean, trigger happy, guys. It is a real thing. I had it when I first began. I was going in 30 to 40 times within a 2-hour session. I mean, it's absurd. When you hear that, it completely is absurd. Not only was I losing money on commissions, it's just stupid. There's no possible way that there are 40 good trades within that short period of time, until I realized that there are only 3 real positions in the market. 1 is knowing when to get in, 2, knowing when to get out, and 3, knowing when to stay out. Okay. And people do not realize that staying out is probably more energy used than actually getting in and out, because you are completely understanding the reason why you're not getting in. And that takes up a lot of energy. And unfortunately, I don't like this analogy, but it's the only one that really brings it home. Think of actually professional day traders. This is where I actually heard it from. They consider themselves like big game hunters. Why? If you think of a big game hunter, and I'm totally opposed to hunting, especially big game, but a big game hunter, do you think they're going to go out and they're going to shoot every mole rat, every prairie dog, every field mouse? No. They're going to save their energy, their focus on that big game. So that's why they get 1 in a hunting session. Good traders, real strong traders, will have 1 to 3 at the most trades per day. Why do you need more? Because also what happens is your energy starts to deplete, right? When your energy depletes, you go into emotional trading. And that is a whole other discussion. But just remember that this is a misconception. To be honest with you, what I do with my students is I do the 1 trade per day challenge. After they've gone through the course, they stick to 1 trade per day. No matter if there's 100 awesome trades, it never happens like that, per day, they will filter to that 1. And it's amazing the crap that you can filter out and be like, oh my God, I can't believe I was even looking at that. Okay. So that's something super important to understand. This is a real thing, guys, and it hits everybody. So once you understand that this is a misconception, you'll be able to focus on that 1, 2, at the most 3 really awesome, powerful trades. Okay, my motto is the most radical way to trade is conservatively. Being a conservative trader is sustainable. Aggressive behavior, it doesn't work. When you hear about these aggressive moves, you never hear about their aggressive losses. Okay, small profits daily, they bring you the big profits yearly. And sure, it's going to be, those super big targets, they look super, but you have to be strategic about it. Get the smaller target first, move your stop loss to break even, then move your next target. It has to be strategic. You cannot just be like, well, it looks like it's going up and going in my direction, I'm going to remove my target, and then it turns on you and greed wins, because greed makes you lose the money. And that's an ego thing. Another really important thing, and I actually even coined this term, FOMAT. I'm sure you guys have heard of FOMO, fear of missing out. Well, guess what? It is huge in trading. I call it fear of missing a trade. Here's the deal, guys. You will always have another trade coming. Do not chase trades. Do not revenge trade, because there is always another awesome trade coming. Always. Right? The one that you miss, be lucky that that money is in your pocket, because there's another better one coming. And it's a huge realization. Now, what to trade? Like I've said it 1,000 times, you need to really get that one thing. Find that one instrument that really moves you, that you really connect with for whatever reason. It doesn't matter. It could be your reason, right? But you need to find that one. I get so many people that want to trade stocks and futures and like daily. And I'm like, but they're so different. And even in the futures market, the ES and the crude and soy, they don't move the same at all. So how could you focus on 3 different instruments at the same time? You can't. So choose that one. And it's amazing the amount of people that come to me and want to trade all these things. I usually say, you know, let's just focus on one. And by the time they master that one, they don't even care about the others because you're making money. And that's really what it's all about. So let's do, I mentioned here 25% of the 25% of the market of stocks. It's really 20%, right? Because here are the 5 biggies. Forex. We all know Forex. We all understand currencies, right? Again, if you're going to trade Forex, stick to Forex. And even within Forex, stick to maybe 1 or 2 pairs because they run differently and it could be really different strategy for each. You don't want to be doing too many that have completely different strategies. Equity, stocks, like I mentioned before, choose one stock, choose a sector, choose maybe big caps, small caps, penny stocks, technology, entertainment, pharmaceutical, whatever. I'm not here to tell you what to do, but you need to figure that out because the most successful day traders are the ones that are really niched down. They are really specific in what they trade. Okay, the other market, futures, commodities is huge. I personally trade the ES minis. That is my only thing that I trade. I love it. It's a flowing market. It's awesome. Okay, but futures has many. There's soy, wheat, sugar. There's all these different indices. There's metals. There's crude. Again, you have to choose the one that works best for you. Choose it, work on it, and master it, and then go to the next one. Okay, options, the same thing, right? If you're going to be doing options, maybe it's not a good idea to be doing Forex at the same time. Again, choose. And of course, we have cryptos, right? Obviously, everybody knows the Bitcoin, but if you actually start to look at crypto, and it's an incredible, incredible market, especially for day trading. So people don't realize, but there are over 6,000 altcoins and projects out there. 6,000. Okay, so we're talking a ton. Again, choose the ones that really interest you. You know, focus on those. Do you want to day trade them, or are you going to be hodlers? Again, you know, this is something you really need to understand and allow, because if you're not going to do it, you're going to be, you know, confused, and confusion will always bring to losses. All right, I want to do a quick, what I call demystification of brokers and margin accounts. As I brought up before about margin accounts, I'm going to explain it again. First of all, what are the jobs of brokers? Their jobs is 100% commissions and just having your money. They do not care. And as a matter of fact, they probably prefer if you are not a skilled trader, because they will win, right? They will be contacting you all the time, pressuring you. Their one job is what I just said. They do not care if you have an education or not. And maybe they'll write to you selling you an education. But other than that, they do not care. Margin accounts is literally synonymous for loan sharking. They are not in your favor. Anybody that is lending you money when you are in an emotional state of mind, they know what they're getting in, and they're winning, you're not. So don't get into that, okay, guys? Super, super important. Also, understanding commissions, live feeds, and quotes. First of all, understanding commissions. Again, this boils down to what are you trading? Because if you're going to be trading crypto, you want to be on the best exchange for that. If you're trading futures, you know, you want to be with a futures broker because they give you the best commissions. For instance, if you're an equities trader, Thinkorswim is really great, but Thinkorswim is also open to futures. However, with them, you have to have like $13,000 in your account versus a futures trader, a futures account, you might need only $500 to start. Thinkorswim will charge you almost double what a futures specialist does. The same for Forex, the same for metals. You need to understand that, and you have to know what you're trading, and then you're able to find the best broker. Secondly, you need a live feed. If you're getting the freebie and you're not paying for the feed, you're probably not in real time. And if you're day trading, you need to be in real time. Okay, so you need to have the best feed, and the majority of the times, depending on what you're trading, you will need to pay for it. It depends on what you trade, okay? So you need to understand that. Now, what platforms and why you cannot day trade without them. Like I mentioned before, if you're a Formula One driver and you don't have a car, you're a joke. If you are a day trader and you don't have a platform that you are truly, truly into, you're not day trading. Okay, MetaStock platforms are awesome. So guys, really understand that you cannot be without a platform. It's important. Now, I want to go really quickly for you to understand day trading lingo, because it's, you know, I'm in a really awesome position right now. I have a 17-year-old son that is learning to drive his car and drive a car. So my husband's been teaching him, and sometimes I get to sit in the back. And when my son gets in, he doesn't know the lingo, because even driving a car, what is automatic to us today, there is a lingo. Okay, you know, we tell him right away, okay, fix your belt, make sure that you're in first gear before you get into clutch to switch it or go into neutral. You know, all these different words, or your windshield, or your I can't even think right now, rear view mirrors, all of this. He's like, what is that? I don't understand. So it takes him a while to get the process, because it's the lingo, right? Okay, you got to yield. No, you got to stop here. There's a stop sign. It's a red light. I know that it seems natural, but it's not. It's a lingo that we've learned. And it's the same thing with day trading. If you don't know the lingo, you're getting on the Autobahn and not having a clue how to merge or stop when necessary. And that's called crashing. Okay, and that's called crashing or losing money in the market. So again, let's get to it. Intraday trading, literally, that's all it is. You're in and out before the day closes. That's it. There's no other definition for it. It's not swing trading when you're holding it overnight. Intraday is just that. And it needs to because when you're swing trading, your charts are going to be on a totally different time frame than an intraday, right? Because if you're looking for a week, why do you care if you're stuck on a 1-minute chart? Okay, bull markets. We all know the bull market, sure, it's market trending up, market going up. That's the bull market. Bear market, market going down, market trending down. Okay, we also have 3 very specific trends. We all know the uptrend, we all know the downtrend, but there's a sideways trend, and that sideways trend is where the majority of the money gets lost. So you have to understand when it's in sideways, that indecision, that chop zone, it's better to understand what it is and also learn how to stay out of it. Okay, I have mentioned this several times of how to protect yourself and how to make day trading a lot less risky. Profit targets, guys, you need a profit target. If you're day trading, that's the strategy. You need it, right? What is the profit target? You know exactly where you are gonna get out. You know exactly where you're gonna get out. Otherwise, greed will always win. It will always be like, no, it's only going a little higher, higher, and all of a sudden it turns on you and you lose everything. Have a target, okay? Risk management. You need to have a stop loss. I know that it sounds so logical, but I had mental stop losses for years, and I lost my accounts 3 times. You need that stop loss no matter what, and you need to be completely committed to it for a long time until you are completely sure that it works. You need to have that, because mental stops, they don't exist. The ego will always win and always tell you that it's not going to go further. It's not going to go further. Okay, again, I'm going to go back to the charts. They are your... Okay, can you guys hear me? Because it just said that the audio was removed. Are you guys able to hear me? Can you just throw me a quick yes, please?
Hey, Marina, your audio did go away, but it was for like 2.5 seconds or maybe 3 seconds.
Okay, cool. I just saw that. I'm like, oh no, how much did I miss? Okay, awesome. So I'm going to continue on. Indicators. Again, good charting softwares, they give you a myriad of universal indicators. I personally only use 2. I use the MACDs and the EMA lines. Again, there are many that you could use that are free, that are part of the platform. That's the beauty of the platform. Trending markets, like what I mentioned to you earlier, right? Going up, going sideways, going down. These are the trending markets. And you need to understand those 3, because it's kind of like you driving in the car and you're not realizing that you're in a one-way street, but going the opposite direction. You need to understand there is a difference. Buying. Okay. We all know buying. We all know that we want to get in, you know, at a certain price. Hang on just 1 second. Basically, it's also going long. You probably heard that a lot as well. You know, you're going long, you're buying. So what does that mean? Really quick, you're entering the market at a low price to get out at a high price. Super basic understanding, right? Selling, when you're shorting the market. right? When you're shorting the market, basically you're entering at a high price, exiting at a lower price, and taking the money in between, the profit in between. And again, I'm going to go back to saying this 1,000 times. Day traders short the markets. I get so many people like, oh, I feel bad shorting. Why? We're not there for the long term. It's the ins and outs. This is day trading. It's completely different. It's technical analysis. Okay, this is huge, guys, huge. And I know that I'm giving you so much information. And if you even take one or two, I can guarantee it will change everything of how you trade. Market entries versus limit orders. If you are a day trader, you will never, ever have a market order or a market pullout or a stop. Why? Because we know exactly where we want to enter. Exactly where we want to enter. I know exactly where my setups are, and I am ready with my limit order way before it gets there because I am ready for it. I see it, and if it doesn't get to it, you know what? It's no biggie because the next time the setup will. When I have a limit order, I tell the market where I want to enter. If you have a market entry and you're looking at, oh, this looks like a good place, and you put in a market entry, you get slippage. So what is slippage? You lose usually 25% of your target, of the money that you want to get in, right? So you're not entering at the price that you say you are. You're going to enter 25%, whichever direction less. So you're losing 25% from the get-go because you always have to have a target. All right. The same with the stop limit. Like I said, you cannot just get out. You have to have your stop limit there already. Mental stops don't work. So again, if you press close, you lose 25% of it. So you'll lose 25% of whatever. Again, it depends on the markets. It could be between 20 to 25%. Actually, some, I think with crypto, it's like 50%. So you don't want to be market. You want to enter where you want to enter for the day trade. Okay, huge. And I talk about technical analysis 1,000 times. You've heard me say it, that everything we do for day trading is technical analysis. That is understanding the trends, the ranges, the divergences, all of that. And I'm going to now go into the technical analysis because, again, super, super basic. It's literally like saying you got to go into first gear when you get in the car moving, and then you want to switch it to second, third, fourth, and fifth is usually when you're on the highway. But if you've never heard that, that's pretty much the technical analysis of driving. Am I not correct? Right? When you're driving on a highway, you being in first gear, you're going to kill your car, right? You're going to burn out the engine. So that's part of it. So what are technical analysis of day trading? Areas. Look, the market respects areas. And if you guys don't understand what those areas are, how can you respect them? I actually call resistance and support areas the protective gear of day trading. Because if you don't have your seatbelt on, you know, I love to give Formula One. It's one of my favorite analogies because Formula One is such an obvious risky sport, right? And it's a known thing, even amongst Formula One drivers, that 25% of them crash and some of them are fatal, right? So do you really believe that Formula One racer is going to hop into their car and just go? Absolutely not. They're going to put on their headgear. They're going to probably have a fireproof suit on. They're going to put on their safety belts and a lot more. They protect themselves, right? So other than having a stop loss, we actually have other protective gear that we can use in day trading. And for me, the two biggest ones are support and resistance areas. Because if you don't have these outlined and drawn, and again, going back to the platforms, all good platforms have drawing tools. You don't need anything super fancy, even just a line to show you where that is, because it tells you, you know what, this is an area where the market is not breaking through. I'm not going to risk it. I'm going to sit out until it breaks through. So what is a resistance area? It is literally the ceiling of the market. It's literally that. It's where the market hits an area 3, 4, or more times over and over again. When it's a strong area, you don't want to be in that area, right? Because that is a place where the market is telling you, you know what, just sit and wait. That is literally listening and reading the market, because I can be stuck here for a while and then completely transition to a new direction. So this is when you use the third position, not knowing when to sit out. What is a support area? It's literally the floor of the market. It's where the market hits it over and over again, 3, 4, or more times. Okay, so it's really, really important to understand that. Okay, guys, you have to know that, and you have to have it drawn in, because again, if you're just putting in those mental support resistance areas, it's like putting on a fake seatbelt when you're in a Formula One race. It doesn't work. You're going to fly out that window. You're not going to be able to protect yourself. Okay, so other super basic language, reversal patterns. I'm sure you guys have heard of that term, but reversal patterns can really change everything, and they're unbelievable. What are reversal patterns? They're head and shoulders, double tops, triple tops, double bottoms, triple bottoms. Whenever you see this, this is when the market is telling you, you know what? I'm slowing down. There's weakness. Let's sit out. Okay, however, when you're coupling reversal patterns with divergence, that's the best. And again, you could use divergence, whatever indicators you are using, but basically what divergence is, and a super easy way to explain it, is when your price action pivots are going in one direction versus the whatever indicator you're using. I use the MACDs. It's starting to show me the opposite. It's showing me that there is weakness in the market, and I need to sit out until I see strength once again. Okay, now I want to put this all together, and remember, most of this is in the free document I'm giving you guys, makingofadaytrader.com. Okay, makingofadaytrader.com. Okay, so I want to put this all together just really quickly, because we have all heard of breakouts, right? We all know that breakout is probably one of the absolute strongest setups that you can have, right? We've all heard of it. But if you don't know what a breakout looks like and where to really even recognize it, how can you take it, right? And how do we get breakouts? It's when we put in the areas, right? When we put in our support and resistance areas, because the breakout is breaking through those areas, okay? So this is pretty much what a breakout will look like, right? So I have a moving trending market, and then I have this pretty strong resistance area, and then boom, it broke out. That's what a breakout looks like, okay? We have these sideways areas, sideways trends, consolidation areas, and then a breakout. So I'm gonna just go really quickly into explaining what a breakout is in layman's terms. So imagine your sister lives north of you. You've been to your sister's house 1,000 times. You hop in your car, you get in, she wants you to come over to help her out with something. You hop in, you get on the highway, you're totally confident, you know where you're going, but all of a sudden there's a huge construction sign. And the construction sign, you know, they're like, okay, you gotta detour, you got to get off the road, there's, you know, we're fixing the highway. So what, I don't know about you guys, but when I get off at the detour, no matter where I am now, and you can't use Waze because detours normally aren't on Waze. So here I am in this detour, I'm freaking out. I'm in total doubt and uncertainty mode. Oh my gosh, what if they never reopen the road? What if I have to take these tiny little streets? What if the detour people stop putting up the detour signs and I get totally lost? I don't know where I'm at. What if they, you know, I get to a point and they're like, you know what, it's completely closed, just turn around and you can't go anywhere. So what happens in this moment? This is that area, that sideways zone, right? That indecision area where I'm not sure what I'm doing. Would I be entering and giving the market my money during that moment? Absolutely not, right? Because I am completely, right? So what is a breakout? It's when it finally breaks out and the construction worker says to you, hey, the highway is open, keep on going, and you get back on the highway, you know your way, and you're full of confidence. And that's the breakout. Okay, so that's pretty much breaking it down for you. So these are the breakout trades, right? Like I mentioned earlier, I use 2 indicators for understanding. I always know where I am entering. I never just blindly enter a trade just because there was a breakout. No, I need that confirmation. I need that strength. And like I mentioned earlier, you need to have your limit order in place. What does that mean? Do you guys know, have you seen archers? Have you ever seen an archery competition? Normally the only times we ever watch one is during the Olympics, right? They're kind of cool to watch, but you never see them walking around aimlessly on a field, right? They always have a very specific place to shoot from, and they take it from that spot and they shoot and they have a very specific bullseye, right? That's that target. So think of yourself as an archer. You have to have your order weighting in the right place, and you have to have your target in place, okay? Okay, so here I have some questions from John. A limit order is not specific though. Limit order is you put it in, and then you know exactly where you want to enter. If the market continues going and it doesn't fit your strategy, you remove the limit order. You do not get charged commission, by the way, guys, if you just put in a limit order. That's a big thing. A lot of people are scared to put in limit orders thinking that you're going to be charged commission. You don't, not unless you are filled. And then what you do is you move it to the next spot because you have several different strategies and trade setups, right? Not just that one. Marcin, this web page doesn't work. Okay, so it's making of a day trader.com. Hopefully it works because it was working earlier before I got on here with you guys. So hopefully, let me know. Marcin, if you cannot get it, you could write me personally at thetraderchick@gmail.com and I'll gladly send it to you after that. Okay, thanks, Thomas. Okay, guys. So please let me know if you have any questions at all as well. So what I want to talk now about is, imagine if we can do this together every week, that you guys could get this information, just like focusing on these basics, right? Do with me personally every single week. So let me break this down for you guys. I have something super special for you. When you get this cheat sheet, when you get this document that you get for free from makingofadaydtrader.com, you immediately get put on an exclusive VIP list. There is a special invite that's going to also be coming into your inbox once you sign up for the free document. Okay? So here is what I have for you. A lot of people ask me if I have any particular course, and I do. I have my signature course, which is Simplifying Day Trading Futures course. And this program is broken down into tiny little bite-sized items, just like how I was talking, but really get into each one and really apply and implement each one. And you could access it from any apparatus, from laptop, desktop, iPhone, iPad, tablet, whatever. Okay, and it's literally, in essence, with me sitting with you side by side. But it could only happen if you get into Making of a Day Trader, and only for the participants that have joined today. And I'm super grateful that you guys have sat through with me in this presentation. I am offering to everybody here live 6 months of one-on-one mentorship. 6 months of one-on-one mentorship that is in that special invite. So me and you will be working together one-on-one. So every single question we work on, you will be getting direct feedback from me. We'll be working one-on-one with your charts, going live, everything. And on top of that, I have a weekly live trade chat room. So it's one thing when you are doing things at home, on your own. But how do you really know you're doing it right? So that's the reason for the mentorship. But then on top of the mentorship, I have my live chat room where you get to see me. It's me. There are no moderators. It's only me. We're in the live market. So everything we're learning, you're seeing how to implement it, and also get to work with me even more because we're sitting there together asking me questions, and you can show me your charts. It's really helping you guys see the market in real life, right? And I got so many of my students that were with me. I've only started doing this a little while ago. And since then, I've had so many people go live because of this live chat room alone has helped me see exactly what to do when you're talking about it. Because day trading is not just the charts. It's so emotional. Sometimes everything will tell you that it's looking good, but instinctually you might not feel right. And not realizing that it doesn't feel right, you might just want to get in and realize that you felt instinctually it was wrong, and you could follow that, right? So this is all that we talk about in the live trade chat room. And again, because the program is so robust and there are so many little videos and all that, you get lifetime curriculum access, unlimited access to the curriculum. So you can access it all the time. And here's the thing. I'm not going to share the price with you guys, but one thing I can guarantee is that it is less than the average trade. Literally, it's less than the average trade you take for this entire course. So Just that, it's imagine like one trade that you might have lost, but you put it in for the course. Again, you got to go to makingofadaytrader.com, and this is only offered to the participants. Nobody else is going to get this offer, only for the live participants. But here's the thing, okay? Because of the one-on-one mentorship that I am offering, I'm only able to take on 25 people. I cannot do more than that. So because of that one-on-one and me truly committing and putting all my attention into your trading, I can only take on 25 spots. So it's only open to the people during this summit, right? During our presentation. And there are literally like almost over 300 people sitting here, maybe even more. So I really recommend it. Only 25 spots available. Okay, so once again, guys, you could only get this offer from going directly to makingofadaytrader.com. makingofadaytrader.com. And any questions you guys have, honestly, like I want to help you so much. Like my goal is to help you. Okay, so I'm going to go through some questions. My great presentation. Thank you so much. I really appreciate that, hearing that. Thank you, John. And Long, thank you. Sanjay, what's the time frame that you teach for the intraday charts? I personally don't use time frames. I personally use tick charts. What that means is transactions per bar. However, if people don't have tick charts, you could also use 1 minute is a really good one. Because I'm a scalper. So I don't know if you guys have ever heard of scalping, but I go in for really small targets and really small risks. So it's literally my trades, especially during like the past year, have been between 30 seconds to like 2 minutes. And if it's like longer than 2 minutes, you know, I'm like, okay, this is a little bit too long. So I like to go really, really small time frames because that's what I like to do. Barry, how many points per every day can you make? So with the E-minis, the cool thing is you can do contracts. I go in for 1 point. So if I go in with a 10 contract load, which is what I normally go in, it's, you know, for instance, if I go in for 1 point, which is worth $50, it's really $500, right? So it boils down to keeping the same strategy, not going for those crazy long targets, which could really, really stress me out personally, and still go for like really high profits. Okay, hopefully that makes sense. Okay, Marcin, good. I'm happy to hear that you got it. And let me know, guys, if there are any other questions. Sanjay, I personally use 610 ticks. I find that to be my sweet spot. When I first began, I had 3 charts going. I had a 233, which is just too tiny of a time frame, 610, which I use now, and a 1597, which I found to be a little bit too long. And I use them, and now I'm just down to the 1 chart altogether. So yeah, I can literally just open up my laptop and trade anywhere. And that's the beauty of it, because when you have too many charts, you're really just shackled to your desk, which is kind of what we want to avoid. So let me know if there's any other questions, guys, because I would love to answer them. If not, thank you again for being such an awesome crowd and for asking all your questions. And thank you for having me. This has been a really fun time. Thank you. Oh, and John, how long is your trading room open? So it's usually, it depends on how long, like what's happening in the market, between 1 to 1.5 hours, because really your mind can't go any more than that, guys. That's another misconception that I should probably bring up. People that are saying they trade all day, they're in emotional trading and they're in energy depletion. We really can, and especially for scalping, 1 to 1.5 hours is really all that you could do mentally to be strong and energetic. What did you say about 610? I use the 610 tick chart, Sanjay. And Barry, what hours do you trade? So the ES is open almost 24 hours a day. I personally, because I'm in Guatemala and I'm 2 hours behind Eastern, I like to trade the afternoon session. So I get in around 1 p.m. Eastern. However, the great times could also be from 9:30 till around 11:30 Eastern as well. And if you're okay with not a lot of volatility, you could do evening and night because they're open as well. So it depends on your time zone and understanding the difference with that, right? So Sanjay, for everything I do is 1 point target, 1 point risk. There's no way around that. Okay, sorry. So I think that I am right on time. And thank you so much. And if you guys have more questions, you could email me, thetraderchick@gmail.com. I would love to answer any more questions.
All right. Thank you, Marina. That was great. Yeah.
Thank you.
Okay. Thank you, Greg. Appreciate that.
Oh, so if you can't, here, let me give you the one that you can. Hang on a second. Yeah. Oops, hang on a second here. Oops. Yeah, there we go. So that will direct you guys, that you could use on YouTube. Oh, it's the same. Everything goes through there. Yeah. Thank you.
Thank you,
Oh,
Marina.
okay.
That's great. All right. Very, very good.
Oh,
Thank you.
go. Yeah, I was wondering why it didn't pop up. Okay, well, thank you, everybody, and have a super afternoon, and enjoy the rest of your week. Thank you. It was really fun.
Very good. We'll have you again. Thank you.
Bye.
All right. Bye. Okay. Welcome. I hope you're still enjoying yourself, everybody. Let me go ahead and change this just a little bit. Oh, wait. Cancel. Okay. Let's not accidentally shut down the session while I go ahead and make myself the presenter. So just give me just 1 second here. Okay. And yeah, you should be able to hear me. There's a little bit of a weirdness there. So if you can hear me and if you can see me, go ahead and kind of mention that. I would really appreciate that, just so that I know I'm not speaking into the void, if you would. So why don't I say thank you? Okay. Perfect. That's good to hear. All right. I hope you're still enjoying yourself. I know it's been an action-packed day. We've had some really good speakers today. So I do want to talk a little bit about the software. You might have heard of it. It's called MetaStock. This year, it's been rated, again, one of the best software in its price category. If you haven't tried MetaStock, what we're going to do is we're going to do an extended trial for you. So you can pay for a month and get your second and third month for free. And that price starts at $59 per month. With it, you'll be able to do all the scanning, the testing. You'll be able to try the software that's been rated for more than 2.5 decades in a row, #1 in its price category. So we encourage you to try it. I love MetaStock. I wouldn't trade without it. You should give it a go. And of course, I have to cough real quick. Don't worry, it's just it's not the Rona. Anyway, I do want to say thank you for our sponsor, Stocks and Commodities. Again, they're great partners of ours. They help us advertise the events. They help us get people here. They're going to give everybody that registers at the link that that Greg is going to share a free trial. So we'll have Greg go ahead and put that in, or a free issue. So it's a great magazine. I love Stocks and Commodities. I really think when you're trading, you're either it's not unlike a lot of other things in life. You're either getting better or you're getting worse. And Stocks and Commodities is a really good way to pick up a few things every month and learn and read a few articles. And I'd recommend it, even if they weren't sponsoring the event. I've been reading it for decades now. So, and speaking of decades. Price Headley, a little bit of a story time for you guys. With Price Headley, when I moved from inside sales to business development, this would have been, gosh, maybe 15 years ago or so now. One of the first people I called was Price. I was familiar with the books that he's written. I was familiar with his reputation. He's been one of Timer Digest's top market timers for a number of years. And he was actually one of the first people I called when I wanted to go in and put together his methodologies into a scan that we could work. And that's a long time ago, but it's been a really, really successful endeavor. His methodologies have been very, very popular among the MetaStock group and among his own students, and he does a really, really good job. One of the things I like about Price, and he'll probably talk a lot about this, but one of the things that he says all the time that I've kind of taken to heart is he likes to ignore kind of smaller opportunities and be the work that he's done over the decades has been really built around kind of identifying the best opportunities in any given marketplace. And he's been a great business partner. I consider him both a friend and a mentor. And so there you go. There's an introduction to your Price. Let's go ahead and get you in here.
Thank you so much, Jeff. Let me see if I can share my webcam here, see if it'll work. You tell me if you can see me here.
I see a camera with a slash through it. It's not working. I wouldn't worry too much about it.
Okay, cool.
If you can't get it to work.
All right. Well, Jeff, you have been a great friend, and all the good folks at MetaStock have been so good to us at BigTrends these many years. So I know that the BigTrends toolkit at MetaStock has been incredibly popular, and so definitely we'll I'd love for you to come in towards the end and maybe share some of the scanning power of the toolkit, because I'm actually on from a remote location where I don't have that right in front of this current screen after I give this presentation. So maybe I could just chat a little bit about some of the power of the MetaStock BigTrends toolkit, because it really, folks, is about how you can narrow your focus to the best opportunities. As Jeff was saying, if you look at all the greatest, what Ray Dalio, the $15 billion plus net worth hedge fund manager, would call the shapers, the Steve Jobses of the world, the Bill Gateses, the Elon Musks, that they basically have decided they're only going for the biggest opportunities. In fact, their opportunities, as you know, with Elon Musk and Jeff Bezos, are out of this world. They're now working on space and the next they've already conquered the earth, so they're now working on bigger opportunities than that. So I think it's a good reminder for all of us that you could choose any trade you wanted, but that might not be more than just a middling average, little fish, little trend. And we're really about today focusing on how you can find the big trends out there in the markets, up or down. Lately, it's mainly been up, but we know that these markets can be volatile. It seemed to be at times a little bit too easy, I would say, ever since the presidential election back in October. It's just the markets have been roaring to the upside. But from the pandemic, just over a year ago, in terms of the market reaction that led to that violent 30% drop in equities in just over a month. I mean, things can change in a hurry. So one of the things you really have to train yourself on is how to adapt to that change. And I think the MetaStock software gives you such powerful ways to adapt moment by moment, day by day, whatever time frame you like to trade. So I'm going to walk you through some of my favorite methods in the MetaStock BigTrends toolkit that you can use in volatile markets. I think they're going to stay volatile, and so you want to position yourself accordingly. Just a reminder that everything I share with you today is for your information and education only. Nothing that we talk about here should be considered a specific recommendation to buy or sell any particular investment. And of course, you know that you are 100% responsible for your own investment decisions. BigTrends and the staff are not responsible for any trades you choose to make, and not all BigTrends products and services are appropriate for all traders and investors. Every trade you do involves risk. You've got to know how to manage that risk, and we'll talk about risk management today too. At BigTrends, we don't provide any personalized financial, tax, or legal advice to any individual. We put out all of our alerts through email updates to our clients across various subscription packages. Do consult your tax advisor before you implement any strategy. For me, the biggest challenge in today's markets, and I think it comes with the internet era, maybe just get a quick show of hands. How many of you feel information overloaded in today's world? Not just in the markets, but in the world in general today. Just give me a yes or no. You got it all under control. You can say you're fine. Put a no. But if you feel sometimes overloaded, I do. I acknowledge that there's so much information flowing out there that you have to know where to look, and you have to know how to get rid of the noise and focus on what is important, what's valuable to you and your method. Because if you're not clear on that, then you're going to get so much data overload that what do you think your brain does, folks, if you actually get too much information? What What do you think you will do if you have too many things coming at you? Some are bullish, some are bearish. Some say buy, some say sell, some say hold, some say stay in cash, some say go all in. What do you think you're going to do with all that information coming at you? Anybody have a guess? Your brain is going to go, whoa, there's too much coming at me. So what am I going to do? Nothing. My brain is going to freeze like a deer in headlights. And yours will too. You can't afford for that freeze in your trading and your investing, because you have to be able to take action through both winning ideas and trades that aren't working that are stopping you out. And so confusion, that's another good way to say it there, Sanjay. That confusion is so deadly to your trading, because what's happening is it makes you slower. It makes you actually not take action when you should. And then you're behind the 8 ball, knowing that you should have taken action minutes ago, hours ago, days ago, weeks ago, and saying you didn't, and now you feel stuck in your trade. And that's the thing that I want to help you do, is get unstuck. That's what the scans do for me, from what MetaStock calls their Explorer tool, is it literally takes thousands of securities down to literally a handful or two of the top 5 or 10 things that I should be looking at. And that's so powerful to say, get rid of 99.9% of the things that are out there and focus on that top fraction of a percent that you should be looking at. So what Jeff helped me do with his awesome team at MetaStock many years ago, now we're onto multiple iterations and versions of this, where we keep adding things in. And I'll show you some of the latest things that we've added to the BigTrends toolkit for MetaStock here today, is we added these indicators. Some of them are things that I've used when I launched BigTrends over 20 years ago. I launched my company back in 1999. Back when everybody was saying that day trading was the secret to success. I'm going, wait a minute, I've made a lot of money riding things for multiple days and multiple weeks, kind of swing trading, even sometimes position trading. And I've done that again here just in the last year. I've done a lot of stock position trading, riding them for days or weeks. I've seen stocks, even not just options, but stocks that can double in a matter of days or weeks sometimes. So it's really a powerful market for traders. But everything you see here that says BTTK is essentially a function of the BigTrends toolkit that Jeff helped me create. And so that's been so powerful to say, okay, when we can go and focus on not one thing, you don't have to try to do all dozen plus of these different versions of the BTTK BigTrends toolkit for MetaStock. But some of the tools I talk about, like the Williams %R % range, just showing you a unique way to trade that can change your perspective on what is truly overbought and what's actually the start of a much bigger trend that you can take advantage of and learn how to ride. So that's what I want to do, is kind of open you up to a couple of ways that you could maybe change your perspective on what is overbought and should you buy it or sell it. When I say the word overbought, you know that you're trained to say, if it's overbought, do you think you should buy it? Of course not. Everybody would say overbought is bad, right? And oversold, it's theoretically good. But in fact, I've made my best bull market and call option profits on overbought stocks that stay overbought much longer than you or I could expect those trends to last. That is by definition how a trend works. That not enough people are on board that trend. You and I, just like institutional investors, want more of a good thing and less of a bad thing, right? If it's working, we wish we bought more of it and we would like to buy more of it. If it's not working, we wish we'd never bought it, don't want any of what we got, and we want out of whatever we've got, right? It's the nature of the human condition of more gain and less pain, please, right? So our objective here is to say, okay, you might need to retrain yourself. If you haven't heard me talk about this, very few people are going to teach you about this different way to think about overbought. For me, there are times where overbought is indeed the top of the range, okay? There's no doubt about that. So what I define in the %R, Larry Williams, who I consider a friend and mentor, true genius when it comes to trading indicators and methodologies, he developed this indicator called % range or %R, which essentially looks at where's the stock closing today or whatever period you're looking at relative to looking back over the last 10 or 14 or 20 bars or what have you, and looking back and saying, okay, if we're closing right at the top of the range, it's going to give us an overbought reading at 100%. On the original Williams scale, it would be a 0. He went from 0 to minus 100. I'm more of a grade school guy. I go in more of a grade school scale, 0 to 100%. And ironically, the stocks that are up above 80% and that keep going up are the ones that it tells you that the institutions want to be on board. Let's face it, you and I as individuals, whether we're trading $10,000 or $1 million, we're not driving the markets. Despite all the hype about GameStop and the Reddit crowd and institutions taking a beating at the hands of individuals, I believe that that was much more about other institutions pounding institutions that were in trouble on their short positions. But regardless, the idea here is that, you know what, if something goes up and then it keeps going up, my rule is to say, you know what, I think the institutions want to keep piling into that. And I've seen it happen so many times, literally thousands of times over these last couple of decades, that we want to see the same pattern repeating. So my rule is, if it has a close above that first overbought reading, that first overbought bar's high. So say yesterday, a stock hit overbought in the top 20% of its readings. I'll show you a chart of this in a minute. And then today it closes above yesterday's high. That tells me that, hey, people want on that situation. It's so strong of a stock that it doesn't matter to institutions and to anybody that it's staying overbought. What matters is that they want to buy it at almost any price to get on board. And likewise, on the other side, bear readings, where you get in the oversold condition, the bottom 20% of that range, if you will, if you thought of a stock at between 100 and 110 over that period, you say, well, if it's below 102, it's below the 20 percentile line of that 10-point range, 100 to 110. So 102, it's 20% of that range, right? And so if it's below that, you're saying, well, that's oversold. Isn't that a buying opportunity in that range? Not if it's breaking down and breaking below 100 and continue to make new lows. So if it keeps closing below that first oversold bar, that's a bad sign. So on the original Williams scale, like I said, 0 to minus 100, all I care about is the top 20% of signals here. So what I'm looking for is when it goes into this overbought status here, which you can see my first bull confirmed arrow here is where we first got an overbought signal on this chart, which I'll draw a line across. It's right about $130 here. So at $130 here, that first high right there is what matters to say, are we going to stay at that resistance? And is the stock going to start heading back down? If that happens, guess what? It is the top of the range. You can even see it at the very beginning of this example where it started off and held that resistance for a couple of days before it gapped up. But instead, it doesn't stay there. It actually closes the next day above that high. So at about 135, you're saying, okay, now the stock's breaking out. So that's the sign to me of a start of an uptrend. In fact, on this chart for MasterCard, it's going back a little ways, but the ideas are still working today's markets just as well, if not better. And you say, okay, that's still working. Now, if you miss that first breakout, I came up with another set of rules that says, you know what, where would I still be willing to buy this at a relatively low risk reentry point? I call it a retest. This first one that's happening here, I'll put a 1 by it. This first one happening here is happening right off of this red candle low right here. You see it right on that first red candle. And what I do is I draw a line across of support across that day's low. If it closes in a future day below that May 14th low, I get out of the trade. That's a violation. But if it trades below there in whatever time frame you like to trade, this can be used intraday or daily. A lot of my charts these days are tied around daily charts because that's really where I like to say a lot of battles are fought intraday, but the war is won at the close of the day or at the close of whatever time period you look at. If it's an hourly chart, the close of each hour, you got to pay attention. So in this case, I'm saying, you know what, if you miss that first bull confirmed breakout trade, then you can buy the retest as a pretty good risk reward trade because essentially you're buying it back around 135 and then it goes up to 150 in the next couple of weeks, about a 10% rise in the stock. Now, if you miss that again, you can get yet another retest. So I'll put another number on this second one here. We'll call it number 2, second retest up here. Follow my cursor right there. There's a second one happening right off of that %R testing right into that. And that's a really nasty looking red candle right there, right? That low is the low you got to watch. The next day, in the next morning, actually, it traded briefly below that low. Notice that that candle signifies that white candle that's green, that next bar, it says that actually closed back above where it was the day before. So it actually was a reversal back up. By the close, the bulls were still holding the ball. think of it this way. You either want to play offense in your trades or defense. And it's the same way for bulls and bears. Who's on offense here? The bulls have the ball. The bears are taking shots on these retests to break this stock down. And the bulls, by the end of each of those closes, are holding the ball. They're not losing that ball. The bears are not taking it back. We get a third one. You see, in this third one, after making really good money off those first two retests, this third one's not going to make you much money. And the fourth one's going to get a quick stop out, actually. So if you think about this, not every trade is going to be a winning trade. And I can assure you, in any method that you use, you have to have a plan for how you handle your winners and how you handle your losers. Most people do it the exact wrong way, which is to say they take quick, small profits thinking, well, you can't go broke taking a profit, right? But then they take big losers, and then they end up having a losing overall portfolio because they took small wins and big losses. I want you to do the opposite here. I want you to take big wins and much smaller losses. So when I get a retest signal on the third shot here, see that third one right there on that red bar? Third one right off that low. That one holds initially. It bounces a little bit. But I assure you that by the time this fourth retest hits and then you get a violation on the red down arrow, you are done with your bull trades right there after the fourth quick violation, the very next bar, the very next candle or day. So that fourth one would be a real quick stop out, small loss. Third one, actually, with options, probably be a little bit more of a loss, somewhere in the neighborhood of probably 30% or so if you're looking at about a 1 month option, versus you can be looking at doubles, and actually I tripled that June signal from a ways back, because basically it was such a powerful move. It went from 145 to 170 in 2 weeks. So the point is, if you can make double or triple versus, say, losing 30% or even losing 50% on an option trade, you lose 50%, you make 100, that's 2 to 1. You lose 50%, you make 200, that's 4 to 1. And that's how I want my BigTrends traders thinking about any trading strategy that you might use. Is it's all risk versus reward. If you're targeting a 10% risk, I can't do that with options really, because that could be the bid-ask spread practically. It doesn't give you enough wiggle room. But we might target 20 or probably around 25% stop, and then I could target a 50% or higher gain to get 2 to 1 or higher reward for my risk. When you can do that, you don't have to have a super high win rate to make good money in trading. You just have to be able to make your twice your reward relative to your risk on average over a large sample of trades. By the way, you see that last attempted breakout was a failed setup. It did not get through that overall resistance here, so you would not have bought this thing on that right there when it said exit at close under the retest low. You would not be buying on that next attempted rally. So even though it looks like a new price high for the stock, you do not get faked out, because the chart structure, the indicator structure, tells you it's not following through yet. You stay away, and then the stock tanks off, and you don't have capital committed into a faulty or poor structure. So everything that you should think about in your trading is, what kind of structure does my chart and my indicator have? A lot of people say, oh, I just trade price action. Indicators have lag. Indicators will cost you by waiting for that follow through, by waiting for that confirmation. For me, it's been the exact opposite experience, which is that confirmation actually improves my confidence, and it reduces that word that Sanjay mentioned earlier, confusion. It reduces confusion because I'm getting confirmation that the bulls want on this thing. And you can see during that phase, it was a very nice little way to trade the zigs and zags. Now, one of the things Jeff helped me do, and his team helped me do on the latest version of the BigTrends toolkit, I had this idea to say, over my now 30 plus years in stock and options trading, I got started after I graduated from Duke University in 1989, and having had a great educational background, just totally blessed with very, very generous parents who got me pretty much anything that I could get into. They got me to great schooling, and I enjoyed that, did well, and it bred a lot of confidence. In fact, it actually bred me being initially very overconfident when I came into the trading game in late 89, beginning in 1990, because I thought, well, if I just work hard like I have in school, it'll work out, because working harder has paid off for me in school. And it's probably done that for you also in your career. If you made, if you're making that transition into trading from a successful career over possibly decades of doing this in whatever field you've been in, you learn that you dig in, you work harder, sometimes have, this all-nighters or things where you're just driving to get the goal. And then you say, well, if I just dig in and work harder in trading, that ought to serve me there too, right? Not so fast. You probably have had the experience of saying, digging in sometimes means, oh, well, maybe I'll add some more capital to an idea that's not working. And then you just get more in the hole. You throw good money after bad. You don't want to do that with trading. There's the trends that I'm right on, I tend to be right on fairly quickly. The trends that I'm wrong on, I'm usually wrong for a bit. It doesn't just immediately reverse. The idea being that, you got to admit when you're right and admit when you're wrong. Our ego doesn't like to do that. Our ego wants badly to be proven right. So that's what leads to very classic technical analysis trading mistakes like averaging down. That's just an ego defense, folks. If you average down, if you got into a stock at 20, now it's at 10, your ego goes, oh gosh, we're down 50%. I don't want to be down 50%. Well, why don't we double up at 10 and lower our average cost from 20 down to 15? Now we're only down from 15 to 10. We're only down a third rather than 50%. That is not good trading. That's throwing good money after bad. Maybe you get lucky once in a while with that. Generally speaking, not recommended, especially in options. Now, what Jeff helped me do, and I interlay here some psychology lessons to go with the technical charts, because I think a lot of trading is about having the right mindset for success and for being ultimately a profitable trader. But you see these green windows here, if you will, on the bottom of this indicator here. We've got our BigTrends bands, which is essentially another version that I created of a way to visualize Larry Williams' percent range indicator to see that it's outside in that overbought top 20% of readings. By the way, does that look like a range to you where the stock is going basically in almost a perfect uptrending channel here? You see this upward channel, you see the lower channel essentially developing here where you're saying, geez, is that a range? No, that's called an uptrend, right? Higher highs, higher lows. So that's why I use percent R for almost a different reason than it was originally developed, to say, you know what, these very rare periods where it starts to really trend dramatically is where you can make that outsized quick money relatively compared to how long you have to be in the trade. That quick pop there on that 1 week window there, and a couple of little quick ones that didn't do much there in that August window. The other periods were kind of slow comparatively. Sure, there were brief periods where it popped back up, but I don't trade in between these bands. I try to trade outside of these bands because that's where something unexpected is happening. And in this case, I wouldn't really be trading the shorts because it's above longer term moving averages. I really only like to take short trades when it's below the longer term averages. So we don't have anything. If you're just trading the percent R by itself, you get faked out of some of these shorts where you see there's no red on the bottom here. So there's nothing that's worth trading on the downside. The other development that Jeff really helped me with in the latest version of the BigTrends toolkit and MetaStock is to say, take all of the things that we did, where we put a bunch of those different things that have worked for me over all these years, and said, what if we made a composite indicator? I said to Jeff, I said, let's go ahead and basically I'll call it BigTrends score. So we've got the BigTrends bands here in the bottom blue lines, and we only want to trade outside those bands. Now notice it doesn't get you in right away when it breaks outside of those bands here on this chart. You get in halfway through that uptrend. So we're not early. And you know what? We don't have to be. The speed of movement to the second phase of that uptrend right there is where you really get paid if you're trading options. Trading options, I'm sure a lot of you trade options, right? How many of you, by the way, trade options on stocks? Just give me a yes or no in the chat box. Just I won't talk too much about options if you're not trading them. But if we've got most people trading them, I'll relate this more and more to options. That the idea when you buy options is, again, and learning about it, I'm glad to see that, TJ. So, but if you trade options, you need speed, okay? You need speed because you have to get the bang for your buck on an asset that is not going to be around very long. It is a time-limited asset. It will hit an expiration date. If you buy Apple stock, it will probably outlast you and me on this earth, right? But if you buy a 30-day option on Apple, you've got a month for something really good to happen or really bad to happen if you're bearish. In this example, you can see we would mainly be bullish. So, and we've got a mix, about half and half trading options and not, which is fine. You could trade the stock, or you could just say, okay, I'm gonna learn about this. But essentially, you see that what's happening is when all my indicators together are hitting in the, again, the top 20% of this big trend score on the top, it's crossing above that upper red line. That's actually telling me that there's something really good happening right through that window. And you can see I've already highlighted it there in that February 10th to about February 24th window, about a 2-week window there. And so the key is that, you know, you want to see that thing going and continuing to go. Notice the next one, it tries, but it never really gets any confirmation off that first breakout. It was right back at the old highs, and it immediately failed. And so I'm usually looking for a couple days of this in a row to say we've got a trend forming and that's closing above that first big trend score reading in the top 80% plus. By the way, you hear me talk a lot about 80% and 20%. A lot of you have probably heard of the 80-20 rule, right? 80-20 rule, Pareto's principle, means 20% of your actions drive 80% of your results in anything that you look at in life. In trading, 20% of your trades drive 80% of your profits. This is especially true if you buy options. It frankly will be true a lot if you buy stocks. You'll see your best stocks carry you. Your other stocks are kind of a wash between some smaller gains and some smaller to mid-sized losers. Hopefully don't let them turn into big losers. But the point is, we want to be in that top 20%, top tier, best of the best in everything that we do. You should not be accepting middle of the road readings, middle of the road breakouts, small little moving average crossovers that you'll get a ton of signals, but you won't get that best of the best kind of clarity. So when we go back and look at past years over Apple making these kind of moves, and you can just see those windows in green can last anywhere from a few days to sometimes a couple of weeks on a daily chart. So if you get on one of these, like that move there in November on this chart, he said that's where you really get paid with options, because the leverage builds on itself and it grows and grows again. It just keeps going, and the stock goes from 100 to about, you can see about 120 in a matter of just over a month. That's a huge move. Obviously, think about that. If you make 20% on Apple in a month or 5 weeks, that's like 200%, you know, annualized, right? Multiply times 10, 50, 5 weeks turning into 50 weeks. So 20% turning into 200% if you annualize that out. We would all love that, and sometimes I'm sure a lot of you have been able to do it in this kind of market. But you want to do it consistently. And you don't want to give it back. You don't want to take stabs at things you think are quote unquote too oversold, or temporarily, like if you're in there off this latest hedge fund blow up, that's been the latest news, trying to buy a beaten down stock that got sold off by that. You're probably just taking stabs and hoping for something to bounce and thinking it's a good long-term buy. But if you're trading it, you're probably not thinking about it the right way. You need that set of factors to line up, so that it's like multiple rivers flowing in your same direction. When I get these different indicators all firing bullish together, that's like 3 or 4 or 5 rivers flowing together all at once. It's going to be really powerful and much more dramatic. You can see some of the tools that we actually lay into the big trend score, and some of them are common indicators. You see there's Williams percent R. I use a different setting. Commodity Channel Index, I use a different setting. Efficiency ratio is something I developed off of the ideas of Perry Kaufman, a great system tester in his own right. Acceleration bands is my creation, sort of piggybacking on the ideas of John Bollinger and his Bollinger bands, which are also on there. They're different. ADX, Wells Wilder's average directional movement. You can see directional movement, another concept that Wilder had, and then of course the moving average concept in there as well. So we've got a lot of both common and uncommon, unconventional pieces in there, certainly with different ways that I use them compared to the traditional trader norm. I do think that if you do things just like every other trader, you're probably going to get very average or below average results. You need to have a little bit of a twist that tests well and shows you how you can profit from this. This example here on the left is another brief Apple window there where you can see in about 3 weeks in that August period, where the stock just steadily climbed. It wasn't a home run, but it popped from about 105.5 up to about 110 over a few weeks. This is why I don't always recommend, when you get into options, especially if you're new to options, I don't recommend that you start with the most aggressive approach. I tend to recommend to people to try out in the money options, relatively conservative things. Here's a different stock. How about Facebook? Facebook recently has been really interesting because there's a lot of negativity about the company in the media. There's a lot of people saying it's got privacy problems, that you're putting your data out there, and how well are they managing it, et cetera, and yet the stock keeps charging ahead. So it's almost like there's an undercurrent of sort of general pessimism out there, and yet the trends are doing, like this chart shows from a prior period, this kind of verticality, right? Facebook having a big day today. So the idea is, you're going to go apply this on your current charts in MetaStock too, and in a few, maybe about 10 till, I'll pop it over to you, Jeff, so you can show us some scanning in the current BigTrends toolkit. You see, it doesn't catch that initial breakout that the BigTrends bands do, the up breakout up 2 bars above that upper blue line there. But the BigTrends score catches this quick phase here, that little lasso I just put around that about week and a half's worth of prices, right? And by the way, one of my rules in options trading is that if you get a big gap, like you see that big black candle at the top of that chart, when it gaps open there to the upside, if you're getting a double or beyond a double on your position, I always tell my BigTrends students to take half of your profits if you can get a double or better off of your original investment. Whether you're trading options, stocks, or any other trading vehicle, if you can double your money, take half off. What that does, it gets your risk capital back in your pocket, and it lets you truly trade more freely as a result. So therefore, if you get an exit signal a week later at a lower profit level, you can take it and run, or if it keeps going, you can keep riding without worrying that you're going to give back your profits. You've already gotten your risk capital in your pocket. You can't lose on that trade once you sell half your trade at a double. So a lot of good trading principles there. Another Facebook run. This one actually showed up here. You can see right there ahead of that that buy arrow there, and then you can see it ran all the way into the breakout and then the pullback here. And my exit's coming on the close of this bar right here when it comes out of that green zone. That would be back on that May 5th in that prior year. So the idea is, okay, you know what? It gave it a chance. It ran from the 147.5 level on up to about the high 150s, but then it gave you an exit back close to $150. So what could have been a big trade turns into a medium to smaller trade, and you say, fine, that one didn't fire. We say bye-bye, we move on and look for greener pastures. So the goal of this is that, remember, when you trade, you are not in the storage business. You are in the moving business. You get a signal to move out of that, and you don't hold it and say, but Facebook's a good company, it'll come back. It'll bounce back and retest those highs. You say, I got to move it out because it's no longer telling me, when I got that exit signal, the next bar's open, what shows the buy exit there, but it's at the close of that prior bar, and then we get the exit signal on the next open. But when you see that happening that night, you're like, okay, fine, get out that next morning, move it on. It's time to not hold on and hope, okay? So when we go through and look at other names, like here's Alibaba over many different upside phases. And you'll see times where, it just steadily chugs up, and other times where not a lot of progress happens, including this last period here where you actually would have lost a little bit, okay? So I want you to be aware when that happens, you've got to be prepared to take your loss and move on. Even though that trade later bounced back a little bit, you say, look, you bought, it started to rally, then it rolled over, said give your exit, you're out of that trade in 4 days. So you prepare yourself by not overcommitting your capital. No matter how much money you've made on the prior signals, there's no guarantee that this signal will be like the past signals. You always know that you're in a unique moment in every trade that you do, but it's about looking for patterns that tend to repeat, but also knowing that you can get out if you don't overcommit your capital. What about the downside? The bond market's been tanking recently. This was actually right after the last election, where the bond market was already tanking in front of the election, and then after that election, you saw the bond market just keep tanking. Notice we're below those BigTrends bands, so we're getting those red signals, and you can see when things really pile on there in early to mid-November, we're getting just more and more selling pressure, and it's continuing to tank. There's only one other period there, middle of March, where it tried to follow through again, right back at those same support levels, and then it flips back up. So typically what will happen in there is that you'll make some good money in that first wave, then you might lose a little bit on that second wave, and then you don't short it again. So one of the things you learn in trading is you can have a view about the state of our government debt, the state of the bond market, the state of where interest rates are going, but you only trade the signals that you get. What I love about MetaStock and quantitative trading in general is it makes me very independent thinking. Doesn't let me cloud that with biases of what I hear or what I think I know about the fundamentals of a market, a stock, or anything that I'm trading. It says, you know what? I've got to follow the system and the signal. If I don't do that, then I'm not being true to this more disciplined process of trading. And so MetaStock makes it so simple to quantify and take the emotions out of your trading. Because if you go back and look at your past wins and losses, I'll guarantee you that you can probably find that your losses were the big ones were because you got locked into a view and said, well, it's a good company, it'll bounce back, or I'm convinced of this view and I'm going to hold on longer than I should and bet that it works out. That kind of rigid, inflexible thinking will cost you the most money. You want to stay flexible, and if your system says exit, MetaStock will show it to you clearly and say, it's time to go. We got to move on to the next opportunity. Gold's been kind of the same way. This is in that same period from the prior election, but it's been underperforming here recently too. You get these downside signals. That first one you see, you don't make money. You lose a little bit of money on that October signal, and then you get paid a lot. Went from that mid-November to mid-December classic kind of downtrend from about 116 on the GLD down to an exit of about 109. So, if you can make 7 points on the downside versus lose about 2 points on the first signal, think about that. Make 7, lose 2. That's like saying, okay, if you flip the coin, if you could do that 50% of the time, you say, flip a coin. When you're wrong, you'll lose $200. When you're right, you'll make $700. You should not walk. You should run towards that game and say, we want to play that game and take advantage of that kind of an outsized reward for our risk on a fairly even probability. So the idea is, okay, we know what success looks like. Now we're just modeling how it works. So on an upside example on gold, again, the first one didn't work. And again, I like to remind you that these are not just handpicked perfection, but rather saying, you know what, first one didn't work. And in fact, what you'll probably notice also is that right from the buy signal, there's no confirmation. But on the second one, you can see that there's actually follow through the very next day, and you're actually putting yourself in position to see from that follow through point right there, you actually can catch enough of a gain to take some money off the table here. And that's why everything I do, I want to set it up where if I can get some of my risk capital back in my pocket and my subscribers' pockets, even if that trade fails like that one eventually did, you don't get hurt. In fact, if I'm up 100% on a move, take half off, then the other half goes back even to break even, I should say, not zero. Zero would be a break even on the total trade, but if it goes back just to where I got in, and so the second half, it makes me nothing. 2 halves plus 100 and 0 divided by 2 gives you a 50% gain on a trade that otherwise most people would probably just ride out and get drilled on. So the idea is, okay, taking some money off while you have it is a very sound strategy. What I love about this chart is that I've talked about General Motors, GM, in past years as kind of an interesting value play. And here in the last 6 months, all of a sudden it's become a hot growth stock because they're going to the electric vehicle route, as is Ford, trying to play catch up with the Teslas of the world. And have been, again, behind on the huge edge that Tesla developed in getting that electric vehicle push out sooner. But, this was a prior example. This is not from last year. This is from a prior year where GM was surging, and you go, GM is surging? Are you serious? But you look at that and you're like, everything is bullish. It's at 100% on GM. This is going back there to 2017, but the idea is still the same, which is that if GM goes from the 37 area to the 43 area in a matter of a few weeks, that's a huge move where you know that the options are not priced for that big of a move. So you're going to buy some relatively cheap options and really be able to ride it for much bigger potential. So, as I mentioned earlier, when you think about if you're new to options, and I should probably start with a call trade, but I figure most of you know about buying and selling calls, but maybe just talk about a put trade for a second. It said, if you were bearish on something like XYZ stock and say XYZ stock is trading at $56.60, you say, okay, well, you know what? If XYZ is trading here $56.60, if I was going to sell short 100 shares of that, that's like my broker's going to require me to put up some amount of that $5,660 is what's called margin. I have never advocated selling short stocks if you can buy a put option instead. And I'm like, why would anybody want to get so short GameStop and put themselves at risk of something going up many multiples of what their risk capital was? That's just a bad idea. Versus if I say I buy a December 60 put, this assumes we were, say, a month out, say in November, you buy a 1 month option. Say we were in November, you buy 30 days out, it's a December 60 put. That is actually going to cost you $470, but it's already, how much is it in the money? If you have a 60 put here, folks, that means a put gives you a right to sell the stock at that fixed price, which is called the strike price of $60 in this example. Well, it's already worth what, $3.40? So the idea here is that you're looking at 340 out of your 470 is already just what we call intrinsic value. If you wanted to exercise that option, you could pocket that 340, but you wouldn't want to do that because it's worth more than that. It's worth 470. The other 130 is worth, it's what's called the time value. So in this example, it's about 78% of the option is intrinsic value, and about 28% is, or 22% is time value. So the point being, okay, if we're looking at this and saying, what if you're right about the stock dropping and say it drops to 50? Well, if you were short the stock, you'd make at 50, from 56.60 down to 50, you'd make $660, 11.7% on the stock value. But look at what the option does. What's a right to sell the stock at 60 worth when the stock is now down further at 50? If you could sell it at 60 and then buy it at the current market price at 50, you pocket that 10 points, which on 100 shares per contract means you pocket $1,000. You paid $470. So you would make $530 profit. These examples, of course, are before commissions, which, of course, are down to next to nothing, if not nothing. But the idea being that, look, you make about almost 10 times as much buying the put option as you do shorting the stock. 112% gain versus 11.7 on the stock. So the idea is I don't want to short a stock when I can buy a put. I don't want to buy a stock if I can buy a call and create an in-the-money, what I call a stock substitute. Some people call it a stock surrogate idea. And so it's really powerful when you focus on how you can zero in on these kind of situations. You know, and we've got loads of examples from even during the crash of the financials back there, you know, because it's a good reminder that, you know, I don't think that we're never going to see those crashes again. We will see them again. The question is when, and will you be prepared to profit from it? You know, you work hard to build your portfolio. You work hard for your money even before you can invest it. You work hard for that money. You want it to work hard for you, and you don't want to give back your profits, or worse yet, get stuck in one of these free fall situations where then you basically give back those hard-earned gains and that hard-earned money in your portfolio. So, like when Bear Stearns, the old BSC was a symbol, was breaking down. This was actually before the pandemic, as the financial crisis was starting to happen. We were starting to say, hey, you know, Bear Stearns is starting to give us some bear signals. I always thought that was an interesting name for an investment company, Bear Stearns. They didn't call it Bull Stearns. But the point being that, you know, it truly lived up to its name, because then the next bear signals that came in 2008, including the one that was the undoing of the company in March of 2008, were showing us these kind of breakdowns. You see the first breakdown was profitable. The next breakdown, these bands are my acceleration bands. The second one there, the percent R was breaking down the upper panel, but notice my acceleration band was not picking it up. So the first one caught part of that move. Second move never accelerated. Look at this last move. This last move, we caught the acceleration signal here at about $69.94. I remember it well, just under 70. So as we're catching that signal right in here, you know, our percent R is breaking down, but now our acceleration's happening. and we were getting bearish there just under 70. And you know what? I made a mistake on this one. We had put options on bear stearns, and usually, like I teach my students, we sell the whole position. We sell half the position at a double. I sold the whole position at a double in just a couple of days, and then thought, well, I'll get another chance to get back in, and I didn't. And that double would have been more than 1,000% gainer. So the point being is that this is why I always remind not just you all, but myself, don't sell your whole winning position. If you can get half out of the double, just take half off and give it a chance to keep riding, because, you know, it tanked into a Friday at $30. And then over the weekend, that time in March, JP Morgan came in that Sunday night and said, we'll buy the company for $2 a share. I kept hitting the F5 button on my computer saying, that's got to be a mistake. That's got to be a typo. It's got to be more than the $30 a share, right? And they're like, no, $2 a share. It opens at 3.5. You know, so from 30 then the next Monday morning. So it's a great example of the bear trends being incredibly powerful. So these blue lines are acceleration bands, which are different than those %R big trends bands, which are part of that toolkit. One other concept, if you're getting into options trading, a lot of people think they'd rather trade a stock with a lot of squiggles and they'll get more opportunities to trade versus something that doesn't squiggle at all. Like the black line is just a slow, like steady tortoise, if you will, versus the hare, the rabbit in red. You know, say the rabbit is your typical tech stock that's got a 40% implied volatility versus the black line is, say, your typical whatever utility grocery stock that's got a, say, a 20% volatility. Most people assume that they'd rather trade the red one because it's got a lot more swings up and down. But my experience is I would much rather trade the black options than the red. Let's say it's an at the money 50 strike call and both of them are going up to 60 over a couple of months. You buy a 3-month call in both of them. Which one do you get more money on? Well, they make the same move from the beginning to the end of this indicator and these drawings that you say they make the same move, but say you pay twice as much in volatility, you'll actually get half the return. Some people say, but I can trade every squiggle. And if you can do that, you'll have your private island in no time. My experience is those squiggles will actually stop you out. So this is where I saw a gentleman, Perry Kaufman, who's a great systems tester, who was talking about this concept of efficiency in kind of a different way, but same idea. And he was developing one kind of an adaptive average from it. And I thought, well, isn't this an interesting indicator if we created an efficiency ratio? How efficient is the price action relative to the volatility, relative to the price movement? So from a prior period where silver was breaking out, and it was breaking out above these blue acceleration bands, but it was also my %R on the bottom, the big trends version of %R was also breaking out. But the green line in the middle is the efficiency calculation. The efficiency ratio said when this thing breaks out above that plus 30 area, you want to be on board this upside train. It had a few retests back into that plus 30. Those retests held. Only when we got a change in margin requirements from the silver trading futures exchange did that trend end about 2.5 months later, and then the thing started to come back off and violate. I tell you to get on out here, as you can see, it broke back down below that support level in where was that? Beginning of May on this chart. So you say, okay, if that's happening here, right in this area is our exit versus our entry. That was still a great trade and a great example of that very efficient, steady uptrending action without a lot of give back. So what you want to see in your trends, folks, is you want to see steady ups and not a lot of give back. What I want to do is I want to bring Jeff back in where maybe he can show us a little bit of the Big Trends toolkit and some of our latest iterations. I'll hang in, Jeff, if you want me to comment on anything that you might pop up off of it. But basically, this is all about how to get your focus back, folks, on the best of the best trends and opportunities and leave the rest to everybody else.
Okay. Well, yeah, absolutely.
Thank you, Jeff.
Good job. Can you hear me okay, Bryce?
Oh, you sound great.
Okay, very good. Let me go ahead and do this. Diane says, how do I get a recording of this session? Which is actually a very popular question. We've been getting it all day. And I am going to show the big trend scanning and how that all works. If you go here, well, let me see. Diane, can watch the whole thing right now on our YouTube channel. So make sure if you go up there, the videos are free. All you have to do is like and subscribe to the channel to get them. No, I'm just kidding. Yeah, but we do appreciate it if you like and subscribe. Price, great job. I appreciate that. I'm going to go ahead and kind of take over the presentation. I want to talk a little bit about kind of the scoring method you've been talking about, because I like what kind of the way that we went with it.
Mm-hmm.
And let me go ahead and just kind of make me the presenter here. I've got a screen up. Behind that screen, can you see the screen right now, Price?
Looks great.
Okay. So one of the things, obviously, in the BigTrend toolkit, there's a lot of methodologies. We've been working on this. This has been a project for a number of years. We've got the 80-day Bollinger Bands, acceleration bands, the BigTrends bands. We have all of these different methodologies. But one of the things that I thought we did a really, really good job with last time when we kind of designed a new one is we kind of put together a scoring system. And Price wanted to kind of go in and take a look at many different kind of variables on there. So to kind of illustrate how that works, I've just opened up a chart of a little automaker called Tesla. And what I've got here is I've got just kind of basically the symbols as they'd appear on a chart. And I kind of just want to spell out how the commentary can also help you understand what's going on. So I'm going to zoom into this kind of upward trend that we were in right here. And I just want to point out that right here, we started to kind of issue a little bit of this diamond on the chart. And then the next day we had a buy signal. Here we had a diamond on the chart. Here we had a diamond on the chart. Here we had a diamond followed by a buy signal. What we're doing here is with our BigTrends scores, we're taking a combination of all of a lot of the BigTrends score indicators, and we're doing a score based on kind of what Price felt was very appropriate for any particular category. So if we look at the breakdown here, we're going to see that the BigTrends percent R, or the Williams percent R, is bullish. The two-day Williams percent R was bullish. You can kind of see a breakdown. The CCI was bullish. The efficiency ratio, everything in this particular case was bullish. Okay. In the scoring that we came up with, it's a scoring that goes from, I believe, about a -100 to a +100. And to get a setup, what we're looking for is we're looking for a score to go above this red horizontal band. So this is the score. This is just the score that we're assigning to all of these indicators combined. And right here, you'll notice that it goes above the red line, which is 80. That's where we kind of can trigger a setup. And so when everything kind of matches up, what we're going to say is that we're currently crossed above 80. This is indicating a buy setup is formed on the current bar. Traders looking to trade this should look for a trigger above the high of the current bar, which is 526. And which is so basically what we're saying is, okay, we see all these indicators kind of matching up in the direction that we recommend. If you get if you get a price above the high today, that's going to be an entry signal for us to go ahead and get into the marketplace. And so as you see right here, the very next day we do go above that high. And so in that case, we're going to give you a buy opportunity. One of the things that I've always been really impressed with Price is the specificity of what he uses. So you can tell he's been doing this for a long time, but he's going to tell you, okay, we've crossed above the high. He's going to say, if you're interested in looking at taking a buy position, you could be looking at, here's the strikes you should be looking at, or if you're conservative, here's the intrinsic value. We'll be looking at one strike in the money if you're conservative, but this is all spelled out for you. And then in addition to that, traders should look to exit the position when this happens or when this happens. And we're going to, I'm a little bit too early in my data set. That's why there's these functions did not return a value, but you kind of get the idea. It's all automatic. It's all kind of really well spelled out. And it's all based on kind of the indicators that Price has used over the years. So the other thing I, of course, I like this concept of scoring. And Price really developed the concept, but I liked it so much that I actually incorporated it into all of the scans. So if you scan for his acceleration band system, you're going to get a score. You're going to be able to see what that score is. But if I wanted to do a scan based on that score, obviously, since there's a couple different scans we could run a scan for the setup. That would be searching for the triangles here. Or you could run a scan for the trigger, which would actually just be searching for the setup to happen yesterday and then for us to break the high today. And if I run that scan, here we go. I'm going to go ahead. I need to actually go and find where CPS is selected and unselect that. I'm going to run it real quick just against the S&P 500 so I can show you. We'll just move it up. That'll be easier. It's just going to go through that entire S&P 500. It's going to show us which ones have a setup for tomorrow, so we can just be looking to see if they penetrate the high. And it's also going to tell us exactly what that score is, so that we can kind of see at quick glance exactly what the scoring for all of those indicators that go into that score are. Like I said, this is the third version of the BigTrend toolkit. But I love this score. In fact, Price is like, I told Price I was just going to implement it into all of the scanning, because even if you're looking at acceleration bands, you can see based on what the score is giving you here, a larger number is better if you're going bullish, and more of the indicators are kind of lining up. And I love that as a filtering, regardless of what you're doing with Price's stuff. So how did I do, Price?
Fantastic, Jeff. I mean, and that's a good reminder to folks to say, there's a temptation to want to say, well, this hasn't participated yet. I'm looking for value. I'm looking for something that's going to catch up to these other moves. That is not how you want to think when it comes to trading. Like Jeff alluded to, you want the best scores. You want to be on the strongest names on the upside, the weakest names on the downside. That's where the momentum kicks in and becomes kind of a self-fulfilling prophecy in a lot of cases of why these trends exist, why the whole GameStop thing was just one example. Every Washington D.C. regulator wants to say GameStop was a bad thing. I think it was a perfect example of how trends just go in motion and the pile-on effect happens, and you can profit from that. And it's not just happening in GameStop; it's happening every day across thousands of situations to the upside or the downside. So it really is about finding that best of the best kind of score and that best of the best type of leader that's going to help you lead your portfolio. And there's nothing I love better than even seeing the market is just choppy and directionless, and my stocks are going up if I want them to go up, or headed down, to kind of offset some of that, to hedge it a little bit. If I've got some bear trades, it just allows you to see where the money flows are going, and the stronger that money flow is, the more you want to get synced up and in tune with it.
Price, great presentation. I really appreciate your coming in and spending some time with us.
It's always fun. Thank you, Jeff.
And don't worry, Tom, I'm going to answer your question, but we'll get a little bit into it. Price, again, thank you very much. I appreciate it. And we'll see you again soon.
All the best. Take care.
Right. Cool. Okay. All right, so you can see a copy of the methodologies. Tom says, I'm new to MetaStock. What do I need besides the add-on? Well, thank you for your interest in the add-on. I'm going to kind of talk a little bit about how to get it. We did talk about, all of the stuff that's included, and it is fairly big. This is version 3.0. We've got 17 new experts. We've got 17 explorations. You do have system testing, so you do have the ability to go in and test and the trading ideas and see how they work, and you get the 18 custom indicators. What I'm going to, as part of the conference today, normally this is a one-time cost and it only costs $699, but as part of the conference today, we're going to give you $100 off. It's going to be $589. I guess it's going to be $589 today. That's a bit of a typo, but we'll still honor it. It's right here on the screen. So we're going to give you $589. Just give us a call at 800-882-3040. You can visit us online at metastock.com/salespchat. I doubt you'll be able to take care of that additional $10 discount on the website, but just give us a call, 800-882-3040. We'll honor it for you, or metastock.com/salespchat. Tom, if you're new to MetaStock, welcome. I really appreciate your interest in MetaStock. We've been talking about MetaStock all day. As I may have mentioned earlier, it's been rated #1 in its price category for 28 years in a row. If you're interested in trying BigTrend Toolkit, we will absolutely include a free trial to either our real-time or our end-of-day version of MetaStock. We'll give you a money-back guarantee on the BigTrend Toolkit 3. We'll pair you up with somebody to help you get everything installed and make sure you understand how all of the scanning or anything that you might be interested in it works, and you'll enjoy it. So if you don't, you have a money-back guarantee and you can cancel. It's a very, very good risk/reward ratio. So give us a call, 800-882-3040. You can visit us online and you can chat with us online for this actually very special price of $589 at metastock.com/sales chat. Then they can take advantage, they can help you with that. And there you go. I do want to say thank you again to Stocks and Commodities Magazine. They are great. They've been supporting us for a long time, helping us with the conferences, and they've been a sponsor of our Traders Summit and our Traders Conference since we started them. So we really appreciate their kind of longevity, and they do a great job, and it's a great magazine. You should definitely get your free copy of it by going to by going to the link in the comment here, metastock.com/conference. Okay. Okay, there we go. If you just want to do MetaStock, you've heard maybe some good things about it today. Maybe you learned you could scan the whole market at once, or test trading ideas, or do forecasting, or get real-time alerts. You can get your own copy. If that's all you want to do today, we'll be happy to get you set up for it. MetaStock pricing starts at $59 a month. The pricing that we're going to give you is if you subscribe for a month, we're going to give you that second and third month for free. Gives you a nice long time to actually try it out and make sure it works for you. You can do that online at metastock.com/traders-summit 3-for-1, or you can give us a call, 800-882-3040. Or metastock.com/sales chat. So, and all of those are going to be flying up in the comment section there for you. So in any case, give it a go. There's a reason it's been rated so highly so long. Our next guest is Fausto Pugliese. I'm kind of in my head, I'm thinking about the best story to give. I really like Fausto. I've known Fausto for a number of years. I remember that one time he got in quite a bit of trouble by giving traders cheese at an expo one time, and that's actually a real story. But the thing I always remember about Fausto is his work ethic. He's the only person that we've ever worked with here at MetaStock that's actually given a presentation, a webinar, right before he had a child born. So, and it was within, I don't know, he can tell you the rest of the story. It was within an hour or two. It was pretty close. So we love Fausto. He does a really, really good job, and we're going to go ahead and bring him on here. How you doing today, Fausto?
I'm doing good, Jeff. How you doing? How's it going?
Good. You're not having any babies today, right?
No, but I am on vacation, and I'm looking forward to being here. Money never sleeps. Like I said, it's doing it. That's one thing that's great about.
Oops. You cut out a little bit there. Oh. That's my fault.
What's that?
I went to make you the presenter and I muted you. So, and then I was complaining that you were cut out. So let's go ahead and have you. I can hear you now.
All right, hold on. Let me get my screen up and running. All right. And hopefully this is all done right.
We can see it.
There we go.
It's coming through. And it looks great. You're on. I'll get out of your way.
All right, perfect, everybody. So welcome, everybody. And, man, what a long day for everyone here. It's so great to see that you still got over maybe 300-400 people still here today. That is amazing. Let me just get a little chat back. Can everyone hear me loud and clear? Just want to be able to see if everybody can hear me loud and clear in the questions. I want to make sure nobody's sleeping, because let me tell you something. What am I about to show you, ladies and gentlemen? I'm going to interact with you. I'm going to ask you questions. I need to prove to you if trading is for you or not. So as we move forward, Like we always, everyone, the presenter here says, listen, trading is very dangerous. Okay, so there's a very big failure rate, and I think that's why most of you are here, because you realize that you got to learn before you can earn. But everything I'm going to be doing here, I'm going to show you, is for educational purposes. So please, be very, very careful of what you invest. You should only invest when you can afford to lose. So what we're going to be learning is today, ladies and gentlemen, is we're going to talk a little bit about how to find the best stocks that I trade and how to find the smart money, meaning basically how to shadow the big brokerage firms. I'm also going to talk about consolidation. I'm going to talk about how to monitor tape reading, which is what I am. I'm a tape reader, and how to turn trading into a serious business. Now, I know you had some great presenters here, and MetaStock does a phenomenal job of getting some of the best people in the industry. And it's great that everybody here tries a little bit of everybody's different style. If you're a swing trader, if you're a day trader, if you're an options trader, you're a cryptocurrency trader. I mean, Jeff handpicked some of these presenters because, it is very important that you want to be able to have people to realize what the game itself is involved in. Now, who am I, and why I've been around for so long? Let me just kind of tell you a little bit about myself. I started one of the first schools in the industry, and I love what I do. I surround myself with great traders. I was a market maker. I started as a prop trader here in New York, the financial capital of the world. And basically, over the years, what I've learned is that I started when I was 22, and believe it or not, I was semi-retired at the age of 24. Now, before I was a very good trader, I was a very big loser. I lost a ton of money for one reason: ignorance, stupidity. Thinking, hey, I'm a 22-year-old kid. What do I need to learn? I got lucky on one trade. I thought I was sitting on top of the world. And then all of a sudden, I just gave it all back, not knowing not how to make money, but how to stop losing it. And that is what I'm going to show you. So let me tell you just very briefly, I raised the white flag. I took a job as a professional trader, and then I just realized that when I stepped in that whole room and I watched hundreds of traders trading every day, I'm looking at these people like, why am I not here? What are these people doing that they're successful and I'm not? And it comes down to one thing: who trained you? And also what tools you're using. Okay, like the MetaStock platform. So these are the things I'm really going to talk about and tell you a little bit about the tools that I use on the MetaStock platform. And then also at the end of the presentation, I want to invite every single one of you into my original trading room, because what I've learned and how I started the school of Cyber Trade University is that I was an entrepreneur. I didn't want to split the profits with the company I work for. So what I ended up doing is I said I had to start my own group, my own trading room. But the only way you could trade with people is they have to trade like you. So I'm going to tell you a little bit about day trading and what it is, and and why we do it, because that's why I teach people. I'm here to teach people how to trade so I could trade with them and make money with them. You can't do this by yourself. You can't sit there and think you could sit in some room and and just watch some financial stations and so on. You really have to surround yourself with good traders, and most importantly, making sure they are good traders, and and they're in your age group, and they have the same values as you, and that's what you have to look at. So, big thing you always have to remember: you have to learn before you can earn. And that's how you become a very good trader. And that's why I think a lot of you here and the step that you've taken. Now, just to let you know, one last thing before I start teaching you the style of Cyber Trade University, I have a question to ask everyone here. And my question to you is this: what kind of trader is everyone here? Are you a stock trader? Are you a day trader? Are you a futures trader? Are you a cryptocurrency trader? What kind of trader are you? Because that really has a lot to do what you're doing, if it's going to make you money or are you going to continue to lose money. So what kind of traders do we have? All right, good. So me personally, I'm a day trader. And what does that mean? I like to trade stocks. I just like to make a day's pay. I get in, I get out, and that's it. I'm not a type of person. I don't like to go out there and trade all day. And, hold positions. I don't know. I just like to sleep at night. And most importantly, you can't lose too much holding something overnight. So that's really what the big thing is. So that's basically the kind of trading I do. Now, let me just change the slide here and tell you a little bit about day trading. So what exactly is day trading? Well, day trading, a lot of people get nervous. They think it's quite risky. It's actually the least risky type of trading. And, the big thing you have to learn when it comes to day trading is you can't go into trading thinking you know how the market works. You have to go out there and you have to trade the market like basically just there to make money. You can't look at it where you know more than them, because if you do, you're going to lose. So how did I learn that style? What made me gear and trade specifically day trading than doing swing trading or option trading? Well, like I said, I live here in New York. It's the financial capital of the world. And people go out there and they want to know, how did you find this one, find that one? This is all I do. And this is what I was trained. You follow the money. That's it. You follow the money. You can't go out there and try to get too over analytical on certain things. Day traders, the way we work is we try to find things that have very big movement early in the morning, make their move, and boom, and take off. Like, what made a big move this morning? Mara, M-A-R-A. What was up? $7 today? $7. Why 7? I mean, I don't think Apple was up $7. And what is it? 3 times the price? So, I'm using Apple as just an example as a brand name stock. But the thing is this, why was it up? You know what? I don't care. I don't want to know. I don't need to know. I am just here to make money. That really comes down to it. So here you have the stock Mara, big winner, closed up big. But if you notice from this picture right here, this is what we do here. Mara made his big move at 9:30, and it ran from, what was that? $48 to was that $56 all the way up until the middle of the day, right? So listen, us day traders, we make most of our money just right there at the bottom. That's it. You see that big move right in the morning, right from 9:30 to 10:30. That's it. We just make our money there, and you don't have to trade all day. That's day trading. Now, a lot of you probably want to know, okay, why did it go up so much? Who ran it up? Honestly, who cares? Does it really matter? No, it doesn't. So the thing is, how do we know it was going to go up? How do we find these things? Well, the nice thing about the MetaStock platform is, let me tell you how I find my stocks. And then these big movers, these big run-ups, if it's a long or short. And then I'm going to tell you how the strategy I was trained as a market maker, how to know if they're going to continue to go up or they're going to go down. The first most important place to look is you got to work off the big percentage gainers and losers. Now, MetaStock does a very good job of segregating and filtering out a lot of these 25,000 stocks that are moving. You have to remember, you're here for one reason and one reason only, and that's to make money, right? But how do you find the stock that day that's going to give you the least amount of risk with the high amount of reward? Very simple. You go through the big percentage gainers and losers. That's it. That's all you have to do. But the next question people ask, and they say, okay, well, you found these stocks, they're up 50%, 100%. Maybe some of you have been following me on Twitter and YouTube. Mrs. Fausto, I saw you trade, TCAT. The thing went from $5 to 60 in like 3 days. How did you know? You know what I'm saying? Everyone started talking about 2 days later. All these things. So the thing is, how we do that is I'm going to show you how we filter them and how to find out which one is going to give you the least amount of risk with the most amount of reward. Is the mic sound a little bit better? I moved it away from my mouth. Does that sound better? PS, I don't know. Sometimes I get a little excited and the mic moves around a little bit. But anyway, the biggest thing that everybody has to learn is, how do you not learn how to make money? It's how to stop losing it. That's my biggest thing that I teach. That's my style. I don't worry about the winners. I don't worry about Mara going up. The question is, how did you, what is it going to take to buy it? Who's going to run it up? That's what we have to look at. So I want to start off talking with a couple of vehicles. Okay. Now, what I'm really specifically known for is trading on something called level 3 and level 4. Anyone ever heard of, anyone ever heard of level 2? Just give me a yes or no. Anyone ever heard of level 2 before? Every platform, every brokerage firm offers it. Okay, good. Now, some of you probably looking at level 2 and you're like, I don't really know what it does. It moves pretty fast. And first of all, you're right. Level 2's been outdated since the 90s. I don't know why they even still have it, believe it or not. But the next question is this. Have you ever heard of level 3? Have you ever heard of level 3? Now, some of you probably saying, yeah, I heard about it. It's like a unicorn, but I don't know if it really exists. Well, let me just tell you this. Level 3 is an ECN. Now, what that is, it's an electronic communication network. It basically allows you to become a market maker. Now, I don't know if anybody here ever watched my videos, but I'm featured on NASDAQ. NASDAQ invites me to come on their show to talk specifically to trade or something called NASDAQ Total View. This is the same platform that every brokerage firm, every execution company posts their orders on. The exchange wants you to know how to use it. All right. So what you're about to see right here is going to be about 20 times more data than you'll get with level 2. Now, just remember this for a second, because this is where it's going to get very exciting now. Okay. I promise you. And my question to you is this, and this is the most important question. And let me tell you something. If you can't answer this question, you better quit trading. Okay. So the question is this. How do stocks go up and down? What drives them up? Everybody here should answer that question. If you cannot answer this question, I'm just going to be, and please don't mind me, I'm very brash. You better quit trading. If you can't answer that question, and the question is this, how do stocks go up and go down? What drives them up? Exactly. Buyers and sellers. Can everyone just write that BNS and not the BNS we're talking about? Buyers and supply and demand. You could put that also. Buyers and sellers. Supply and demand. Okay? So think about this for a second. Well, thanks for coming. I know it's been a long day for you, but I wish you'll stick around because you probably would be worth it. We're going to be done maybe about another 20 minutes. This is where the fun's going to come in. So think about it for a second. If you could see where all the buyers and sellers are, what's that worth to you? I mean, what would you pay for that? I mean, like, think about it. How many times do you always feel that somebody's watching you? Nobody's watching you. You're just not watching them. That's the problem. And I didn't know this until I stepped into the arena of a professional trading room with hundreds of traders here in New York, right here, right on Wall Street. I'm like, what the hell are these guys looking at? I had to look at all those numbers. They're looking at orders. And I'm like, wait a minute. Is that legal? They're like, of course it's legal. And you know what the next thing the guy told me? He was like, let me ask you a stupid question. Who trained you? And I'm like, what 99% of people would say? Myself. I'm like, duh. No wonder why you're not losing money, buddy. And remember, I'm talking about something that happened 25 years ago. And what happened today, nothing has changed. It's the same way Wall Street trades. It's all about supply and demand. So level 3, let me explain to you what it is and how it works. Okay. So basically, let me just get my little pointer right here so you guys can follow along. How about that? Let me just do that. Give me a second here. Okay. There we go. Here's my little pointer. Okay. So when you look at this system, you're like, a little confusing, a lot of numbers. I get it. Okay. But 95% of what you're looking at is worthless. It's not needed. This is all you need to know right now. Right here in the middle, the left are the buyers, the right are the sellers. What you're looking at is at a negotiated system. You're looking at the exchange itself, NASDAQ exchange. These are all the orders that people are placing out there that trading the stock. The buyers, the sellers. Now you have 3 columns. You have orders, meaning how many orders are out there. Shares, meaning how many shares make up those orders, and the price that they want to buy it for. Whoever wants to buy for the most amount of money is up on top. Whoever wants to buy for less money is down at the bottom. So what you're looking at all the orders out there. Now, if you went out there and you put a limit order out there, guess what? Your order is going to come up here. The difference is you're not seeing it. You're not seeing everybody else's. Think about that. How much smarter and better trading decisions would you make if you could just follow the money? Well, guess what? It gets even better than that. Let me change the slide. Are you ready to fall off your chair? Okay, let's look at this. We're looking at a stock right here, and the stock is Macy's, okay? So when you look at Macy's, the stock started around $18, went all the way down to a price of, hold on, my pointer so you guys can follow along, okay? Went all the way down to about $17.60. Stopped in an hour. Now the question is, why $17.60? Why not 18? Why not 16? Why did it pick $17.60 out of every number out there? Why $17.60? Well, because what makes stocks go up and go down, like you all just said earlier, is buyers and sellers, supply and demand. And when you look over here, when you look at the level 3, the buyers are on the left. So you want to look for buyers. And when you'll notice, there's a very substantial buyer of over 322,000 shares looking to be bought right at $17.58. And by the way, that's not one person, that's 18 people. And please don't tell me if you know, don't tell me, oh, Fausto, are those real orders? Yeah. What do you think? They're all in cahoots with each other? Of course they're real. And if you don't believe me, when I invite you in my trading room, I'll find an order like that and you tell me, and you execute, and you tell me how fake it is. Okay. So anyway, here at Cyber Trade University, believe it or not, we really don't teach support and resistance levels. And I'll tell you why. And please don't misconstrue what you learned so far, because it does work, but I do it differently. You can't have a support level unless you have buyers. Support levels can be broken all the time, right? You need buyers. Buyers are what make support. So what I teach my traders is not how to read the past, but how to read the future, okay? That's what you want to look for. Think about climbing up a ladder, right? What's the first thing you do? You look up. Why? Because you don't want to hit your head. All right. So that's what we're looking for. We're looking for those floors and ceilings. But what makes those floors and ceilings are those orders. And that is the reason why the stock went from $17.60 all the way up to $18.10. All right. Because that buyer made the support, and not only made the support, he probably ran it up also. Now, by the way, there's plenty more. We got more here. So look at this one. Here we're looking at another stock, okay? This stock right here, Workhorse, started in the morning at 9:30, ran from $18.50 all the way up until about 12 o'clock. It decided eventually reversing right around that price right there of $24. Now, why 24? Why not 23? Why not 25? Who the hell is 24? Well, if you look at level 3, fellow traders, you'll see working your way down that list, you got 100 share sellers, 500 share sellers, 700. But when you work your way down that list, you got a 54,000 share seller out there. What do you think is going to happen when it gets to 24? It could go higher, but you know what? I'm not that stupid. Let somebody else think that way. I'm going to go out there and sell it right before him. And you know what? If you didn't, look where the stock ended up going. You see, being a good trader is having a good game plan. And that is what we preach our traders. And this is what I'm looking for. And this is what's going to help you become a very successful trader in the business. And this is why I've been with MetaStock probably for over 20 years. You know, Jeff has watched me done traders challenges, and I competed against every school in the industry. I beat every one of them in day trading, obviously. But this is what we do. This is what we do. And when you use the MetaStock platform and you have the right software, the problem is, though, you need to have people to trade it so you know how to use it and monetize it. And part of the monetization in it is having a game plan. Think how much better and easier that would make life be. Now, let's look at this example. Let's have a little fun. Everybody ready to have a little fun? Let's have a little beta test right here. Let's see how all of you could kind of like, answer this question. Now, looking at this chart right here, is this stock going up or is it going down? Can everybody tell me? What do you think? Up or down? By the way, if you answer this question, you damn well better quit trading. But look at the chart. Tell me what the direction of the stock is. Jim says down. Okay. Mike says down. Who else? Come on, guys. There's over almost 300 people in here. I know you're exhausted and you've been around all day, but let's hit it with a bang. Let me tell you, it's not a hard question. Is it going up or down? I want a stupid answer so I can give you, I'm going to tell you where this is going to lead us to. So guess what? If you said it's going down, congratulations, you're right. Okay, you're absolutely right. You just passed kindergarten. Okay, all right. Now here's the $64,000 question. Is American Airlines going to zero? I mean, it's got to stop eventually, right? When is it going to stop? What do we need for this stock to stop going down? What do we need? Exactly. You need buyers. Do you see buyers on the chart? No. So what you got to do is got to go to level 3. And when you look at the buyer section, you see all these 600 shares, 500 shares, 800 shares. Once you get to $28.55, bam, 98,000 shares are out there to be bought. There are 8 people out there that make that up. You think I'm gonna second guess that guy out there? Come on, seriously? You know how much money that is? That's over $3 million almost. $3 million. Are you putting $3 million into an idea? I don't think so. Okay? I don't think so. So, what do you think is going to happen when it gets down to $28.55? Oh, what do you know? At 10.15, the stock bounced, and that's not some 7.15 is a whole number, and it's part of the Bermuda Triangle thing. When this crosses with that one, listen, you can sit there and you can analyze all you want. It only went up because that buyer was out there. He was the main support reason of that chart. Does that seem hard? Did I lose anybody yet? Just out of curiosity. Good. Because guess what? This is the easy part. You know what the hard part about trading is? The hard part about trading is hitting the button. The hard part about trading is the psychology about it. Okay? And that's what makes things so difficult. Hell, if you can't buy one share of stock, you shouldn't even be trading. I mean, you have to trade. And it's not that hard, fellow traders. All right, let's have a little fun here. We're going to look at the stock HAL. Let's say we were looking and we own the stock. The game plan is you always want to learn how to take a profit, right? Where do we sell it? Where would you think, in theory, ballpark, strategize, where would you think selling this stock would be a good price to get out at? 100? Well, we can't go to 100. It's obviously between 24.47 and 24.70. Where do you think? Janet says she's still with me. All right, Janet, thank you very much. Appreciate it. I know it's a long day. Guess what? If you said 24.51, congratulations, you're right. You got 60,000 shares there selling it. They're going to go out there and question $1 million worth of stock looking to be sold? Come on, guys. All right? Well, but when you look at the chart, right? Chart had it. This funny. If you look at this chart, it had such a tough time breaking consistently right there at 24 for the past hour. It went up, it came back down, went to 24.30. Went up, hit 24.50, came back down 24.30. Why would you want to question that? So you can sit there and analyze it all you want. At the end of the day, the reason why that stock came down is because of that iceberg order. That's what you have. Wonder why there are background noises. I have no idea. It could be the Russians. I don't know. It could be somebody. All right. Anyway, so getting back to this stock right here, look what ended up happening. It not only hit it once, twice, 3 times. It hit it going up to 12 o'clock. And if you didn't get out, look where it went. Almost went all the way down to $24. You see, fellow traders, you don't need to make this complicated. Huge has a question. End of the of day trading stock options, futures, option forex traders. Well, Huge, let me tell you this, Hugh. I don't know how long you've been trading futures or options or forex or even day trading stocks, but I tell somebody this. If you're not making money doing what you're doing within 30 to 60 days, you're pretty much wasting your time. That's like hiring an employee working for you, or let's say you don't even own a business. Let's say you're working for a company and the guy's sitting there for 2 months and literally has not done anything for the company. You think the company is going to keep paying him? No, it's time to move on. So as a trader, I'm just going to let you guys know this. Learning how to trade does not take that long, and you should catch on right away. You know what I mean? And it also, even though you might like a certain futures or forex or options, maybe meaning somebody's making it more complicated for you. Okay? I didn't charge you a single cent, a penny, and I'm teaching you the basic strategy of what day trading is all about. And to answer one of the other questions up here, does this work for S&P futures? Honestly, I'm just telling you personally, I don't trade S&P futures. Why? Why should I? I'd rather trade, HAL and short it at 24.50 and buy it back at 24 and make a day 50 cents on 1,000 shares, 500 a day, $100,000 salary. Why you have to trade the S&P futures? Why? Because the S&P futures. Oh, the S&P futures. You got to trade the S&P futures. Trade the S&P futures. Hey, you see what happened to Tesla today? You see, that is the bad part about trading. When you trade, you're not supposed to trade something because you know the company. You trade it to make money. You understand? It's like you're in the real estate business. What's the most important thing about buying real estate? Location, location, location. You think I'm going to buy a house? Like, oh, but it's such a nice house. I would love to live there. You're not living there. You're buying it to make money. That's what it's all about. Now, I call these things iceberg orders. I came up with that word about 20 years ago after watching the movie The Titanic. Very sad movie, if you haven't seen it. But anyway, it's not what's on top of the water. It's what's on the bottom of the water. Everybody's always concerned about the beauty and the scenery and the ambiance. But if you don't have the right radar, I don't care what you have, you're going to sink and die. And that's why trading is so dangerous. Because if you don't have the right mentor, if you don't have the right training, you don't have the right tools, how do you expect to be competitive? It doesn't work that way. Remember, fellow traders, you're right now in one of the greatest businesses in the industry. Actually, even Jeff, the presenter, will tell you that. I mean, like with COVID and people staying home, I'm so sick of talking about COVID anymore. It's like every time I hear COVID, I feel like it's someone using it now as an excuse. You know what I mean? I get it, but you know what? There's no excuse to this. People are working from home. You know what I mean? And it's not really a bad thing. But what's great about doing that when you can trade? I got so many people that wanted to learn and trade the market, but they couldn't because their company would not allow them in their offices. And now they could. How many of you are like that person? Or how about this? How many of you here are starting to come to retirement, or you're retired? And now you have your IRA. Think you want to give it to some mutual fund guy to show you 5% if you're lucky? And even when you lose his money, he makes money on you? You can do it yourself. What do you need him for? No one's going to do a better job than you trading yourself. No one's going to care about your money better than you. Okay, so why not do it right? But you got to surround yourself with great traders. Let's talk about the fake orders, okay? Because I don't want to take up too much time. I know it's been a long day for a lot of you. People come up to me all the time. He says, Fausto, how do I know these are real? You want to know how they're real? When you come in my trading room, I'll find a couple orders for you like that, and we'll see if they're fake or not. Now, can somebody cancel an order? Of course they could cancel an order. Anybody can cancel an order. But let me tell you what is very important in trading today. Something called time and sales. I don't know if anybody here uses it. A lot of people don't. The reason why is they're probably looking at something that's too fast, or pretty much you got your defaults wrong, you know. But anyway, here you have an example of a stock that had, you know, a resistance level at $12. You had 26,000 shares, 44 orders out there. I mean, that's about 10 to 20 times more than the average order that's out there. But eventually, you could see it went past $12. Why did it pass 12? It's like almost opposite what I was teaching you. Well, guess what? Somebody wanted to buy it. Oh, yeah. And that could happen, by the way, fellow traders. You ever see, I will show you orders in the market, 500,000 share orders, like, oh my God, this is definitely a resistance level. No way someone's going to go through that. And sure enough, somebody bought it. What do you think a short squeeze is? You ever hear those before? I mean, I just heard my good friend Price talking just before me, and you guys were talking a little about GameStop. GameStop, we trade things like that almost every day. Well, maybe not every day, maybe like every other day. Okay. But I mean, like, are you serious? Come on, ladies and gentlemen. There's so many of them out there. You just have to follow the money. And if you see those orders get done, somebody will buy them. And what do you think happens? Boom, you get a rally. Stock goes up to $13, $14 in a blink of an eye. And that causes a big buying frenzy. And how does that all start? By reading the tape and following the money, because that's what I teach my traders. Read the tape. I'm a tape reader. I don't know how many times anybody ever met a tape reader before, but nothing really has changed. And you get a lot of these tools with the MetaStock platform. But a lot of people don't like using them because the question is, they don't have the defaults right, you know, you've got different styles, you know, everybody's got a different layout that's better than the others to traders. Now, I heard of level 4. Okay, now let me talk about level 4 really quick. And this is going to really blow your socks off. If you think level 3, what I showed you is good, wait till you see level 4. Level 4, ladies and gentlemen, is an unbelievable platform. And it's basically, I'm going to show you orders, how long they've been out there for, and are they refreshing? You know, are they consolidating orders? Just everything that comes along with it. It's just more of it's basically giving you, I don't know, maybe another 20 to 50 times more data than level 3 does. You can aggregate more ECNs out there and everything. So there's so much more out there, but I'm not here to kind of like confuse all of everyone here. I'm trying to keep it very simple, but my goal is this. I don't know how many of you here ever really officially met a professional day trader. Like myself, one of the original So's Bandits that started, but nothing really has changed. The only when I started till today is ticket charges got cheap, platforms got cheaper, and got better and faster. That's it. Technology got better. Webinars, you know, everything. So, bottom line is this, ladies and gentlemen. Don't be confused, okay? It's just a game. And you just got to know how to play the game. And when it comes down to it, it's more of just keeping things simple, you know? The KISS method, keep it super simple. You got to make things complicated. Here, let me give you an example. 1,000 shares, 50 cents. 50 lousy little stinking cents. 50 cents. That's all you got to make. $500 a day. $100,000 a year salary. We see stocks go up $3, $10, $50, 50 cents. You ever try to do that? Be like, nah, what the hell's 50 cents? 50 cents on 1,000 shares is a lot of money. And you know what? You don't got to buy it at 12 or 13. You could buy it at 14, sell it to 14.50. So what? It went to 17, 18. Who cares? But when you're dealing with traders that you're trading with all day long, that's what makes things easier. So listen, ladies and gentlemen, let me get to the end because I want to give you guys the opportunity to come and register and come meet me at Cyber Trade University. So listen, every single one of you, from the bottom of my heart, and Jeff, I know works really hard to get this event working. Every one of you need to learn and meet mentors, and you're going to need more than one. Because you know what? It's like school. I didn't have the same kindergarten teacher from 1st to 12th grade, but I did go to school, and I know you guys did too. But some people here didn't go to school to learn how to trade. And some of you here didn't take the opportunity to learn from different people. This right now, what you're doing is an interview, okay? And you can't teach people how to trade in an hour. I'm sorry, you can't. But what we can do is get you interested. So everybody is going to need to sample a little bit of everyone's stuff here. And then you'll realize what trading, what a great job it is. You spend more time with your family. You do the things you want to do in life. I mean, after seeing what's going on with COVID and stuff like that, I mean, listen, I'm on vacation right now. I don't have to do this, but because I love talking to the MetaStock traders, you guys, you are some of my best traders in the market. Believe it or not, some of my best. Because you got the right platform. You made the investment in your trading. You know, I honestly, I can't tolerate people that want free stuff. You can't make money. Listen, my parents, my father told me, he says, son, you don't want anything for free. You just want a good deal. If it's for free, it's not for me because obviously there's a catch. And you guys made that investment. And that's why I love being here. And I take the opportunity out of my day because I'm looking to recruit traders like you so I can train you so we can make money together. Because the way I work, fellow traders, when I don't hold anyone hostage. You know, most of my traders graduate. You know, they end up starting their own schools and their own trading rooms. I mean, there's several of them out right now that are my students that are run schools today, which is great. It's flattering, you know. So, listen, Cyber Trade University has been endorsed by more brokerage firms than anyone in the industry. Okay, and this is what I'm asking for. I'm asking for all of you to come join my trading room. Come join my trading room. And this is the original trading room I came in. And I want to show you this live in the market. And by the way, I don't want you to look at me. I don't want you to judge me on my winners. I want you to judge us on my traders' losers. I want you to come in the trading room and just watch. Just watch how we use the platform, the MetaStock platforms, the level 3, the level 4. See, I'm going to talk about pre-market trading, after-market trading. We do live commentary, and we're very transparent. We'll show you everything. We'll show you the orders. We'll show you the trades, you know, and see the real truth. So don't be scared. The worst thing that could happen is you find out it's not for you. Now, all I'm asking for is a simple donation, which I call is $9. It's an application fee. And this is what you're going to get. You're going to be able to talk to an education advisor at Cyber Trade University, 3 daily market meetings, a morning and afternoon watch list, a crash course on trading. This is all for $9, okay? Now, why do I do for $9? Like I told you, I know everybody here would register for free. I'm not looking for people that want things for free because obviously it's not for you then, okay? Nothing in trading is free, okay? It's a lot of work to train somebody. It does cost money to teach somebody. You wouldn't want me to work for free. I wouldn't expect you to do the same. But listen, if you make this opportunity and you come and join us, in midweek, I will actually give 20 of you here a free coaching session with me. And I will basically discuss with you and decide if trading's for you or not. Because, you know, here at Cyber Trade University, there's a reason why I have a 5-star rating on Google. Because 95% of the people we turn away that we don't train. Not that we don't want to train you. It's just like, listen, it's not for everybody, you know. And there's no way you're going to know about it unless you get into the room. All right. That link that you guys are asking for, let me just bring this up for you and show you. Sorry, I shared my screen with you though. Let me just bring this up and show you where to register. And then I want to answer some questions. I got about 10 minutes or something like that. Just give you this link right here. Sorry about that. Take away the time. Copy. And let me see if I have to paste it. I'm just trying to paste this in there for you. And is that it? Yeah. Is that to everybody? Yeah, I think that's everybody. All right. Now, does anyone have any questions that I can answer? Only CME offers level 4 info, right? No, that's completely false, Daniel. I don't know who taught you that, but that's completely false. Absolutely not. Are these subscription monthly or one time specifically? Well, listen, if you want to continue after a month, Ash, you know, after the first week, it's $149 a month. If you don't want to, don't worry about it. I'm not going to, you know, I'm not going to argue with you. Listen, the goal is I'm looking to train people that could be in the room, learn how to help me find some stocks, look for these iceberg orders because there's really no platform out there. I actually worked with Jeff a few times trying to build it. It's very, very complicated, you know, to find iceberg orders. You kind of have to do it manually. That's why they still have human beings on the floor of the exchange. As much as you see all this algorithm stuff that goes on, guys like us, we're just trying to get the ants. We'd like the ants on the floor, just getting the crumbs. All right. Any other questions that I can answer? When can you start? Basically, in a nutshell, I recommend you to do is start on, you know, start tomorrow. What are you waiting for? It's like today we had a great day with Mara. You know, that was pretty cool. Last week we had TCAT, JFIN. That was awesome. Pot stocks really didn't go anywhere that much. We had a few other good brand name stocks that went up. DraftKings, a couple of good shorts out there, stuff like that. I don't understand your discussion of the stock that skyrocketed up in the huge sell order, saying using time and sales to confirm. Well, Eric, you have to understand something that, and then let me repeat that. And please, Eric, I only have a short period of time to kind of go in detail with you on this. But I mean, like what I showed you, if you come in my room, I'll show you to this live. Remember, what makes support and resistance levels are buyers and sellers, right? And if you see those buyers and sellers, in theory, that would be a support and a resistance level. But those buyers and sellers, time to time, get executed. And if they do, that can cause a big buying frenzy or a big selling frenzy. It could be a short squeeze. It could be someone averaging down, but you need to see it live. But the end of the day is this. Do you believe that there are orders out there of big buyers and sellers? Let me show you. So your program shows whether the big sellers to drive the picture higher price. Yes, Dean, exactly. My program is going to show you exactly where the big buyers and sellers are because that's how I was trained on Wall Street. That's how market makers train. Daniel, yes. I mean, that is one of the platforms I do use, but I call it more the level 4 platform. Does this work for Forex? Dean, I don't trade Forex, so you have to ask a Forex instructor. One big, very important thing I always tell everybody, you can't be the jack of all trades, you know. So, you know, you had a bunch of great people here speaking. I would ask them, are we trading low flow volume stock? No, absolutely not, Tom. Tom, I don't trade penny stocks. I don't trade bulletin board stocks because I have nothing against them. It's just that you can't see the orders. All right. And, you know, everyone has a style behind it, but everything I trade has very good volume. Actually, what I teach my traders is something called the 3 T's, tradable, trend, and trap. So the first T is tradable. You need to know what the spread is, the volume, you know, tier sizes. Remember, you don't make any money until you sell the stock. Okay, so Tom, before we buy it, I always look at What am I losing? What happens if I'm wrong? What do you need to do? You got to make sure there are people out there that if you have to get out of the position, that there are buyers out there. So absolutely not. It's one of the most, that's about 50% of the failure rate in today's. And by the way, like I said, you'll see this live in the trading room. Any other questions?
I have a couple.
So I would say, like, listen, it's fresh in your mind. You got a lot of great presenters here. Try a little bit of everything. But if you like day trading and you want to see exactly what level 3 is and how I use the MetaStock platform with their, volume leaders, percentage gainers and losers, how we dissect them, here's your opportunity. And like I said, what is it called? It's $9. What could you possibly lose? Like I told you, it just tells us the $9 just tells us if you're a real person or not. That's all it is. How do you access level 4, Julian? Like I told you, I'm not going to tell you where to get it, how to buy it. You want to go figure out on your own? Great. Remember that warning sign in the front? Well, let me show you first. Let me show you how it works. You don't need a brokerage firm account. You don't need to open anything. You're just there to watch. That's it. You have nothing to lose. You're going to do an orientation. You're going to watch. That's it. You're more than welcome, Daniel. I really appreciate it. Thanks for coming. Just one last question, and I'm going to pass it over to Jeff. We have a question from Dean. Dean says, to follow up on your earlier question, once the big seller order are identified, does the program tell it if it's driving price up or down? We don't, well, technically, no. We don't know if the guy is short or long. We just know that the whole philosophy behind it is that if you see a big order out there, you can look at the past and say, hey, was that an order that was programmed to be out there, or is that a new order out there? But knowing what the guy's position is, nobody knows that. If you and I were in a bidding war for a house, you don't know what I'm really willing to pay. I mean, it doesn't work that way. But what does work is you just know that he's out there and he's existent, because it's not just one person; it's several people. Shisha, how do you cancel? Just send us an email, call us. That's all. We got people standing by right away. We listen. We don't need any bad publicity. Listen, I do education for some of the biggest brokerage firms in the industry. Last thing I need is, I got a AAA rating at the Better Business Bureau. Believe me, I don't need your $9. Let me put it that way. You know what I do need? I need qualified, passionate traders that want to make money in the market, that are willing to learn. That's what I'm looking for. All right. So with that said, listen, Jeff, thank you so much for having me again. I love talking to your staff and your audience here. You always get the greatest audience here. They're always, and it's like I said, they're some of my best traders. That's one of the reasons why I love coming back. And with all the people that you have here that are presenting, I just hope everyone here really does take advantage of it. And with all COVID, I missed you last year at our event. I look forward to seeing you again. Hopefully everything's going well with the staff and everything out there. But thank you so much for having me, Jeff. And everyone here, enjoy the rest of MetaStock. They have a great platform, great audience. And just always remember, you got to learn before you earn. All right? Thank you so much, everyone. Enjoy the rest of the presentations.
All right, Fausto. One question for you, though. Or not. Or not. Okay. No problem. Thanks, Fausto. We appreciate you coming in today. Let's go ahead and do this. And he does a really, really good job. Gregory, if you're available, I have a question for you. Otherwise, all right. Can you give me a number between 1 and, let's say, 10,044? Okay, 42. All right. So, ladies, thank you very much, Mr. Lewis. We're going to figure out who that is. We're going to give away a prize right now. So you just have to be registered to win. If you haven't registered, YouTube, Mr. Lewis is actually going to put the link up, and we'll be in for all of tomorrow's drawings as well. But number 42 is a very low number. Let me get to the top of this spreadsheet real quick. The winner of the next prize is we need to put some drum rolls in. Rich. And let me see. I don't want to give out a last name here. I actually don't have. We'll call him Rich S because he didn't provide a state when he registered. So Rich S, I'm going to reach out to you. I'm going to send you some information. You've won our prize. The prize that you've won is 6 months access to MetaStock, as well as our premium Zenith data feed. So with the MetaStock program, you're going to get all of the scanning, the testing, the ability to look at all of the stocks that you want. You'll get information that's real-time and powered from Zenith, which is our real-time data feed powered by Refinitiv data. The Refinitiv data. It also offers access to all kinds of news and coverage. It's really very much the same information that banks and hedge funds subscribe to. The package price of this 6 months is worth $1,500. I'll email you. We'll go ahead and get you set up. We're going to need to get like an address from you and some information just to confirm you're non-pro. But I will get in touch with you and we can kind of get you set up that way. For the rest of you, I do want to say thank you to Stocks and Commodities again for sponsoring today's event. It's been a great event. We got 2 more days to go, so I hope you enjoyed it. I hope you're back here tomorrow. One of the other bonuses is, in addition to being eligible for my drawing that we'll be doing multiple times tomorrow, you'll also be able to get, yes? Oh, well, I appreciate that. Yes. And I only jumped a little, so don't worry. All right, let's go ahead and turn this over. Okay. One of the advantages that you're going to get if you register for the class, if you're watching on YouTube, is you'll be able to get a free subscription as well as be entered into the drawings. If you want to pick up MetaStock, we are going to do a special. If you subscribe for your first month, we'll give you your second and your third month for free. MetaStock's been great. It's a great company to work for. It's a great product. It's actually won Stocks and Commodities Reader's Choice Awards for 28 years in a row. You can do that by going to metastock.com/traders summit, traders-summit 3-for-1. You can give us a call at 800-882-3040 as well. And I do want you to also talk a little bit one more time about our premium day on Thursday. We're going to have Steve Bigalow, Jeff Tompkins, and Vince Vora. They're all going to sit down and give us a paid class. Normally, we're only charging about $150 a session. It's 90-minute sessions each, so it'll take a good half of the day to get through it all, and it's going to be great. The last time we did this, it was awesome. So I'd encourage you to subscribe to it. The conference pricing is $450. You can sign up for that at 800-882-3040 or via metastock.com/saleschat. So with that being said, I hope you enjoyed today. We had a lot of people all day today. We hope to see you again tomorrow. What a great event. We're gonna have a lot of really good speakers tomorrow as well. I hope to see you there. Stay healthy, stay safe, and we'll see you in the morning.